Good morning, everyone. Thank you so much for joining us. My name is Greg Lewis. I'm the marketing manager for Metastock, and you are 2 minutes away from day 5 of the Spring 2024 Metastock Traders Conference, brought to you by Metastock, TechnoTrader, CMT Association, and Technical Analysis of Stocks and Commodities. A couple things before we begin. If you have not yet registered for this event, that's okay. You can still watch it here on YouTube. However, you won't be eligible for the little door prizes that Jeff gives away between sessions. And if you are registered, we'll also send you recordings of this session. So if you haven't registered, just go to metastock.com, and there's a big old, well, actually I pinned it on the top of this YouTube chat. But also, if you just go to metastock.com and press the banner at the top, it'll take you right to that page, and you can register for this event. Also, we do encourage you to participate. Please ask questions and get involved and be part of the conversation and make comments. And you don't have to be particularly nice, but we do ask. Well, actually, you do need to be nice. Don't be mean, but be you be you. Just be respectful. And also, please do like and subscribe and ring that bell. When you do, you'll be notified of live events just like this, and we have them quite frequently, and you don't want to miss any. Okay, we've got about 30 seconds, so I'm going to let you listen to some jazzy music while I make sure that Jeff is ready to go on the other side. Thank you so much for joining us again today, and successful trading.
Hey everybody, Jeff Gibby, Metastock. Welcome to day 5 of the May Traders Conference. I hope you're doing well. I want to point out that this is Memorial Day weekend. I hope you have a really good weekend. I want to thank everybody that served and all that kind of good stuff. So welcome to the event. It's good to have you. It's good to see you again. I hope you're excited about another great day, because we do have another great day lined up. So let's start as we always do, and we'll make sure that our attorneys are happy. Today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock and its employees shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. Metastock and its employees do not endorse the purchase of any security, nor are they paid for the promotion of any security. No information contained in this presentation should be construed as investment advice or the solicitation to buy a security. We do like to go look at stocks and kind of give our opinion about stocks. But the main purpose, the reason we get everybody together, is we like to talk about how we trade and give you some different ideas for trading. The thing that I like a lot about trading is you can kind of paper trade, you can limit your risk, you can take small position sizes. And the only really advice that I have for you is do a lot of paper trading. Make sure you're managing your money. Make sure you're managing your position size. There's old traders and there's bull traders. So we've had a great week so far. We've had a lot of really good speakers, and I appreciate all of them. And thank you for being here too. Let me go ahead and say thank you to our sponsors. I want to say thank you to Stocks and Commodities Magazine. You can find out about stocks and commodities at www.traders.com, and they do a great job. They've been supporting us all along, so thank you for that. Also, I want to say thank you to the CMT Association. You can find out a little bit more about them at the cmtassociation.org. On Thursday, I think it was, or maybe it was Wednesday. We had Tyler speak on Wednesday and Thursday, but on Wednesday he came in and he talked about, some of the things that might be beneficial if you want to work for a bank, or if you already work for a bank and want more assets under management. It's a great nonprofit, great organization, great reputation. CMTassociation.org. Putting it right there in the chat for you. Also want to say thank you to TechnoTrader. I'm going to do something real quick here. Hold on just a second. That wasn't intentional. TechnoTrader has been a partner of Metastock for a number of years. They have a number of free courses that you can sign up for. They call them mini courses, and you should go check them out. Just as be part of the conference, you can get signed up for them. Man, I got something in my throat. So let me go ahead and copy this link. There we go. Got it. Okay. Let me go back to the slideshow. I'll put that in the notepad so I can do it a little bit more gracefully next time. Of course, we are Metastock. We've been rated #1 for 31 years in a row. Have all kinds of specials. You can get those at metastock.com/conf promo. And I'll put that in the chat as well. Good morning, Neil. Good morning, Bobs. As you come in, make sure you say hi. If you're on YouTube, make sure to like and subscribe. It helps a great deal. We're trying to get to 80,000 subscribers. We need a couple more thousand. So anyway, our first guest today wrote this book, Adrian Manz, around the Traders Guide to Consistently Scoring in the Markets Around the Horn. It's a great book. We gave away a few copies, but very, very detailed in terms of his instruction. Been trading for a number of years. Very, very good technician and tactician. Let's go ahead and get you started, Adrian. Adrian, how you doing?
I'm great, and happy to be here again. It's wonderful.
I can hear you now, and then I just made you the presenter, so I should have popped up a note saying share your screen.
Yep. Let me just...
Perfect.
All right.
I can see your screen. I can hear you.
Okay. And is the
that means it's my turn to get out of the way. Your turn. Go.
All right, folks. So as Jeff said, we've been partners with Metastock for a long time. Now, did I just lose the presentation and go completely camera? I hope not. But
everything looks good, Adrian. I can see the presentation.
Something switched on my end. That's all. Okay, so here I am. All right, confused as always. We're using our television gear because we've got a show that we do, and Julie and I, and the webcam didn't work, so we decided we're just going to run this stuff, and for better or for worse, I've got to run it myself. So we're going to see how that goes. It's always interesting. But today, I'm going to do something a little different. So usually when I do these Metastock things, which I love doing, it's all about the around the horn patterns and all the great stuff that Jeff worked with me, 20 years ago almost, programming up all of the around the horn pattern scans for Metastock. Metastock does a great job. So it'll go right through that, the list of patterns in the book. It picks them off, it goes through, and it scans the entire market. Takes about 40 minutes, I'm going to say, to do all of the scans and get everything sorted. And then you've got a list of stocks, that you can go through and sort of whittle down to what you want to trade tomorrow. And, we do all of that every day. And a lot of times when we do these presentations, we'll talk about like the fastball strategy or the line drive or the infield fly. Those are expansion of range and volume, a gap and go with an expansion component, an extension reversal. Right? These things are all patterns that that we trade. That I've done a lot of stuff here in this space over the years. So what I want to do today was talk about something that piqued everybody's interest last time, because a lot of we were here and I talked about the importance of workflow and understanding, workflow and how it impacts your psychology. And surprisingly, I got a lot of questions about it. You can always ask me questions. It's just Adrian at traderinsight.com, ADRIAN at traderinsight.com. Those questions led me to say, I'm going to do one about my time biases. I used to run a hedge fund with it was a guy named Art Collins I worked with. Many of you may know he's a futures trader, was a very well-known futures trader. And he was all about biases and incorporating biases into your trading, time of day bias, day of week bias, day of month bias. He's written a bunch of great books on that stuff. I highly recommend it. It's called Beating the Financial Futures Markets. He's a very smart guy, very interesting guy. And it overlaps with a lot of what Julie and I do. So, we started trading online as soon as online trading was a thing. So as soon as there was an online trading component, as soon as it went away from, we started early enough, we were making calls. So we were calling down to, Phil at the New York Stock Exchange to make trades at one point because it was pretty much the same price as what you're going to do online at that time. The commissions early on were, I think we were paying $40 a side for direct access execution. But, we were in grad school when we started doing this stuff. So we did lots and lots of research and we were pulling data. So we pulled all this data that we could from the New York Stock Exchange. We were down there as much as we could be. We've had an ongoing relationship with the folks there. It's been fantastic. And what we learned when we were crunching the numbers was there's predictable patterns that are related to human psychology. We both have PhDs in psychology, organizational psychology, right? So it's not about how people behave individually. It's about how people behave in organizations, how people behave in groups. What happens in groups. Behavioral finance is really sort of the background that we're coming from. Also have MBAs, and when I was finishing graduate school, my member Peter Drucker. So for those of you who are, I guess Gibby was saying as young, there's old traders and aggressive traders or something. I guess unfortunately at this point I'm an old trader, been doing this for since 1997. But Peter Drucker at that time said to me, when you graduate this thing, instead of going to work for an investment bank, instead of going to work for McKinsey and Company or something like that, you and Julie already have a profitable trading business. Why don't you run with it? So we did, and our background is really, or at that time was really education. We were thinking about going into university professorships, as you do when you get a PhD, and we thought we'd work for 10 years and then we could teach. Instead, what we did was we kept doing this forever now, it seems. We've written a bunch of articles. We've written a bunch of, the closest things to journals that there are in, or academic journals in trading. We submit as often as we can to those things and try to sort of keep our research out in front of people. And what we've also managed to put together is a great educational program. So we do this thing where we go in and we teach people how to trade. We do small groups. So Trader Insight has been around a long time. 1999, we started, right? We wanted a place to publish our educational materials, and we also wanted a place to do education. And I'm realizing recently that, 30 years later, it's become an overnight success. So we've got these boot camp things that we do. We keep everything small. We're a small company. We don't look to do giant events. We're not looking to pull millions of dollars out of education. We trade. That's what we do primarily. And then we like to teach people how to trade, and we like to focus on the psychology. So we're coming up on one of our boot camps. It's we do 20 people at these things, and only 20 people, and we do them twice a year. This one's totally sold out. It's in a week, and what I want to say about it is, if you look at those photos there of the people at the various boot camps over the last 5 or 6 years, we've been doing these for 10 years now. As you go around the room, what you're going to see is there's attorneys, there's farmers, there's a guy who owned a plumbing equipment company, there's a fellow who's a cop, there's a guy who owns a ranch down in Texas, there is a person who has a chemical company or was a chemical company owner. There's a fellow who's a biomedical engineer and still is. He does this sort of back and forth column. He's down in Miami Beach. We do him in Miami Beach so that we're in the right time zone. Because here, we're out in Malibu, California, and I can tell you when we do them here, people are not thrilled to start a seminar at 5:30 in the morning. But if you go around that room, right, what you get are a lot of psychologies, a lot of predispositions about, what this thing is, what's trading going to be when I do it. Am I going to be able to manage this like a business? I don't want to be a gunslinger. I think there's too much decision making on the fly. And over the years, what we've done is tailored trading much, much more to workflow. So it has to run like a business, and it has to sort of move around the horn over the course of the day. And that was really, the analogy for the book, right, Around the Horn, A Trader's Guide to Consistently Scoring the Markets. That was a bestseller, number one on Amazon in the category of stock trading for the better part of 2 years. And it was, it's written around a baseball analogy because originally it was called a multivariate analysis of covariance of the United States equities markets, right? That was the academic version of it. And then I went and realized my publisher realized, I didn't realize, my publisher said, you need to change this thing. You need to make it more of an analogy, get a metaphorical kind of a twist on it, because nobody wants to read about statistics all day long. And I agree. So we changed things to this analogy of baseball, right? Because I love baseball. We're big Dodgers fans, go Dodgers. And what the book does is it follows market cycles. So it's this idea of cyclical patterns in the market. And this is what's nice about the way that Metastock scans for this, is you can go and put together for yourself every day sort of a composite picture by running the scans of where a certain sector is in the market cycle. So if a lot of things are doing fastball setups, there's an expansion of range, expansion of volume setups, then you know that you're coming out of an accumulation range and you're either in a markup for a fastball long or a markdown for a fastball short. And then you know exactly what the other patterns are that you're going to expect to see as time goes on. So you know what comes in on the heels of a fastball setup. Usually comes a switch hitter setup, which is a sort of a fib pullback. On the heels of that usually comes a line drive setup. And you know how to follow the progression of what's going to happen in the markets. And you also know exactly how to get ready sector by sector for what's happening. The two sectors I avoid, generally speaking, are banking and oils. I don't like the geopolitical stuff that goes along with them. But other than that, pretty much everything's fair game. We spend a lot of time on consumer stuff, consumer cyclicals, Harley, Polaris, the retailers, the luxury retailers, everything from Tiffany all the way down to Walmart. I'm looking at. And the rest of those books are different variations on Beat the Street and Trade Secrets. They're on the right. Those are international versions of Around the Horn and Trade Secrets, and World Cup Trading is the Italian version of what we're doing. So it's not that I'm just writing books some people have so many books on, well, when do you have time to trade? But these are the core of our business. Nothing really has changed in what we do since I wrote that book. So everything that we do is still encompassed in that Metastock add-on. So if you guys have it, a couple of people, will ask all the time, well, are there new modules that I should be looking for? And sadly, probably for the folks at Metastock, there aren't, right? Because that's our trading business. It covers the market cycle and it focuses attention on the way that we structure our business. So just before we get into it, you can see here that this is pretty much set up to work through a pattern of workflow over the course of the day. So again, let's go back to those people's psychology, right? They come to the boot camp, and what they want to know is, I'm a physician, and when I go to the office in the morning, I know exactly, I'm going to go to the hospital, I'm going to do rounds, I'm going to go to the office, I'm going to meet the patients, I'm going to do. People know sort of how their day's structured. And a lot of times for traders, there is no structure. So this is one of the first things that we focus on is you're going to divide up the day. And so we've got NYSE program trades, we've got NASDAQ program trades, we've got opening gap reversion trades, and then we have order flow trades that we do over the course of the session. And they really kind of amount to this. So you've got a day that's very, very structured. And what we're doing is in the pre-market, we're loading up our the program trades for the day, right? Those around the horn trades, the ones that you scan for, the ones that you flip through charts and you find that correspond to the stuff that we did in the book, right? Those original cyclical pattern trades. Those are programmed ahead of time. There's nothing to do with those during the trading day, because once they're loaded, it's a set it and forget it kind of a setup. You're just waiting for the machine, right? Lots of machines. You're waiting for the machine to go, place the orders, take care of the trades. It's just a matter of making sure at the end of the day that everything turned out flat, right? That you got out of everything, that all the positions are closed. We close out everything at the end of the day. Most of the former floor traders out there, right? You do the same thing. You're not really holding positions overnight. You're trading order flow. You're looking for the order flow intraday. There's very little benefit in holding over for the types of patterns that we're looking at. Then, when we get to just before the opening bell, we're doing something with an Apple trade that I'm going to show you in a second here. It's almost every single day. It's a sort of an arbitrage against what market makers are doing. And 5 minutes into the market, we focus on opening gaps for about a half an hour. And then after that half hour, I take a break. I sort of get my head in the right place. And then after we get back, what I'm doing is setting up these trades in like the Magnificent Seven stocks. We're doing order flow trading. We're doing sort of volatility band trading. I've got a, here's like a trading plan that I keep on my desk. I've got count sheets that are here all day long that guide me through exactly what I'm supposed to be doing, exactly where I think the order flow levels are going to trigger. And I can break this down into time periods, into a clock. And let me just show you, I mean, I'm not kidding here, the clock. So it's actually on the wall behind me, right? You can see it there mounted between above a bunch of signed baseballs. It's something that actually structures our day and keeps us focused on what is it that we're going to do next, and where are we going to put our attention. So it's not a prop in this presentation. It's actually what we do. 9:25 in the morning, I'm looking at Apple. So Apple is up on the upper screen above me there, and it's sort of up. It's the next one up and a little bit out of reach, because I'm not interested in doing anything with Apple in that context after the opening bell. And what I'm looking at when I look at these Apple trades is I want to go through, and I'm looking at the pre-market. So if you're a market maker, if any of you are options market makers in particular, then you know that after the opening bell, you need to do a little bit of hedging. And this goes and capitalizes on that hedging. This is one of the things that we do. Boot camp is, we go through and teach these guys what it is that we're looking for. So we're looking at the order flow, and we're trying to find major pullbacks in what's a pre-market uptrend. This is really just a pattern that we execute against an uptrending pre-market. And over the course of sort of the 5 minutes really, but I'm looking back. So I'm looking back probably 20 minutes, 30 minutes. Pre-market goes all the way back to 4 in the morning, right? Those little hash marks don't tell you much, but the trending moves in the pre-market do. And we look at the swing highs, we look at the swing lows, and then I'm looking, once the market opens, to trade into a first pullback to a major support level from the pre-market, because I know that that's where, like my friends at Trading Block, or market makers in Chicago on the options exchange, are going to start hedging against positions, because they're kind of taking bets, right? Options market makers are trying to stay neutral. And part of staying neutral is they're taking in stock to compensate for some of that order flow that was going on before the opening bell. And what we're looking for is just a move that's quick. We're not looking to grab everything that's available on the move. We're looking to get it into significant support or resistance, and sometimes into like a fib expansion, expansion target once the market opens. So, if you're looking at it here, you can see in the pre-market, you had this uptrending move, you had this downtrending move. Ignore those bars with the big, with the big tails. Those are stray ticks. Those are out of sequence prints, or they're this whole like dark pool and purple trades, irregulars, and all this kind of stuff that you can see. What it amounts to is just don't pay too much attention to it, because it doesn't mean anything for the analysis that we're doing. What we want to see here is the opportunity to go long right here based on what was happening in the pre-market, getting back to that major support on that last pullback. And then, right, we are just trying to figure out, if we're getting long from here, what's the most likely place that we're going to see an inflection, and how can we pull money out of the market right there? So this is a very reliable trade. It's got very, very high probabilities. And if you look at this fib expansion, you can see, do we capture the entire move to the upside? No. Most mornings you don't. And it's on the mornings where it moves $2 or something after your automation got you out that you're kicking yourself, but you shouldn't be, because really you had this thing planned, and you knew that when you had that pop on the open, the first red arrow, and then the move back down to that support and resistance line, right, that the next thing that was going to happen was you were going to get that lift off, and you're into that expansion. And if you look at that fib study, that's the actual one from a couple of days ago, you got out pretty close to that first swing high. You got out exactly at that first swing high, and you missed the rest of the move. But we don't care, because this is automated. You're not even looking at it when it goes off, because the next thing that you're doing in our parlance, right, in our trading business here, are the Baltimore chop 2 standard deviation opens. So these are gaps. They're gaps that happen based on a statistical process control. We are looking for the opportunity to, get into a trade based on the fact that we have moved 2 standard deviations in terms of volatility, and that volatility measure is valid right around the opening bell. I'll show you real quick how to calculate the 2ST in a second here. But effectively, right, what we're doing is we're taking a list from a scanner, and the scanner is on the site. I can show you, today's trades are, they're right here. So this morning we had DaVita, so DVA went from 138.11. Our target was down at 136.80, and it made the move. It went all the way down to 136.72. We had raw stores. We had a 142.62 entry down to 141.97. That one hit our target. It's all based on, the targets are based on a bunch of stuff, including volume by price. I'll go through that briefly in a second. We had Booz Allen Hamilton, BAH, that was 160.82 down to 162.82 down to 160.87. But you can sort of see over here on this screen, the workflow is organized, right? So I know exactly what I'm going to do at each period of trading day. Sorry about that. Of each period of the trading day, and when I'm looking at these screens, it's easy for me to go and segment my work. So I don't have all these screens up because I'm watching a million stocks. I have all these screens up because this stuff back here is for automated stuff. The stuff in the middle is for the next thing I'm going to talk about, for the volatility bands, and the stuff over on this screen and on Julie's terminal and all that. Everything has its place. So we keep the business super, super organized so that we know where it is that we have to look in order to guide what we're going to do next. So, if you look at these stocks, what we want is, we're going to focus on earnings-related gaps. Earnings-related gaps are the ones that have the highest probability of a mean reversion. We're going to fade them. So, but we're not looking for a move back into yesterday's close or into yesterday's range. What we're looking for is a move into a volume by price area that's identifiable on the chart. We're looking for a spot that we can identify as logical support or resistance from the morning, like an open, a close, high, a low, someplace that something significant happened. And when it's an earnings related gap, those things are easy to go and segment because it's not driven by news. It's driven by news that's overreacted to generally, right? Earnings, but it's not driven by a headline like a CFO resigning or CEO sitting in a jail cell somewhere. It's nothing shifting the workings of the company. It's just the stuff that is sort of regular business, and it's people reevaluating where stock should be. The market makers are opening the stock out of the market, trying to stay on the right side of the order flow. And what we're doing then is trying to get ourselves into position to fade effectively from about 2 standard deviations back to 1 standard deviation. You're going from a 95% probability of a reversion, and then you're getting down into the 60s and 50s by the time you're out, and that's all you care about. So again, you're looking to take the trade and put it together and make it work based on what you know about the markets and what you know about statistics, right? So 10 a.m. Eastern time, we're done with these. So 10 a.m., the distribution starts to skew. Today's data would have to be taken into account in order for a continued modeling of what you think the data should be. And the assumptions are just a normal distribution. Volatility data, I can tell you, is definitely normally distributed. True range, in this case, is a proxy for volatility. You can also use the implied volatility of the front month contract. It's just more work calculated. You can calculate these in Excel and figure out, if they're out 2SD, just port your data over to Excel on stocks that are gapping. And you're looking at, is volatility mean reverting? And I can tell you it is. And that's a normal distribution right there, that bell-shaped curve. You guys all remember this, right? Everybody had some kind of statistics in their life, whether it was in school or just reading it grudgingly to try to figure out what's going on in the world. Right in the middle is your mean. That's your arithmetic mean average. And if you go out 1 standard deviation from the mean, right, you've accounted for 68% roughly of the volatility. You got a 68% likelihood that you're going to make a move back toward the mean. If you go out 2 standard deviations, 95% probability that you're going to get a reversion. And in our case, right, the calculation for these is pretty simple. You're just plugging the true range data for the past 10 days, not average true range, for the last 10 days into this formula where you're summing all those true ranges minus the average of all those true ranges. You square the thing to get rid of a negative value. You divide it by n minus 1. So 10 is the look back period, 2 weeks. Subtract 1, that's something called degrees of freedom. Don't worry about it, just do it. Your software is going to do it for you. And when you divide it by n minus 1 and take the square root, right? Square root gets rid of the square. That's 1 standard deviation. And 1 standard deviation, right, in the case of this data that we're looking at, is 49 cents. Double that, 98 cents. Add that to your average, right? And what it gives you is double that number added to the average. That's how much the stock has to gap in the morning to qualify as a candidate for one of these reversals. And it just looks like this. This is just an idealized version. If these are 5-minute bars and you're looking at sort of a climb into the close of the prior session, now it gaps down, then we just follow down the highs. We just flip it for a short, right? Then we follow up the lows. But you follow them down, stair step, just like you would a garden variety pullback until you get to the deepest one. Once you find the deepest high in that morning gap, I'm looking to go long right above that 1, 2, 3 high, and I'm going to target something that happened earlier in the session. So usually what I'm targeting is the open of the first bar of trading, a place that we see a bunch of volume by price, and this is what it looks like. And there's a real one. This is just like the ones that I know you probably couldn't see. Hopefully you wrote down those symbols for today, so you can go take a look at them. If not, like I said, send me an email. I can tell you what they were. Here's your gap, and this is in PA&W, so that's Palo Alto Networks, and you're down on the session. And then in this case, I call it a flip top entry. It's a very shallow 1, 2, 3 kind of a thing. It doesn't actually go deep. We're going long above the high of the first bar of trading, and we're using a fib expansion to go and time where our exits would be. So we use fib stuff, we use sort of classical chart analysis, and we don't do really anything that's too proprietary. So it's, what we teach people is stuff they can take home and do without us, when they leave. So that's a big part of our goal. It's not to sell ongoing software support for the rest of my life. But you see it here. There was the gap down, then you had the entry and the pop higher, and it gets right up into that fib expansion. So you're getting into the 618 expansion of the morning move. So it would be of that first bar. The first bar is the one that the fib study there is drawn on. And we've got guys who do GAN stuff. GAN's very similar to fib on the fan, and you can see there too that the GAN fan goes and captures pretty much the same range of profitability for the morning, and that if you overlap them, as a matter of fact, it actually represents exactly the same profitability. So that's this move is just very, very predictable, and we know just what to expect from the market. And over the course of the morning, there's most of the days on these, we do a first hour trading room and a war room over the course of the day that used to be just for alumni. I think, we're starting to open it up to people who haven't been to the boot camp yet, I'm going to say, right? And people come in and manage to trade these things very reliably. You don't have to trade a ton of shares. You can do small share size and make a nice living doing just this, if that's what you're interested in, right? Just trade the opening gaps and leave. And that's fine. But what we like to do, again, is focus on what's going on sort of on our clock. So we're doing those trades, as I said, from the opening bell until about 10 a.m. Eastern time. If they're still open at 10 a.m., I'm going to sit here and work them, right? Work them through until the end of the day. But if we're done, we're done. So, and then I take a break after that. But when I look at my clock, right, I know there's a morning reversal. So the reversals that happen in the morning, so like that 9:50 to 10:10 a.m. reversal, it's really influenced by a lot of things. But primarily it's that opening volatility in the market it settles down. And once the opening volatility settles down, it's easier then to start looking at ranges and start looking at some of the other ways that we trade. So when you get into that first reversal, a lot of things that you see are economic reports come up right around then, right? So there's a lot of economic releases that happen right around at 10 a.m. Eastern time. And a lot of institutional trading patterns happen right there as the volatility dies down. And there's a heck of a lot of program trades that are tied to time. And if you look here, you can see this is kind of the type of a pattern that we're looking for right at that time of the day. And those will be sort of the last of the morning things that I'm looking for, because at 10:30, I head out. So 10:30 in the morning is my me time. And, I want to go, and really what I'm doing is I'm trying to get away from the desk. I'm trying to find balance, because very, very few traders have a lot of balance in their life. They get to the desk and they sit there all day. And I know guys who, if the market's open, they say if it's moving, they have to be there. They have to be trading into what's going on. I say you're going to be a much better trader, as Gibby said earlier, right? If you just take things a little more slowly and get in touch with your life. The early market is very different than the market over the course of the rest of the day. And if you're going at it from this vantage point of what it was like at the opening bell when volatility was at extreme and volatility was the thing that you were looking for, it gets really easy to get hacked in and out of trades and to get on the wrong side of positions. So what I do is, we're lucky enough that we live in a place that I can go hike on the beach. I can go and hike, and we live in a canyon right at the beach. I can go walk at the water. I can go and hike up in the hills. I'll go with our son Connor. We spend a lot of time together. because all the travel that we've done over the years, because we're portable, take trading on the road. Connor will go with me and just do all sorts of fun stuff, and Julie and Connor and I do things together. And Connor will fly a drone around, and we'll spend a half hour looking for the drone after it crashes somewhere. But we've got a really good balance of, we need to work the machine, and we need to just go and do something that gets us away from the machine. So I like to think about the morning, think through, what happened as the morning unfolded, and then sort of strategize for the afternoon. And when I'm putting together what I'm planning to do in the afternoon, it's based on, all right, so we know by the clock, right? We know what happened around the opening bell. We know what happened as we got into reversal periods. And then we were monitoring things like the QQQ, the spiders, diamonds, Qs, NQs, ES. We trade all that stuff as well. But I just like to sort of get to a place where I'm at peace with what happened in the morning. I know what the market was doing, and then I have an expectancy of, when I get back to the machine, how can I tie in to what's going on right now? And that's, I'm going to say, probably one of the biggest components to being a successful trader is just being able to walk away. So go do something else. Go do some yoga. Go take a couple runs on the slopes. Go do whatever, but figure out a way to give yourself some balance, right? Whether it's a hike or it's working out, go spend some time on a treadmill or an elliptical or something. All of that stuff gets you ready then, for what comes next. So that's sort of halftime for us. So halftime comes a little bit earlier than halftime. The next period that we look to trade is actually the period of increased volatility, but it's controlled volatility. So what happens at noon Eastern time, it's different. When we originally did our clock, that thing was very tied to exact times of day that things would happen. And things still happen around those times, but they're not as, it used to be that at lunchtime things got really illiquid and wild. Now it's a time that there's volatility, and we start to see narrowing price range because things are moving into programs. Right? If you go down to the floor of the exchange, my friend Jason used to be down at, he was in the Barclays booth, and he would just set up bands. He would set up volatility bands. I'm a buyer here, I'm a seller here, I'm a buyer here, I'm a seller here. Let the machine do it. He didn't have to work the machine. He was a specialist, and by that time, it wasn't really an open outcry market anymore. It was a pretty orderly market where a lot of stuff was coming in and handled by machines, and you can count on that. So what you can see over the course of the session is that those bands are a place that volatility is constrained, and it's very, very tradable. So I did a course that's actually part of our boot camp now. It's also available separately if you guys are interested in it. But it's just going and focusing on trading the Magnificent Seven. Actually, it's more about trading the Magnificent Eight, because I've also got Netflix on my roster. But everybody knows what the Mag 7 stocks are. And that is from 11:30 in the morning until 4 in the afternoon. So if you've ever watched my broadcast during the day, and you're looking at the charts and the technicals and all that stuff that I'm going over live, you can get it live stream as well. It's just you shoot us an email. I'll send you the instructions on how to get the live stream. It's just a matter of giving us a phone number that we can text to. And then it'll send you a text when I'm about to go live, and it'll say, Adrian's about to analyze what he did in the morning and what he's got to do in the afternoon. Because in the afternoon, what I'm doing is shifting my attention to this block of time. So I'm back now, right? I'm back from my hike. I'm back from the beach. I'm back from working out at the gym, which I should do more of, because every time I look at myself, I'm like, well, how fat are you going to get? But it's this is the time of day that I can go, and you see those bands on the chart there, the levels that are identified, those threshold levels, and they're identified by more than what's just right here. I'll add some of the layers to the charts as we go on here. They focus on where were the significant highs and lows, where were the inflections, where are the repeated inflections in the order flow, because that's what that is, right? Support and resistance, just order flow. Somebody's a buyer here and a seller here. Buyer here, seller here, or vice versa. If you box up the order flow over the course of the session, what it gives you is, and this is where the psychology comes into play, right? You're going to miss the first one. You're going to miss the first time that things happen. So if you look in that box there, and you look at the, right around, noon Eastern time, we're getting a repeat performance of what happened at 10:35. So 10:35, you didn't get that trade. You weren't even there, right? You were out taking a walk. But when you come back, you're able to analyze the data without having to shoot from the hip. You come back, you're able to analyze the data and say, oh, right, here was a significant inflection. Not only was there a significant inflection there, but the 2 times that it inflected, it shot higher. And I can go and break down over the course of the day by the technical component of it, the support and resistance, and the other technical component like volume by price. I can go and break down, well, how much order flow can I expect there? Are there still orders sitting there? Is it likely that if price comes and touches that area again, that I'm going to get a good move, a tradable move that I can capitalize on? And you can see there that at the 12:05 mark, at the 13:05 mark, right, you've got the opportunity for some pretty significant profits. And then once again, when it gets up into the latter part of the day, right, 13:35, you start seeing support form. Well, you don't get the opportunity to go and capitalize on it until 14:05, and then again at 15:10. But who cares, right? You don't have to sit there like a machine just gunning off trades. You've got 8 of these stocks to pick from. And you know what? Something kind of is always happening. It's just a matter of scanning through them. I post all of these for the guys. I mean, it's not, they're not coming up rapid fire. I'll tell people, I tell the guys in the war room, if price comes back down and hits that line in the box, right? There's a different stuff. There's Amazon. If price comes back down and it hits that threshold level right there, I'm looking to go long, and I'm going to get out at the next level up. And I'm just going to program that trade up. I've got the bracket orders set up. I don't have to, it's not a matter of sitting there and saying, oh my God, am I going to get it? Is it going to hit the price? Am I going to miss it? I can't go get a cup of coffee. I can't do anything because it's coming. Program it up. You've got an identified entry. You've got an identified stop. You've got an identified target. You know exactly what you're supposed to do, why you're supposed to do it. And really, you tampering with it once it's set up isn't going to make this thing any better, right? If anything, it's going to take the odds out of your favor and put you in the position to have to make snap decisions, and snap decisions are not your friend. Trust me. If you look at Amazon, right, you can see you had the opportunity to profit anywhere here from 105 until about 130. And then at 130, you again had the opportunity for some profits until 220. And then the rest of the day, it was, it didn't really stay tightly within those bands. The order flow that was constraining price action was satisfied. So, when the buyers came in, the sellers were there to greet them. When it gets up here, they start selling into it. It gets up in the higher level of the band. They're selling into it. Then guess what? All of a sudden, after they buy into it, when the sellers are no longer there, the stock is free to start moving higher, and we move on and focus on something else. So in this case, now you're looking at Google, right? So the Google trade is going to be the same thing. Look at where you see that price is constrained by volatility. And the bands don't have to be exact. The bands are just giving you, you're going to make adjustments if the ladder. So here in this box, you can see the first inflection at the bottom was exactly where we expected it to be. It goes up, hits our target, you're gone. It goes up again, gets into another trading range, and the highs are lower than they were earlier in the session. We make the adjustment. You just make an adjustment as it's happening and say, well, you know what, my profit objective probably isn't going to be as wide. I'm going to look to take the smaller profit, focus on what's happening now. But the important thing is that the lower part of that range, the thing that you've identified as being the important support that you want to focus on, is still there. And, over the course of the session, like 125 to 135, we've got sort of this post-lunch trading that goes on. Now we're looking for institutional programs to start hitting the tape. We've got some economic stuff that usually comes out, the afternoon economic stuff, not as big of an impact on the markets, but still an impact that comes out right around that time frame. There's a lot of options and derivatives activity that influences the market right around then, and also the impact of the news, right, the morning news. So that tends to happen right around there. Those numbers aren't exact, but if you look at charts, frame them out in 5-minute increments. It's the time interval that I use and the time interval that we used when we developed the original notion of this clock. You'll see that this happens fairly consistently. So this is in Meta, right? It happens in just about all these Mag 7 stocks. Here's Meta. You come down, you get into the reversal period, and you get a pickup, and price starts moving in the other direction. What it does is gives you a really good compass as to, all right, I'm trading in whatever range right now. I'm focused on the highs, the lows. I'm trying to get tops and bottoms in these ranges and time my trades so that the automation can take care of it. And I look at the clock and I see, you don't really have to look, right? You're just thinking about the time of day. And you say, I'm coming up on a period that's likely to be a reversal. And if that reversal happens, what's the next range of price activity that I'm expecting it to move into, and how can I capitalize on that move? So that's the purpose of knowing where those reversal periods are. You can also use them as a way to just sort of stay out of trades for a while. Definitely, avoid taking something real directional in front of one of those reversal periods. But what it does give you is a good, Bernard Baruch said, Jesus, 100 and something years ago, I'm not that old. He said, successful speculation is the art of anticipating the anticipators. And, that's a great quote. Lots of people have quoted it over the years, but it really falls in line with these reversals. This is Microsoft. You're anticipating what's the reaction going to be when price makes a move lower based on, okay, we're coming into it's been a strong uptrend. We're coming into one of the reversal periods. What's likely to happen if that reversal gets down to that prior support line like it did? What's going to happen right there? Think about behavioral finance. Think about psychology. If you miss that move to the upside the first time around, there's a very high probability that if you get back to the threshold level that started that move to the upside, you're not going to want to miss out again. So a lot of traders are going to go and they're going to add size to that order flow. And when they start boxing up these trades, when they start putting these trades in here, and they're looking at the possibility of taking a long, you're not interested in whether or not it's going to go hit that high again. What you're interested in is it going to move to that next threshold level? Because that's the highest probability trade. And you can see there, you've got repeated opportunities then over the course of the session to make money in, which is not my favorite stock to trade. Microsoft is all right, but it's, it can really get boxed up a little bit too tight. But when the opportunity's there, again, this is one of 7 or 8 stocks on your screen. And, we're all talking about it during the day in the room, and, we're just saying, hey, heads up, coming into the bands. I'm sharing my screen. Everybody can see where I've got the bands set on my platform. If we're sharing those and everybody has the same data in front of them, we can give each other a heads up and say, you know what, coming into one of the levels, might want to think about putting on a trade here. And you're just looking at repeat performances. So when you see the reversals move into and respond to these inflections, right? What Julie and I are doing, we try to focus on the moves that were earlier in the volatility bands, and then we have an opportunity to react to each one of the subsequent sort of retouches of those same levels. Like here's NVIDIA. NVIDIA is one that I trade a lot, and you can see this one again just boxes up really nicely. So what do you do when you're trading a stock that's for now that's $1,000 a share? You downsize, right? Never adjust your stops, always adjust your share size to make the risk acceptable. So, you might be trading 1,000 shares of Tesla if it triggers, but then you might only trade 100 shares or 50 shares or, whatever of NVIDIA. NVIDIA moves, those moves are like $4 when it gets into those price ranges. And it gets really hard for people when they have a lot of shares to stay with the trade because, it starts dipping a little bit against you. It's not dipping a penny. It's dipping 20 cents, 50 cents, 70 cents sometimes. That's entirely manageable if you go drop the share size, look for the reactions at the threshold levels, and don't hop on momentum. Right? You're not looking to trade momentum. You're looking to trade predictable price ranges that repeat over the course of the session. And as we go on here, I'm going to run low on time. I think Gibby stole some of my time at the beginning. But, if you look at the ranges that occur in these stocks, here's Netflix. This one I like a lot too. I like to trade a lot as well. It's when you get into those price ranges, depending on where you are, I'll use pivot lines to figure out where we are. The floor trader pivots, you just plot those in your software. You're looking at those to figure out where are you relative to the fulcrum, to the central pivot, to what we predicted price was going to do based on yesterday's data. And if you're close, then you can go bi-directional on these trades. You can say, top of the channel, I'm going to short it. Bottom of the channel, I'm going to go long. If you're way out, right? If you're way out above R1, or you're out at like R2 even, and the thing's been trending up all day, you're not looking to short it. You're looking to go long from the pullbacks to those lines. So you have a real structured way of approaching all of this data over the course of the session. You just have a really good knowledge of where you think things are going to happen. So, look at Netflix here. There's a feature that I've been nagging Gibby and the company over there for years to add, and here it is, volume by price. Look how nicely the volume by price data goes and boxes up the volatility that you're looking for, and you can tell based on where that volume stack was earlier in the session and how it developed over the course of the session. You can determine where the best likely outcomes are going to be if price retests. When you see those giant spikes in volume by price forming over the course of the session, and they're narrowing a specific range of volatility down for you, that's going to be a great place to focus your energy when you're making these trades. So ins and outs there are reliable as all whatnot. You can just really look at these things and time them well if you layer the volume by price stuff on top of it. Then we've got, a late day reversal. I'm going to say this one is one to be careful about. This historically goes back to, the times that, the bond markets were really trading sort of out of sync with the rest of the market. The bond markets were all closing at different times, especially than the New York Stock Exchange. So things would get rebalanced from the bonds into the stocks. It's still, there's things that settle around that time that influence the market. There's oil closes for trading, and that has a big impact on the broader markets. Things tend to reverse right around this 3 to 3:10 period, and there's also a lot of margin calls here, and not necessarily margin calls because you're in losing positions. Margin calls due to volatility, right? It's just a lot of futures traders will have to reduce position size because the leverage that they're being offered is being reduced because of volatility. And stock traders may be getting forced out of positions because of volatility. There's a lot of things that happen, right around 3 o'clock that force the market in a strong move in the opposite direction. And again, you can capitalize on this stuff. So this is the triple Qs, right? So I'm looking triple Qs. I don't actually trade the QQQ. I trade the MQ as a proxy for the triple Q. I like to analyze the triple Q because the data works for me, right? It works the way a stock works. I've been looking at stocks practically all my life. So when I see a triple Q chart at an inflection point, I know how I want to translate that then into an NQ trade. Same thing holds for the spiders. I've got a lot of our guys trade spiders or trade the ES based on the SPY. That's great. Like I said, I don't like trading anything that contains oils and banks. I like focusing on tech and biotech, consumer, and a lot of the stuff that's a little bit more predictable and less impacted, less headline driven. All right. But if you look at these cues here, go look at charts based on these levels, these threshold levels on the clock. And clock's cheap. If you want one, they're 50 something bucks. Just go traderinsight.academy, I think is the store, traderinsight.academy, and you pick up a clock there. And they just drop ship them to you. The manufacturer drop ships them to you. But look at the things that I showed you today. Look at those levels and go and apply a bunch of 5-minute charts. And don't look at the first day that something didn't work. Got into the 3 p.m. reversal. Look at this, nothing happened. There's going to be plenty of days where nothing happens at the reversal periods. There's going to be a lot of days that you're looking at where you say, oh my God, look at this. This 125 to 135 reversal really happens. This thing really, if I'm trading intraday and I'm in a big directional trade, I probably want to start tightening stops and look at the possibility of getting out of it, because this is a time where I anticipate something really is going to happen based on look at charts. Just go through. If you trade, you should be looking at charts every day. You should be looking at lots of data to figure out what you think is going to happen. If you want to join us, we have the room is open Tuesday through Friday because there's no gaps really on Mondays. There's no earnings on Mondays. So we just don't open up on Mondays. I do a live stream on Monday talking about sort of what's going on in the afternoon. But we're in our room every day, Tuesday through Friday, all day, every day. No credit card or anything, right? You'll make your own decision. You come in, the decision needs to be, can I make money doing this stuff? If yes, then it's worth being part of it. And if no, I gotta look for something else. You gotta find something that fits your psychology. So just traderinsight.com/morning. If you have questions, like I said, you can send me an email. You can ask questions here too, I guess, if I have a couple minutes yet. And that's my take. That's my take on making trading more like clockwork than gunslinging.
All right. Well, let's do. There are quite a number of questions. I'm just going to hit one or two, just because we just don't have that much time. You can blame me. I'm the thief of time. But let's see. Bill wanted to know, is there a reason that you prefer bar charts? And further to that, do you see any value in Heikin-Ashi?
I think that anything that facilitates you being able to interpret the data is where you should focus your attention. Julie trades. She'll trade from candlestick charts, right? She's got all candles on her screen, so she sees data better that way. I'm just open, high, low, close, because I date back in this business to when you were doing these things on paper, right? You can imagine that. And I've just been looking at this data the entire time in terms of bars. And if you're an around the horn fan, or if you look, if you guys have the module for Metastock, you definitely don't have to, the book's not even in print right now. The book won't be in print again. But if you have the module for Metastock, if you go to their page, they explain each one of the patterns. And for me, the pattern's just easier to see on a bar chart, on an open, high, low, close chart.
I think so much of it is what you're comfortable with. I completely agree with that answer, because for me, I prefer candles. And for me, but that's just how I'm used to seeing charts. I look at a bar chart, I'm like, yeah. Let's see. Bill says also, Manz team has been getting my attention of late. I admire their intellectual approach to trading that melds psychology and technical analysis within a work-life approach. PNE PhD to another. One PhD to another. I will take a close look at your boot camp. So if you see Bill come in, say hi to him. Tell him. And Bill says, thank you. Thank you for the answer. Let me go ahead. I know you've got another event that you got to get to, Adrian. I really appreciate you coming in and spending some time with us. Great job today. I appreciate you, man. Thanks for coming.
All right, Jeff. Thanks so much.
All right. I do want to talk a little bit about the add-on as well, but we're going to kind of keep it quick. So let me go ahead and make me the presenter. I try and keep, it's kind of funny because I try and keep everything on schedule in the morning, and by the afternoon we can just give up sometimes. And sometimes we don't have a problem with it. I do want to say thank you to Adrian for all the work he's done. The add-on for him takes all the patterns in this book and helps you analyze them, helps you understand them, all that kind of good stuff. So the patterns that he has are the fastball, the line drive, the backdoor slider, the double hitter, the infield fly, the 3-2 pitch, and the switch hitter. It includes scanning, expert advisor, the ability to go in and see what the patterns are. And like you said, in the help files, it really, really identifies and kind of helps you understand what the patterns do. So this is a pretty inexpensive add-on. It's only $300 for the conference. We're going to do $249 on it. We're going to give you a money-back guarantee as we do with all of the products. If you need Metastock, we'll give you a free trial to it, real-time or end of day. Give us a call, 800-882-3040, metastock.com/sales-chat or metastock.com/conf promo. And I'll go ahead and type that out really quick. Okay. Okay, let me go here. Oh, we're not. Actually, let me. Okay, this is fine. They're a little bit out of order from what I do want to spend a second and say thank you to TechnoTrader for helping us sponsor the event today and all week. Martha's been a really good partner of Metastock for a number of years. I just put her link in the chat. If you go to that link, you can actually go through some mini courses that they provide. They do a really, really good job with this. Martha is a certified market technician. Or a chartered market technician, and has developed tools into Metastock. A great educator. Go take some of her free courses. You'll like them. All right, and then of course we are Metastock. In the interest of keeping things fast, I wanted to give away a prize, but I wanted to. I already had Greg go in and pull a random number out of his random number phone app. So the number that he gave me is 7657. And so let me tell you who that is real quick. Oops, I did it in the wrong place. I know the suspense is killing you. 7657. All right, it's Gene P. With a Hotmail address. And okay, if that sounds like you may have won this book. This is the Around the Horn book that Adrian was talking about. It's a copy that we have here, and we will send this to you. So what's going to happen with all the prizes, obviously we're kind of what we're going to do is on early next week after Memorial Day, we're going to go ahead and send all the information out in terms of to everybody that's a winner. Make sure we have a correct address and get everything sent out to you. So if your name's Gene P, you didn't fill out the country code, but you have a Hotmail address, there's a good chance that you are the proud new owner of this book. And if you get an email from me next week that said, hey, you won a prize, it's not a scam. Just answer the email, and that way I can get the book shipped out to you. So our next guest is Rick Sadler. Rick is going to talk a lot about candlesticks right now. A good friend of Metastock, a number of years. I like Rick's presentation style. Today, he's going to talk about one of his favorite trading methodologies. I hope, because, but in any case, he's going to talk, I think, about his 3-8 trap. If not, sorry, Rick. But let's go ahead and get you started. How are you doing, Rick? Let me see. I think I might have just muted your audio. Let me do this and send you an unmute request. We'll start there.
All right.
Okay, I can hear you.
All right, sounds great.
Let me make you the presenter, and we'll make sure we can see your screen. How are you doing?
I'm doing fantastic. Let me get my, what's screen? Show screen. Let's see which one. Oh, how about that one right there? And then share my webcam. How's that going to work? Hi, how are you? Oh, hey. There we go.
Very good.
Good deal. Good deal. Hello, everybody. Hello, Jeff. How you doing? How you doing?
Good. Good.
I keep looking. You're over here. I need to put you where. There you go. Now I can.
Oh, I'm not going to stick
now
around.
I'm looking at you. There we go.
Oh, hey. All right. No, you're not. All right. We can see you. We can hear you.
All right.
It's all yours. take us away.
Oh, okay, thanks. Hey, can everybody hear me now? Jeff, can you write a note? Can you hear me right now?
Yes, we can hear you. As long as I can hear you.
What's
Usually
that?
it
What
works
was that?
everywhere. But yeah, we can hear you.
Oh, okay,
Everybody
good.
can hear you. Yeah, yeah.
I wanted to
Let
make
us know
sure
in the
I have
chats if
another
you're having any
mic.
audio
Rather than
issues.
wear the headset to, let me fix my hair there. All right, I'm going to move this out of the way. Move that. There we go. All right. Hey, Jeff Metastock, thank you so much for having me here. I really, really appreciate it. And yes, I am going to talk about the 3/8 trap and candlesticks. Yes, so that's good. I want to welcome everybody. Thank you very, very much for being here. I love questions, so feel free to ask questions. If I hear Jeff yell at me, I'll put my headset back on and we can do some questions here. So let me get going here. All right. We need to get through this little disclaimer thing. The materials here is for information purposes only. I'm not going to read this whole thing. All information is intended for educational purposes, and trading your hard-earned money can be very risky if you don't have the proper education in trading. A little bit about me, just so you know who I am. That's me right here. I started trading in 1988, and I traded. Whoops, let me do something here. There we go. I started trading in 1988, and right after I started trading, I forget who the person was, but they said that I should get a hold of Steve Bigelow and talk with him about candlesticks, and that's what I did. And I studied under Steve for quite a while. Went to a couple of his classes. He even brought me into Houston one time, and I taught a class there with him back in the day there. So I owe probably, well, there's several things that I could probably say that I owe Steve and Candlestick Forum for where I am today and what I'm doing. So I am a swing trader. I am a swing trader right here. My hold time is overnight to 5 days. And I put plus because every now and then there are times I hold stocks longer, but for the most part, I'm somebody that will enter a trade. My basic trade would look like this. I'm looking for a rally, looking for a pullback, and then looking for the buyers to come in. This is where the 3/8 trap is, or even a breakout. And then I'm taking my money usually within 5, 6, 7 days. Why am I a swing trader? Because I think swing trading is pretty easy to understand. Sorry, my voice here is going to be breaking up. Swing trading is pretty simple. You find a stock that's in a trend. That's not hard to do. And then what you're doing is you watch for a stock that rallies and then pulls back, and then buyers start to step in. And what we're looking for here is candlestick signals. My favorite candlestick signal of all time is the morning star, just like this up here. And that's because it represents a reversal. So for instance, as we come down, we've got that red candle, and then you might put in a smaller bodied candle or a doji, something like that. And then you get the bulls come back in. Well, that's a reversal. Now, admittedly, my morning star signal, the way I look at it, it doesn't have to be, if you call that perfect, it doesn't have to be that perfect. This candle doesn't necessarily have to be a doji or anything like that. But anyway, there's where I'm looking at buying, and then we're looking at follow through and simply taking some profits off on the way up. You can see how visual that is. You can see how simple that is. It really is simple. And that is why I like swing trading. Technical swing trading is visual. I already talked about that. And swing trading is not complicated. You know, it's one of those things where you buy a stock, and your goal is for the stock to maybe move up to that target. Pretty simple, right? So you follow the price action as it moves up, just like that. And you take profits along the way, you take profits along the way, and then at your target. Now, you don't have to take all of your targets off the table. You know, if you have, say, 100 shares, for instance, 100 shares, as it moves up, you could take half off the table. You still have half. As you reach your target, you could take another half off, which would be a quarter. Take quarter off. You could trail the rest of it up like this right here. And the important thing is you put some of that in your pocket, because there could be days, take yesterday as an example. I don't believe anybody expected yesterday in the market to be as bearish as it was. I just don't think anybody ever really expected that. So that's the kind of thing that you want to protect by taking, you know, some of those profits up as we move up here. So we're going to be looking at charts in just a second here, but this is something that I think is very, very important. And, you know, today, well, there's been a lot of, whoops, that's not what I wanted. There's been a lot of sharing the past several days here, and the sharing, all fantastic stuff. I mean, it's a lot of education about trading. But when it comes down to it, you have to take what makes sense to you and make it yours. That's important. It's like what I'm going to share today. It works for me. It might not work for everybody. It works for me. And even, you know, even if you were to take, say, what I'm looking at, my ideas, tweak them up to make them yours. It takes a little time to do that sometimes, but hey, we're all here to help. So, you know, create your path to trading, and don't be afraid to take someone else's path, but just massage it and make it yours. Develop a trade plan and strategy. You know, I remember the early days, people would tell me this, traders would tell me this, educators would tell me this. I would roll my eyes. I got so tired of hearing develop a trade plan, because in my mind, a trade plan was something that was complicated. It was hard, and it's not. My simple trade plan really boils down to is I want the market to be bullish. When I look at the chart, I want one moving average to be of another moving average to be above, well, I want price to be above one moving average to be above another moving average. And then assuming the market is bullish, price is above what we're going to call the T line, you'll see that, and the T line above the trend indicator, I'm ready to rock and roll. Now what I'm going to look for is the chart pattern set up in here, and the chart pattern, see if I could do this. This is never done it this way before. Is where price is up, price pulls back, and then we're looking for the buyers, and we're ready to go, just like that. So it's not hard. It's not complicated, not at all. Take your time. Take your time. There's a big misconception with trading. I was guilty of that myself when I first started, that you're just going to jump into trading and you're going to be Joe Trader. It doesn't really work that way. And unfortunately, the way we learn is we blow up an account, and most people, not all, can't come back from that. I was fortunate I was able to come back from that, because I have done that back in the early days when I didn't know any better. And, you know, there's times in the market when it's your best not to trade, and you've got to know when those times are. A way to maybe know when those times are is if you're not making any money, when the market is in shambles, you probably need to stay away from the market. If you just started last Thursday trading, you probably shouldn't be in the market today. Put some education in there. So take your time. Education practice, so important. Search for what's right for you. And if you don't know what's right for you, ask. There's a lot of trading rooms out there. There's a lot of places that you could go and ask or for help. No one's going to tell you what's right for you, but by talking with somebody, you might be able to figure out what's right for you, because you might not know what questions to ask. You don't know what you don't know. And don't be afraid to reach out to people. And I really don't know how many speakers have been on, but my goodness, there's been a lot of speakers here that I bet if you reached out, they would help you with that. So here's, did I do that right? Yeah. All right. Yeah, sorry. So here's what I'm looking at. Let's do this. Price obviously is the candlesticks. This black line right here, that right there is the T line. And you see these dots? This is green right here, and here's the dots red, okay? So what I'm looking for is price to be above the T line and T line to be above the trend indicator to be bullish. Now, you see right here, I clipped this last night. This is IWM here. I clipped this and put it in here last night. So that's, I'm pretty sure anyway. So you can see this can't be a trade. Even if the bulls came in there today, I can't trade this because this is what I want it to look like right here. What I want is price, just if I can do it this way. Right here would be a good place. Price above the T line and the T line above the trend indicator right here. And that gives us our trend. And you can see how when it's green, you can see the bullish trend here. See how we broke below and see how that dot turned red? See how this right here came down over here? You don't want to be long here. You want to be short right here. And I don't want to be long here. I'm not a bottom picker. It doesn't mean that I don't do that every now and then, but typically I would say 99% of my trades are not bottom picking trades. And I don't want to be a buyer here. I don't really want to be a buyer through here. What I want is that trend to start. Price above the T line above the trend indicator. Something else I'm going to do is I'm going to go through here and I'm going to analyze how did we get up here. So I'm going to look at that low. I'm going to recognize it. A low, a high, a higher low, higher high, higher low, and a higher high. That's a bullish scenario for me. There's two favorite reversal patterns that I like. One is an inverted head and shoulders. That would be that right there. This would be a little shoulder, a little head, a little shoulder. And the other, I don't know if you could really get it out of this, is a bullish W pattern. I guess if we tried really hard, really not though. That is not a clean bullish W pattern there. So I want that pattern to be like this. And when we break out right here, that those two patterns are my favorite to see coming off the bottom, getting up into that trend. So the main focus of this chart really is looking at price to be over the T line and T line over the trend indicator for long, or just the opposite for short. What do we have here? Oh yeah, here's the transports again here, setting up. I don't know what I did right there. Anyway, you can see how that's moving down, how it's short right there. See how we're long right here. Just a simple way to look at it. And You can do this with the market and tell if the market, I don't know if I have a chart. I can, well, I can do that. Here's right now, live with Metastock. So you can see, and this is what's going on right now in the market. Here we've got this bullish W pattern, just what I was talking about. Okay. And now see how price has moved over the T line and T line has moved over the trend indicator. And right here, it was all very, very sloppy, not worth trading. Let it break out. And then for trades, let's change this tool here. I'm going to have to be careful. I might go over time today. See how we rally up and now we rest? Well, right there's a 3-8 trap. This is probably a 3-8 trap too. Up, and see right in here, little 3-8 trap right there. Up, 3-8 trap. This is a 3-8 trap. And then yesterday, everything got nasty yesterday, just horribly nasty. Big bearish engulf. Notice so far today, we don't have any follow through. Also, this is something else that I think we need to think about. I'm pretty dedicated to this. So bearish engulf yesterday. Should we get bearish? I would say no. Should we buy shorts? If you want to put a short or two on, and I did, but I wouldn't all of a sudden go, crazy nuts. Let's get short on the market, because with that bearish engulf, the trend is still bullish. It really is. Price did close below the T line. Yes, it did yesterday. Here, let's do it here. Yes, it did. But the T line closed above the trend indicator. And as a bonus, trend indicators above the 50-period moving average. Now, today, while I'm not convinced that the market is going to get bullish with a single candlestick, the overall trend is actually still bullish. So with a little bit of price action, with the bearish engulf. Now remember, if you are a connoisseur of candlesticks, you know that you don't go bearish on that candlestick. What you do is you trade on the follow through of that. A true candlestick trader is somebody that never picks a top, never picks a bottom, but you take the goodness out of the middle is what you do. And this was to the short side. So for instance, here we broke out. So we're not going to trade here. We're going to take the goodness out of the middle is what we're going to do. Not you don't top pick or bottom pick. Okay. So here, let me move this back out of the way. All right. So my goal today is to break down swing trading, the way we trade, share everything I possibly can trade with you, answer whatever questions I can, and to show you how simple it can be. Now, you can take simple and you can complicate it. And we've all done that. We've all complicated it. So, or typical swing trade momentum. Oh, okay. Most swing traders are technical swing traders. I know a good amount of technical traders that also trade fundamentals. And what they're doing is they're looking at charts that have really good fundamentals. They will put them on a watch list and they will only trade those, but the technical setup has to be there for them. So they're trading stocks, simply good fundamentals. That's like building a trading plan. You're going to start with something that's already good, but you're going to wait for the most opportune time for that entry. Swing trading, the swing trading starts if you're going to hold a position overnight. It can last for 6 months. A swing trade can. You could put a group of swing traders in a room, and you're probably going to hear everything from overnight to 6 months. Somebody might call that a swing trade. That's a bit long for me, but I've heard swing traders, some call that a swing trade. And I suppose as long as, I can't argue with them, as long as if it stayed within my trend that I use, if it did this, if that was 6 months, okay. And my trend, by the way, is going to be that T-line, trend indicator, T-line, trend indicator, T-line, trend indicator. If it stayed there, well, I suppose that could be a swing trade. Basically, a swing trade is all about directional momentum and then a small little pullback. And that's exactly what we look for right there. I want to stop here for a second because I do probably trade 99% of my trades are probably, not probably, they are options. Now, I don't get crazy in options. I only trade simple directional options, calls and puts. And I keep it pretty simple. So what I'm going to do is I'm going to go 50 days plus, so 49. I mean, I could have taken, I could look at this April just as easy. But I just to show you what I'm looking for here, 50 days plus. So, I mean, I could have, in any one of these, I could see, something like that. The next thing I want is delta and open interest to be lined up. So I want good open interest. Good open interest. And this is plenty good right here. And then delta, I want to be around 70. 69 would be fine. 68 would be fine. 70, 74 would be fine. 75, 76 maybe would be fine. But what I want now, it's very, very simple. More than 50 days out, 50 days or more. And then I simply want to come down and make sure my delta and open interest are in good shape for me. And that is where I will decide to make an option trade. Some stocks, you go look at the options and there is no open interest. You're going to find, I mean, there are those cases where the delta is just not there for them. But most of the time, most stocks, they're there that I'm looking at anyway. But there are times I can't make a trade because the open interest, for example, might be 102. That's not enough for me. 186 is not enough. I can do a 300 and then anything down here would work. The reason this one works is because we're around 70 and the open interest is good right there. So I wanted to share that. That just kind of simplifies options. And to be honest, that's pretty simple, pretty easy to learn, pretty straightforward. Okay. Keep it simple. This is, I think I showed this on a chart, and let's see here. If I tend to follow the SPY, that tends to be my number one market indicator. What direction is the SPY moving? So if the SPY is bullish, I'm going to look for a trending chart. I'm going to wait for the setup, have patience. And that's where, and that's where Metastock comes in, because it brings it all together for you. Set a protective stop, take profits into strength. How tough can it be? That is the recipe that I use to trade. All right. I have to talk about this. This was a good day. Well, let's talk about this. So let's make this blue. All right. Let's make this red. See how we're down? I mean, basic charting. This is NVIDIA. Basic charting. Here we are down. You don't want to be long. And in hindsight, somebody might say, well, I want to buy NVIDIA every time it moves down. That's only because it's a hotshot stock. Any other stock, you couldn't use that logic, I don't believe. So let's try to take that logic out of the picture and just simply look at the chart for what it is, not necessarily that it's NVIDIA. All right. This is a no buy down here. Absolutely a no buy. See the red dots? No way. Well, here we pop up. We got a little green. We pulled back and then went back up. Excellent. Right through there. What a great time to be buying. And now here's your pullback, and this is where the 3/8 trap is, right there. Any one of these candles could have been bought. As a trader, a rookie trader, somebody new, they might, oh my God, which one do I buy? Do I buy this? Do I buy that? What do I buy? I've got a pretty simple rule. I never buy a red candle. My charts are black and white that I use. It just shows up better on a screen like this. But I never buy a red candle. I'll say never. I don't know, maybe 5 times a year. That's pretty close to never. I will add to a position on a red candle, but I never buy on a red candle. So buying for me could have been right here and could have been right here. I don't buy dojis either. I don't believe dojis are a reason to buy, personally. The breakout of a doji, that's a different story. But that's where I would be a buyer. So nice little 3/8 trap. Reason to buy. It rallied up. There's every reason to still be in NVIDIA here. And now here's NVIDIA setting up again in a 3/8 trap. So that's exactly what happened. I bought NVIDIA before earnings. Boom, closed it out 57%. That was a good trade. Okay, so remember I said back here, don't make the argument, well, I'm going to buy NVIDIA every time it pulls back because it's the stock market's darling right now. Now, let's change that. It's the stock market's darling right now. And that's the reason I bought it. I took a risk. The chart setup was set up right. I don't normally trade through earnings. That's not something that I normally do. And I'm just the opposite of promoting it. I'm always saying no, 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 no. But I took that risk because it is Wall Street's darling. And I just, in my bones, I felt there's no way this thing's going to report poorly. So that was a very nice trade. But I want to show you how the chart was set up here. Now, I'm also one to say that I don't believe the chart setup tells you what earnings are going to do. Earnings is its own little world, and you don't even want to get me started talking about earnings. They'd have to erase. But I wanted to show you how that was set up in there. Okay. Here, and these are actual trades. I think maybe the last couple are not actual trades, but I want to show you some actual trades here that have been made. Here is SE, and right here is a 3/8 trap, and that's where I bought it right there. And I just held this overnight, but it was a nice 17% overnight. One of the reasons why we'll pass on that. Some of these are really quick trades. Right here is a T-line bounce where we're bouncing off the T-line. So this is just one of the things that we have with Metastock in the package with Metastock. So you see this is starting to alert a T-line bounce. And then anyway, that's where I bought it and then closed it out. I'm a big believer in selling into strength, not maximizing my trade. It's just not something I do. In fact, I tell the folks in the trading room that I'm never going to be the guy that gets in at the very bottom, and I'm probably going to never be the guy that picks the very top. I want to take what's in the middle, and at 17%, perfectly happy with that. I'm excited about that. What was that? The next slide? Yeah. Okay. Here's a trade. Now, this is one of my favorite chart patterns. There's that inverted head and shoulders right here. Here's your shoulder. There's your head, and there's your shoulder. And we have a little. It's not quite a bullish engulf, but it kind of kicked us up. and we failed the 50-period moving average perfectly. Now, a little bit more about me. I trade a lot with moving averages. I don't use a lot of moving averages, but the ones I use them a lot. The 50-period moving average is one of them. The Trendicator, that's a moving average, and the T-line, of course, is the 8 exponential moving average. So I entered this right in here, knowing, and I say this all the time to folks in our trading room, when I set up my trade plan usually has moving averages to do with it as part of it. So in this case, since the 50-period moving average was up here, my trade plan would be right there. That is my trade, period. It's not up here, it's right here. So I took that trade, bought it, and sold it nearly, well, I sold half of it right here, right before the top, and then sold the second half at a 31%. I just about got that top up there on the second half. So like I say, all about taking profits on the way up. And there's that little 3/8 trap set up in here, bouncing off the T-line, running up. There we go. Here's another one, FCX, and let's talk about candlesticks here too, and candlesticks and the trend. Let me point this out. Let's make this red, maybe bigger. So these candlesticks are not the best. I mean, most people are not for bull. Most people are going to look at these and say, well, man, this chart is about to be bearish. Well, it could be. One thing about candlesticks is they never have to confirm the next day. All right. So notice here, we didn't confirm. We actually went against those candlesticks. But notice the chart pattern, the trend. Price is above the T-line, and the T-line is above the Trendicator, and a bonus, we're above the 50-period moving average, okay? So we've got this combination of candlesticks in here. Then all of a sudden, I caught this candle right in here, and I bought it pretty early in a 3/8 trap right through here. Everything is still working. I knew at the end of the day, if it would have failed, it would fail below the T-line. I could stop myself out, and I wouldn't be hurt. It was a pretty good risk. So took the trade. I closed I closed 25% on the first half, and then I closed right here with a 9% profit. So it got ugly right in here. Now, I want to go back to candlestick signals. They don't have to produce the very next day. Now, this right in here, this is not pretty. I just saw a quick trade right here. So this might have been a clue of what might be coming. And boom, bang, here we are here. You know, we've got this candle pattern, gave us some warning. We move up, and then we pop down. It happens a lot like that. It's just a warning signal, and because we didn't get the follow through. So anyway, I wanted to share that with you. Here is FSM, and here's another one, and I think yeah, FSM is actually up today. So here's that 3/8 trap. So let's everything by the numbers, right? Right in here, 3/8 trap. Price is above the T-line. T-line is above the Trendicator. And here, the Trendicator is above the 50. Now, one thing we have to remember, what's the SPY doing, right? So I want that to be in the same direction. If the SPY is bearish, you know, moving downhill, where there's nothing here like that, you know, where price is below the T-line and T-line's below the Trendicator, why would I want to be going long? That's like having a 800-pound elephant sitting on your chest. You might get up It might work out, but man, I got to tell you, it's going to hurt just a little bit. So go with what the market is doing. Well, the market was bullish. All right. It was. So that's, if we were to count it, 1, 2, 3, 4, 5. There's 5 conditions that were met to be bullish on this chart. I believe this was a stock trade too. So here we are, pop up, and I sold it right here. I didn't want to give up my profits. Now today, today it's actually up. Remember, I'm a swing trader. I'm a profit trader. I hold overnight, 5-6 days. I hold for money is what I hold out. I don't hold out because, I've got to hold a position for 10 days, or I don't hold a position because, somebody said, hey, this stock is going to go up to that level right there. It's all about money. And I'm going to put that 10% in my pocket. Here's Intel. Now that trade there, I wanted to go higher with it, but I'm afraid that there were just too many signs with Intel in other places that were just, I better get out of it. I ended up with a 25% profit. This is a pinball setup. This is one of the very first setups that we put on Metastock. The pinball setup is actually the setup that took me from not trading to trading. It was the first setup that I could actually make money with, and it's what actually took me full time, was this particular setup. So here we have a reasonable bottom put in, and then we started moving up. I got long, and I closed it out because I just felt like, this is not going to work out. That was a good call. 2 thumbs up on that one. But take 25% off the table, put it in your pocket, go home, have a nice day. Here's eBay. Now,
hey Rick,
eBay is one of these charts.
Oh, yeah, that's right. His headphones
that I think is set up for today. As I was looking at charts, I like eBay. I like the eBay chart, and I believe here. Let's even do this. Here's the weekly chart on eBay. Just a second here. I clicked the wrong button. There we go. Here's the weekly chart on eBay. Now, I put this up here last night, so this is looking at something for today. But I knew today there's no way in heaven's name I was going to trade today, and I refused to, because I think the market is a complete mess right now. It's too choppy. It's not overly predictable right now, and I think the smart trader sits on his hands every now and then. So I'm going to chalk myself up as a smart trader today. So here's the weekly chart. I love that weekly chart. We start breaking out. Man, there is tons of opportunity up here on eBay, and there's some target areas. All right. Now let's go back to that daily chart. Here's the daily chart, and eBay is actually eBay has broken out. Now, over my years of trading, something I've learned, let me draw today's candle in there. Over my years of trading, I think it gapped up a little bit today. Something I've learned is, if you look at a chart and you say, darn, I wish I would have bought eBay yesterday or the day before, that is the chart you want on your watch list. That is the best chart, perfect for your watch list. I know everybody likes to scan for charts, and you look for things way down here to buy. When I stopped doing that, and I started looking at charts that were working, I became a better trader. No one is saying to buy eBay right here. I'm not going to buy eBay right here. It's up 1, 2, 3, 4 days. No way am I going to touch that. I'm not going to touch it today because I think the market is junk today. but I'll bet you $100 bill. I'll bet everybody in here, everybody who can hear my voice, I'll bet you $100 bill that eBay will give us an opportunity to be bought. It might not be tomorrow, well, Saturday, might not be Monday or Tuesday or Wednesday, but I'll bet you $100 bill. And what difference would it make if it even moved up another day? And what if it did that? Let's look at that weekly chart again. Look at the opportunity in eBay. Who cares if it moves up a little bit more? There is plenty room to make money in this. Be patient, wait for the setup. A super quality chart setting up right here on eBay is proving that it's good today. I like that. So I can't wait for this thing to set up now for an entry. mRNA. Here's a nice chart, and you can see the possibilities in here. First, let's do this. See that breakout? And the way we learn to trade is we go back and look at what it did history. And if you look at enough charts, you'll start seeing the patterns form. New traders have tough time seeing it because you don't really know what to look for. And that's maybe what I'm hoping to help today. Struggling traders, they kind of get in their own way and they can't see, mostly because they're focused on making money, and really what they need to do is back up and look at the chart a little bit. But sometimes the focus of making money can get in your way and cause you troubles. So here we have this very nice breakout, and here's a nice little flag pullback, what we call a PBO, and it's also a 3-8 trap. That could have been a great entry right here. There's also absolutely no reason why you can't buy on breakouts. Remember what do breakouts mean? And I suppose, who wrote the book? What does breakouts mean? Well, whoever wrote the book on it, the first book, that was their definition of breakouts. I would encourage everybody to write a page. What does a breakout mean to you? That's the important thing, is what it means to you. As an example, what does a breakout mean to me? Well, when I see a chart break out, we probably should use this one, huh? Green. Okay. So when I see a chart break out here, like right here, all right, we break out, then what that tells me is that the buyers are strong enough to break it out. But why are they breaking it out? Because they think it's worth more money. That's why. So when a chart breaks out, the first breakout might not be the entry. And heck, by looking at this chart, you can see you didn't even have to enter into here to be in this chart. Even though it was a perfect setup, you could come up and right through here, maybe up right through here. This is all a nice, well, this probably would not have been a 3-8 trap. It looks like it now, but it wouldn't have been, because the only reason it looks like it now is because of this big stick and whatever day this was, probably yesterday, that brought the T line up. So that wouldn't have been a 3-8 trap here. That would have been here though. So anyway, a breakout to me means we're going higher. It doesn't mean that it has to go higher tomorrow, and it doesn't mean it even has to go higher next week. So I guess what I'm trying to say here is, when you find stocks that break out, put them on that watch list, and then monitor, use your program in Metastock to monitor those stocks for that 3-8 trap setup. And because they've already proven that they're strong, they're healthy, and they're good. So now we're just waiting for the best opportunity to buy them. But what we don't want to do is, we don't want to be in a habit of buying stocks, say at the high, and then have these pullbacks. I don't know if anyone ever has that happen to them, but it makes you feel puny. It makes you feel rotten is what it does. So, don't do it. Let it work, wait for it, be patient, let it set up, and be a buyer right here. So nice little chart right there. I'm coming to the end of my presentation here, and I would like to share with everyone that June 2nd, I'm doing a workshop, fast track to trading workshop. It's $288.12, but what that is that's a 3-month membership is what it is. So you're actually getting a 3-month membership, and the workshop, there's no charge for it. So this will be June 2nd. This is a Sunday afternoon. And the reason I did it on Sunday afternoon, I think it's at 5 o'clock. Yeah, it is 5 p.m. The reason I did it on Sunday is because part of the workshop will be to put together a list of stocks. So the very next week, Monday, starting Monday, possibly the money can be made back. So, I mean, the goal, in a perfect scenario for me would be, of course, you sign up for the workshop, and then that week you make your $288 back, based on trades that on what we learned in the workshop, and then trades that we will build on a watch list, and we'll watch together, because you will be a member for 3 months. So we'll be able to watch together, and then look for those entries and take those profits, and we can see it in real time how it might happen. Okay. So I'm kind of, and one of the things that members receive is a real-time trade alert. So if you're not in the trading room, if I buy something, I always post buying XYZ. Same with closing, whether that's a winner or a loser. If you have no interest, check us out on YouTube. Every morning I put out a pre-market video blog, you can call it, on what the market's up to, and maybe a few charts to look at as well. So we also have text alert sign up if you want to do that. These are not in real time. I sent one out this morning on a few stocks that we're setting up. And then sometimes I put them out, hey, this is looking good, we just bought it, or something like that. So anyway, outside of that, Jeff, that was my presentation, and I would love to answer any questions that anyone may have.
Perfect. I was just I wanted to say that new meta stock that you're using sure looks nice.
I love that. Yeah, I mean, it is. It really is.
Two, we had a lot of questions about, that was just a little bit of a self-serving compliment for me. We had a lot of questions that were about like what moving averages are on the chart and what moving averages you're using. And so I was hoping you could kind of go through
absolutely
exactly the moving averages.
Yeah, let me do that. Absolutely. See, pen. So what you don't see, and I don't use it anymore because it just kind of clutters up the chart, but it's the 3 EMA. And if it was up here, it would be, it's going to be up here like that. Okay. I don't use it anymore. I don't need it. I'll bet you $100 anybody that sets their chart up like this in a week's time, you won't need it either. It really does just clutter the chart. So I don't use it anymore. That's what you don't see up here. The black line, this is the T line, or the 8 EMA, and that is the T line, right? The green dots and red dots, that's the 17 EMA, and that's what we call the trend indicator. This blue line is the 50 SMA, and the 200 period moving average is right here. SMA. There we go. All right. And that's, I do have another one that's not shown here that I use. And we call that the dotted deuce. It's actually, you can set it up with Metastock. I just don't have it on here. It's a 200 period moving average. I'll write it here. It's the 200 simple. No, it's the 200 front weighted. It's measured on the low. Yeah. It's measured on the low, I believe. I'll have to go look. You know what? I actually probably can tell you that. Yeah, it's front weighted, and it's the average of the lows. The 100 simple comes close, but I like this better. So you have to build it. Again, it's a 200 front weighted, and it's the average of the lows that's not shown here. And that's on all my charts when I'm trading. So thank you for that question. I hope that was helpful.
Much so. And then a last question, if you could briefly describe, Julian wanted to know if you could kind of reiterate what the 3-8 trap actually was. What's the setup you're looking for?
Okay, let's do that. I love that. Let's get a trend in here, and we're going to make this trend right here. So we want a trend, all right? That's number one. And then what we want is we want to see a rally. We want to see bulls. Well, let me do it with a candlestick. So we want to see bulls in there. We'll go up one more, right? Now what we want to see is a pullback. Now, there's your trend and the T line, all right? So really maybe what I should have said, here, I can still do this. That black line is the T line. Here's your trend, all right? And I use the 17 EMA, the dots, as my overall trend. So when it's green and everything's working, that's what I'm looking for. So now this is the T line. See how we come back? Now what I'm going to look for are buyers to come back in. And by the way, if we slip down a little bit, world's not coming to an end. If we come back up, that's good. In fact, that's one of the setups that I like is we dip below and come back above. I like that. So I could be a buyer here or even a buyer a little higher. I'm never so greedy. I think I have to get the middle. Like I said, I trade directional options. So it's, you get a chart that moves, you're in it for just a couple, 3 days. And before you know it, you've got 10, 15, 20% wrapped up in the chart. So entry wise, make this blue. I would be looking for an entry in this area right here. And then of course, there's always the breakout, that type of trade as well. Okay. So looking at the SPY chart right now, this could have been an entry. This could have been an entry. This could have been an entry. Of course, that didn't work out so well. Oh, I lost sound, Jeff.
I have to turn on my mic.
Oh, there we
go. User error, right? Last question from Andrew. Do you ever use a smaller time frame to get into a trade or out?
Never. Okay. Not ever. I never use a smaller time frame to get into a trade or get out. I will use a smaller time frame to look at a chart. Something we call a 3-bar chart, which is nothing more than a 130-minute chart. But what it does is it takes a single daily candle and it breaks it down to 3 bars. So whatever the daily candle looks like, the 3-bar chart, it'll break it down to 3 bars. So, maybe like that. And that's one single candle. And I do look at the hourly, but other than that, I don't trade with intraday time frames.
Cool. Me neither. I don't have the time.
Yeah.
They expect me to work here.
Yeah.
All right. Thank you very much, Rick. Great having you. Appreciate your time. All right. Let me go ahead and jump over here. I'm going to go ahead and make some changes. I do want to talk about the 3-8 trap strategy for a minute, and kind of one of the things I like about it is that Rick calls it his favorite strategy. So we just actually went through and kind of redesigned the actual 3-8 trap. It'll allow you to go in and look for setups and identify them on the charts and stuff like that. And also scan. We talk a lot about scanning, and I use scanning on a daily basis. So if I just want to kind of show you how that is real quick, there's a couple of different patterns you can actually scan for. You can scan for the 3x8 trap, which Rick calls his favorite setup. And then we have the pinball setup, the rounded bottom breakout, the T-line break and squeeze, and then that's a different scan that you can run. But I ran this today just now. It's not a recommendation to buy, but we came up with Tesla, so I opened up the chart. And I wanted to kind of just show off the commentary. I personally would wait for it to get above this 3-period exponential at the high at least. But here it's telling here the 3-8 trap combined with the trend indicator is indicated on the Tesla. The trend indicator reading is bullish. Traders could look to buy Tesla, while more aggressive traders could look to buy the option strategies. The 3x8 strategy is Rick's primary setup, and it goes on to talk a little bit about what that is and how to kind of get into it and stuff like that. And I just love scanning. I run scans every day. I love the ability. I just went through the S&P 500, the NASDAQ 100, and the Dow 30. So there's about 600 stocks there. There's a lot of overlap, so there's actually about 520. And out of all of the stocks, the one I can look at is Tesla. I don't like kind of the way Tesla looks, so I can get back to work, right? So I just love the way that works. So let me talk a little bit about what's included in Patterns for Profit, though. As I said, they have there's some of Rick's favorite patterns, including his favorite pattern, which we introduced into his add-on a couple years ago, and we just went and tweaked. So if you've had this HRC or this Patterns for Profit, I mean, for a while, make sure you go download the latest version. If you downloaded a few years ago, we've actually kind of tweaked the pattern, and we did it back in January, and we provided it for free. So you've got the rounded bottom breakout, the T-line squeeze, the T-line bounce, the pinball setup, and that 3-8 setup. It has the ability to go in and run the explorations and identify those on the chart. It has the layouts, and it identifies those 5 patterns for you. Normally, this is just a one-time cost. You pay for it once, you own it forever. $7.99 is what it'll cost. Let me go back again. $6.99 here at the conference. It has a 30-day money-back guarantee. You can call us at 800-882-3040, or you can go right here, metastock.com/conf promo, and pick it up there too. Like I said, order it. If you like it, you can keep it. We'll let you keep it. We do offer a 30-day money-back guarantee on all of the products that we have, because we stand behind them. If you don't like them, you can get a refund for any of our one-time products. So 800-882-3040, metastock.com/sales chat, or metastock.com/conf promo. Cool. Now, I do want to say this is not exactly the right slide, but it'll work. I do want to say thank you to Stocks and Commodities Magazine for sponsoring the event today and all week. Great supporters of Metastock 3 years. Great magazine. If you want to get a subscription, go to www.traders.com or click on the link that I just put here in the chat. It's right there. So anyway, of course, we're Metastock. I'm ready with a prize drawing because I want to kind of keep on time. I've actually had Kelly give us a random number, and I just want to announce the winner just to save time. So this particular winner, I've already got it written down and everything, is Thomas I. In the USA with a Gmail account. So if that sounds like you might have just won some really, really good books. So the books that we won, Rick just mentioned how Steve Bigelow had a profound impact on his trading. We worked with Steve for a number of years, and he's a great educator, a great business partner, and we can't say enough good things about Steve. But I'm going to give you, so Thomas, what you won is you won a copy of his book, High Profit Candlestick Patterns. And you won Eliminating Emotions by Steve Bigelow. And I'm not going to send you this one because I'm using this one, but we also have a mouse pad that talks about all the major signals. So when I reach out to all the prize winners next week, I'm going to ask you if we've got a good address or if we can get a good address. And as long as you kind of respond to me, I'll send you these items. So congratulations. In terms of us, we're Metastack. We've been rated number 131 years in a row. And it's a fantastic software program. I just love the ability to scan, test ideas. It's a toolkit. It's going to help you find better trading ideas. We're very fortunate. We've had just customers that have been with us for decades and decades. And we want you to be one of them. So what we're going to do is if you try out Metastock, it's going to cost you, well, we have two versions. We have a real-time and we have an end-of-day version. If you try out Metastock end-of-day, the cost is $69 per month, and that's it. If you try out the real-time version, that starts at about $265 a month, and that's it. Now, what we're going to do, though, is we're going to give you the second and third month for free, which means if you start that today, you'll be able to play with it all through the Memorial Day weekend. You'll be able to use it all the way until August 24th. You'll have unlimited access to our support, which is awesome. You'll have a white glove installation support call where they'll actually call, help you make sure everything's set up and ready to go. And in addition, you'll have training that we're going to provide to you free of charge. So if you want to do that, I'd recommend you do it. There is a reason it's been rated so highly. There is a reason we have a lot of customers that have just been paying their subscription costs for decades. And the reason, I believe, is because they get really good support. That's important. But also because it helps them make money. It helps me identify those trades that are more important. And it allows me focus. Give it a go. 800-882-3040, metastock.com/conf promo or metastock.com/sales chat. The book's names, Chris, were Eliminating Emotions and High Profit Candlestick Patterns. Those are the names of the books. All right. Our next guest, our next presenter is there's the right slide. Anyway, thank you, Stocks and Commodities, for supporting us. Our next speaker is our very own Bobby Hiller. We've been talking kind of about all week about how with real time you get this kind of Bloomberg-esque competitor that offers news from 3,000 different reporters in 300 different news bureaus, 30,000 different different research reports on all of the major companies around the world. One of the most extensive news and fundamental things that are available on the planet. And Bobby's going to go through it with you right here. Bobby has been with us he's just a young'un, 6 years?
Coming up on 8 years.
Okay. So pretty soon we'll have to stop calling you the young'un.
Yeah, I am still one of the newer employees, even at 8 years.
Yeah. You're still also quite a bit younger than us 50-year-old farts that are, me and Kelly.
One day I hope to be just as wise.
All right. I just sent the screen share over to you. Okay, can see everything. You can get it from here. I'm going to go ahead and get out of the way. Thanks, Bobby.
Great. Thanks so much, Jeff. All right, guys. Hey. Happy to be speaking with you today and show you guys a little bit on Metastock's Zenith. I do apologize if I have to clear my throat a little bit throughout. I am kind of just getting over a little flu or something of that nature, but starting to feel better, so that's good. I am pretty excited to show you guys kind of what the Metastock Zenith platform has to offer today. For some reason, I keep looking over at myself on this monitor, so let me move that. And yeah, so I've done this type of presentation a number of different times. Just the amount of information inside of Zenith is so vast, and there's so much that you can do inside of here. And I know a lot of people like to come and watch these like seminars and events. So every time I try to do things a little bit differently, but still try to show, you know, some of my favorite features and everything. So that's what we're going to be doing today, is just kind of going through, looking at a lot of the cool highlights and bits of information that you can pull out of the Zenith platform here. And yeah, it should be fun. If you guys have questions throughout, don't hesitate to put them into the chat box and I'll try to keep an eye on them. If anybody wants to chime in when I forget to look over at the questions, if you think it's appropriate, feel free to butt in and ask me some questions. And yeah, with that said, let's go ahead and get started real quickly. I'm gonna hit this disclaimer again. So this demonstration, it's designed to instruct you on using Metastock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using the specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading, and Metastock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. So yeah, Jeff did a great introduction already, but yeah, I'm Bobby Hiller. I work now in our business development department. I did start off in sales. It seems like, you know, a lot of the Metastock employees started off in sales. Kelly, the president, he was a salesman. Jeff, who's been doing this, he's was a salesman back in his time. Scott Brown, the owner of the company, started in sales, and they all moved through like BD and up the ranks and everything. So it's a nice kind of trajectory I've been on here, and I actually absolutely love the position that I have. I get to work with traders all over the world. And I myself, I am not a professional trader, but I do get to work with a lot of professionals and kind of learn about their different trading strategies and help implement them into Metastock, and also help our resellers throughout the world kind of to resell our software. So just know, yeah, I'm definitely not a professional. I don't claim to know everything there is to know, but I am lucky enough to have learned from a lot of different people, and I'm hoping I can share you know, some of what I've learned with you guys today, and that you'll find some of this beneficial. I know Jeff has talked about Metastock. Many of the speakers have talked about Metastock throughout. Maybe you've even seen some of these slides here, but I do kind of like to just talk about this a little bit and kind of let you guys know how it all started out. So Metastock was originally founded back in 1982. So we've been in business for over 40 years now. And, you know, that really speaks a lot, because we were in the technical analysis software business for that long. And a lot of people, you know, didn't even have a computer or work, you know, online or things like that back then. So it's really kind of unique platform there. We were purchased by Reuters back in 1995. And we released our first real-time data feed based on the Reuters technology for Metastock in 2005. And then we released Metastock Zenith, which is the product I'm going to be showing today, in 2012. So it's been over a decade that this software has been available through us, and we're actually the only ones that kind of have this retail version of the Refinitiv or Reuters or LSEG. They've gone through a lot of name changes. We're the only ones that offer this version for retail traders called Zenith, and we're able to offer it at a fraction of the price that like professionals and institutions have to pay directly. So it's really unique platform in that sense. We did actually divest from Thomson Reuters, or you know, Reuters back in 2013. So we're still kind of the same core company. That's how, you know, so many of the others have been with the company for so long. We still have the main kind of employees, but instead of having to go through all the red tape and so many different layers of management and everything to make changes in the company, etc., Scott Brown decided to purchase the company back. And so he's still kind of the owner of Metastock, but Kelly, he's the president. And but anyways, yeah, so that's been a decade in itself that we've kind of divested from them, but we still are heavily partnered with them. I mean, we still offer this Zenith service, which comes through them, or now they're owned by LSEG. And we still get all of our data through them. There's an extremely trusted and reliable source that are very well known. And so when you're using Metastock and you're getting your data from us, you know that you have that trusted, reliable source giving you the data. So here's just some of the little highlights that I'm going to talk about before I actually jump into the software. We will be spending the majority of today inside of Zenith. So we're not going to be looking at very many PowerPoint slides. I have like one more after this one, I think. But so it is powered by Refinitiv, or I guess now LSEG. So we have over 70,000 listed companies inside of here, or inside of Zenith, and there's, I mean, hundreds of thousands of securities available, or over 40 million research items in total. And you get real-time news from more than 2,600 full-time journalists. I think that number is even higher now, like maybe even like 3,000 full-time journalists across 200 different news bureaus. So the amount of data in here is vast. Let's see here, a few more kind of numbers to throw at you before we dive in. So the data package covers over 150 currencies. Our FX data is included inside of all of those packages too. You also get news inside of all the different packages or regions that we offer. And like cross-asset data, you get quick, intuitive searching, sector, industry, and group analysis tools, all sorts of great things. But let's actually just jump inside and start showing you guys some of it, because I could read off features all day long, but that's no fun. Nobody wants to do that. Let me see here. Oh, so actually you can see this toolbar up at the top. I have my Zenith or icon open already, and maybe it gets a little confusing with this background here. So I'll actually close that down. We'll go ahead and minimize this. All right, so this is actually the home page here. So I could have just came up here and clicked home, or typed in home up in this search bar, and it gets me to this home page that we're on now. And this right here is just kind of a new workspace I started for today's demonstration. We're hopefully going to be kind of adapting and updating this workspace kind of throughout, and showing you guys how you can kind of create your own custom workspaces. And then it's really easy to kind of manage everything within tabs and to jump between your different workspaces and things of that nature. Kind of very similar to the new Metastock 19, which now has like the tabbed options, and the multi-screen setups are, you know, so much better now with the new improved Metastock, being able to put them onto multiple screens and monitors. I have multiple monitors set up right here. So normally when I'm looking at this too, I might have the home page on one screen, and then I have some other apps on my other monitors and things of that nature. It's all fully customizable though. So that's one great thing to know. But yeah, with all that being said, let's kind of just jump into some of these features here. So you'll see there's a lot of information here, a lot on the screen. There's kind of a lot of different things to click in and go into. So one thing I kind of like to note is Zenith, or this icon here. It's very similar to like a web browser. I tell people that the software is basically your internet browser for everything trading related. So I can come inside of here, everything that we see, I can click on. So if I come into here, we can see this has like this equities homepage here, and it's letting me know kind of like some big top news going on, like NVIDIA's split of soaring stock could boost retail investors' appeal. I could click onto this link, and it's going to take me into this top news story, and then I can get the full story here. Whenever it's referencing a different company or symbol or something like that throughout the story, you can see it kind of shows up in blue here, and I could click on this and go in and get more information on that. It's also going to give me some real useful, just like quick snapshot charts kind of right here on the side. It's a tongue twister there. And other like related quotes, things of that nature. I'm going to go ahead and come up here and just click this back button. So just like your internet browser, you can go back if you want to, but you can click into anything here. This is kind of just your home setup page, which I should mention can be customized how you want as well. So like here's some front page like news, some big things happening. Putin wants Ukraine ceasefire on front line, says this news source. You could click into that, learn more about it, et cetera, et cetera. I also have a tab here for lifestyle and entertainment, FX and MM, investment banking. Well, I can come into this little settings wheel here and click edit. And if I didn't really care about the lifestyle and entertainment news, I don't really think that affects me or what I'm trying to look at, like I can change this. So I can say, hey, I want to look at some banking and finance stuff. I want financial services here on my homepage. So I go ahead and update that, and it's going to change this to like kind of financial services and news type of stuff. If I scroll down, you can see there's far more options for me to jump into. Again, this is just the basic home page where you can maybe see some top things at a glance if you want to, but then you can kind of dive into your different workflows and things of that nature. So let's go ahead and start clicking into some of these and see what they do. And again, I guess I should reiterate this. So I know that I'm showing you guys a lot of information today. Don't worry about remembering everything. What I'm hoping that you'll get out of this, maybe you'll see 1 or 2 or 3 features that you really like and that you think might be useful to help you in your trading analysis or to help you learn more about the markets. And then, you know, I recommend giving it a trial and kind of getting in here and testing things out for yourself. So don't be overwhelmed by the things that I'm going through or how fast I'm diving through different data fields and things like that. I'm just trying to show you guys a lot of neat features in here. And if you like some of them, well, hey, get a trial, test it out for yourself, dive deeper, and see what else you can learn, because we're not even going to scratch the surface today of what's available inside of here, but I'm just hoping I can find a few things that might be useful for you. So this first link here, time and sales. I'm going to go ahead and click into this, and this just opens up a time and sales app. It kind of just has often the last thing you are looking at inside of here. So let's just update this to like say Ford, just to give an example. And now this is gonna open up the time and sales for Ford. So I can see like, you know, the trade size here, the best bid, bid size, best ask, etc. So I get all that time and sales information. And then there's a lot of other things inside of here too. I just full screen this for you guys. So we can come into here, and if I want to see the volume weighted average price, I can get a chart of the volume weighted average price for Ford right here. If I wanted to look at the money flow, I could do that. If I just wanted to look at the, you know, lift ask and the hit bid log, I can click into that. So lots of different kind of features and things for me to jump into out of that time and sales app, or just look at the trade log here. And this is updating as well, so you can see new bids and asks coming in right here. All right, so that's just one of the many apps that we could have up here under the equity quick links. Another favorite of mine, where I spend a lot of my time, is inside of this company overview page. So this is just opening up the Thomson Reuters Corp. Let's actually keep Ford as our example, just because it's one letter, so it's easy for me to pull up. And everybody knows Ford for the most part. I would imagine everyone knows what it is. I'm seeing, just looking at the question list over here, it looks like those are old questions from the last speaker. All right, so let me keep going. All right, so this page here, yes, is a spot where you might spend a lot of your time. Often I'll like run a scan or an exploration inside of Metastock and find some things that are hitting my technical analysis kind of criteria and might be considering trading. And then I can come inside of Zenith here, and I might save them inside of a monitored list or something of that nature. But then I'll just quickly check out like the overview page for the companies and see if there's any big breaking news that might be driving some of the pricing. Or I really like to look at these star mine models here, which kind of give different ratings to different types of technical and fundamental kind of indicators. And you can see the bullish models here and the bearish models here, or you can kind of come in here and see like all models to get an idea of what they are. If you're not really sure like what these might mean, you can come here, and pretty much everything inside of Zenith allows you to like click on it and learn more. So this field definition for value momentum. So this is saying the current regional percentile rank. So it's ranked between 1 and 100 on a percentage scale of the security based on the value momentum model. Value signals exploit the tendency of stock prices to exhibit mean reversion. Over and undervalued securities tend to revert to more moderate valuation levels over time. This is a long one that I chose to read here. Momentum signals exploit the tendency of trends to continue. Upgrades to analyst estimates and or recommendations tend to correlate to future upgrades and lead future price moves. So I'm going to just jump down to the bottom here. It says the combination of global ranks on each of these 4 inputs results in the overall star mine value momentum score for a security. Some of these are a little more straightforward when looking at them, like let's see if there's a credit risk one. Yeah, like credit risk here, this is letting you know what's the chance basically that they could default within the next year based off their credit and risk. This is taking just a moment to load here. Again, I am kind of getting over a cold, so my internet here at home isn't quite as good as the office. Apologies for that. So just things of that nature. So if you care about, like, you know, certain things like this, it can be really helpful if you're trying to choose one security over another to get into for a trade, and one has, you know, much better, more bullish star mine models or something of that nature. This is just something you can real quickly get a look at, see how the company stands, and kind of go from there. That's just one example of things on this page. I guess up at the top, if we just want to go top down, considering I just skipped this one though. So we have price performance up here, and I have a little chart. It's on 3 months. I can click in, go to 6 months, 1 year. So you do get a lot of real basic charting inside of Zenith. I'll actually show you guys like some more charts later on, but a lot of like just your basic technicals and things like that are available inside of here. But if you really want to get deep into your technical analysis, I recommend pairing Zenith with Metastock. Zenith is actually the data feed for Metastock real time. So if you have Metastock real time, you also have access to this platform as well. This platform just, or Zenith at least, provides the pricing data to Metastock. But if you want to get in and see all the fundamental data and the news and everything, you'll want to open up Zenith. So scrolling down, we also have like estimates here and relative valuation, and it's ranking it here as well. So you can see it's ranked really well. The estimates, you can see the mean estimate, the smart estimate, etc. We can come down here and look at other factors as well. We can look at segments. We can go into their capital structure and things of that nature. I'm going to scroll back up here to the top. You can see it has just like news for the company overview page. So anything going on that's talking about Ford, it's going to pop up in here. I can also kind of change some of these around in here if I wanted to keep this defaulted to investor briefs or global press or something of that nature. You can also see events, upcoming events here. And again, I can dive into a lot of this stuff too. I also like that it shows the peers, so I can see, okay, how's kind of the whole automotive kind of industry doing here, all the different individual companies. I can look at their market cap, how much they've changed today, kind of see a lot of what's going on here. Here's recommendations, so analysts per level. You can see a lot of them are kind of just in here in this hold phase. We have 15 are at a hold. We have 5 at a strong buy, 4 in a buy, 3 in a sell, 1 in a strong sell. And then here's kind of just auto and truck manufacturers in general. They're a little bit more bullish in general than they are on Ford, just by looking at this at a glance. You know, that's a lot of useful information. If I wanted to get even more details on this, again, I can click inside of pretty much anything and learn more about it. So now I can see a lot more about those recommendations and how they're leveled out. I can come over here and see, you know, where's the price at in relationship to those recommending it as a buy or a hold or a sell, etc. What's the target price for the security? What's the recommendation mean, etc. So lots of neat little tidbits of information to pull from here. You can see it also kind of put me in this estimate tabs up here. So a lot of those things we're seeing on the overview page can also just be accessed up here. Let's see if I can come back into the overview here. This is kind of where we just were. It actually helps to kind of see what all is on this page, or what else I can learn about just one specific company. And again, there's over 70,000 companies listed inside of here for you to kind of look into and further review. but we can get all of the different news information on it. We can open up several different types of charts. Again, this is just a real basic one, so if you want to get an idea of trend or where it's been lately, but then you can come in here and look at a time and sales chart. You can see price performance, volume weighted average price, the market movers, or you can just open up, a regular old chart as well. If I come into estimates, we can see more about the estimates, the recommendations and target prices is what we were just kind of looking at. We can look at internal estimates, forecasts, etc. Also, something I love, the financials. You can get a ton of financial information out of here too. I mean, you can open up their income statements, you can look at their balance sheet, you can see their cash flow, you can see major customers, you can look at it profit and risk values and things of that nature. Let's go ahead and click into one, look at an example. Here's a balance sheet. It's going to take just a moment to load, especially when I'm broadcasting, but normally this is really quick. All right, so here it goes. You can see this is in millions, but I can come here and I can see, with this one, I have like the last 6 years of data, it looks like, on this page, and lots of info here. I can see the cash and short-term investments. I can see their total current assets over the years and kind of see how that's changed, etc. One thing you'll note on a lot of the pages that I'm on too, you can often just come over here and you can switch it in to see a chart, or you can download to Excel. And so if you want to take this data and put it in Excel and track it in there, and set up different formulas to help provide you with other indicators or things like that, you can do that. There's actually an app that links into Excel, so you can also have this data getting updated live inside of Excel as well. And then there's a ton of different stuff that you can do in there. I'm hoping to have a little bit of time to show you guys some of that towards the end. But let's just keep kind of going through this company overview page, and then we'll go check out some other things that I wanted to show you guys as well. All right, so if I come over here, we can look at events. We can see corporate events, company deals that are going on, dividend information as well. You can also look at ownership summary, see what like indices or ETFs it's a part of, or big owners of the security as well. You can look at their debt structures. Look at their peers, go into their major index competitors or sector competitors and do analysis there. You can look at their derivatives. You can get options data. I think this is a big thing to show for any of you options traders. So here's some of the most traded options here, and we have like a chart so I can see the put call ratio here. I can come down and it has all the different RICs for the different options and things, and I can pull up quotes for them. I can open these up in a chart, etc. Grab this bar here, show you guys a little bit more of this. And this is just some of the most traded. We can also come in to just this option tab, and then I'm able to kind of go in here, set my expiration date. Say if I want to look at puts or calls, the expiry date, etc. So you can kind of come in here and get all of your different options data in here as well as look at like the futures and things like that. Another menu I really like here too is this kind of just 360 menu. This is where you get that full, like, what's everything going on? And you can see all these different types of quick charts I could just open up that has some neat things. Like I really like the seasonal chart as well. This is something I like to look at. So you can get, a season chart here and kind of check that out and see how it's performed during different time periods over the years here. And again, this is kind of just showing you ways to jump into a lot of the different things that we were just looking at. So this is actually where I spend a lot of time inside of Metastock, or not Metastock, Metastock Zenith, is I'll often do my technical analysis in Metastock, do some scans, get a list of securities, and then I'll come inside of here, look at the company overview page and check out all these different indicators and things, and just learn as much as I can about everything. I find it to be really useful, especially if I'm not sure like which companies maybe I want to stick with, or if I want to get an idea of any like news that might be coming up that's going to be affecting things or something of that nature. Wonderful to quickly come in here and do that. All right, let's go back to the home page. So I'm going to come back up here into the search bar. And I should say this search bar is absolutely fantastic. I have this whole bar actually at the top just open pretty much 24/7. because also when I'm doing stuff inside of Metastock, maybe I'll forget the name of a symbol or something that I wanted to look up, and just having this always up at the top, I can come in here and like I can start typing in a company name. So if I type in Tesla, then it just auto populates things here. So it lets me know this is the symbol. And look, here's that overview page I could go into. If I just want to look at a quote, I can go into here. It also lets me know there's like the hotkeys for it. So if I just typed in Tesla or TSLA.O and then a Q after, I know that's going to open up the quote app. And here's the quote app, just giving you the straightforward numbers that you might want to look at, the quote, the pricing, etc. with that quote app. But also, I mean, there's other things that you can open up in here too. Like if I just type in home, it knows, hey, maybe you want to go to the home page again. So let's go ahead and do that. And okay, so here's that home page. I'm going to actually close down that other one. I actually think I opened this twice, but back to that home page. So yeah, this is again, that homepage where you can go in and dive into other things. I think this is just kind of a good place for me to go back to, so I can make sure I'm not skipping over too much stuff, because there's a lot of things we can kind of go into and access from here. So we saw like kind of the time and sales app, the company overview page. Let's go ahead and check out the economic monitor. So I have this opening up on across two screens here. Let me kind of shorten this down. All right, so here's some economic events here that are up and coming. I can see like the country, it shows their flag here, so I know where this is coming from. The indicator name that it's looking at, the period, its actual rate, the prior. I can come in here and open up the actual press release, and I can see the press release for whatever this indicator or event or whatever it may be. So I could open that up, but this is a lot. Maybe I don't want to look at all this, or I don't care about all this stuff, so I can come in here and say, okay, yeah, I just want to look at stuff for next week. So we'll do the week ahead. All event types, you know, I don't want all event types. Maybe I only want to see things regarding energy and environment and things regarding like prices. And then search items, there's all sorts of different search items and things like that that I could come in here. I'll just kind of leave that as is. And you'll notice some of these have these bars attached here. Well, what this is, it's kind of like the rating. Is this expected to have a low market impact, a medium, or a high market impact, or not rated currently? It's selecting all of them. Well, let's go ahead and turn those off. And I only want to see things that are going to be a high market impact. I'm going to go ahead and hit update here. Okay, and now this just dwindled that list down from hundreds of things to, you know, just around a dozen or so. And now I can come in here and see, okay, these things are expected to have a large impact. Here's where they're coming from, etc. Well, you know, maybe I wanted to change this up some more. I could come in here if I only wanted to look at things from the United States. I could do that and set it that way, etc. Lots of different things to kind of play with in here. And again, you'll notice you can export this data to Excel. You can also come in here and look at like a calendar view, which those items don't have on the today view, which is what I was looking at. And then you can come in from the economic events too and just look at central bank and political events. That's like a highlighted one. Then you have the calendar here, again, all the events over here. So I really like that. I think this is also a really useful tool if you're trying to see, you know, what's maybe coming up, what might be affecting the securities that I'm looking at or that I'm currently active in trades with. It's always good to kind of go in and look those things up there. All right, let's move along. We already looked at some option stuff on Ford. Well, here's just kind of another app in general. Here is the Option Watch app itself. It's opening up on the Thomson Reuters. I can come back here and type in the symbol I want again. Let's just look at Ford, and it's letting me know the important things that are within the settings the last time I used my Option Watch here. Index movers and sector analysis. Let's go ahead and look at this one. Now I can see major index movers. Ooh, can I grab this in the corner like I'm trying? There we go. We can look at different stocks. It has that. Let's change this to like, oh, enter a stock, Rick, it says. Let's just keep our example Ford. There we go. So I pull up Ford. Now it's telling me all the indices that Ford is kind of inside of in here. I can come in here and look at like sectors and pull up charts. I can say the type of view that I want to review. I can look at stocks that are major movers right now. You can see their percent change. I can sort by these things, the last price, the percent change. So DEC has moved up 13% today, etc. Ross has moved up 10%. I can double click on it, see like the indices and things that it's inside of, get all sorts of different data and analysis right here. So another pretty cool feature. All right, yeah, so let's also check out these top equity indices. And, you know, I can kind of see just this hot bar here, but maybe I want to get, you know, more information. Let's go ahead and pop this out into its own monitor here to look at these top equities that are showing. So this is the Monitor app, and this is, again, this is one of my favorite apps, something that I use all the time inside of Zenith and is a core part of my workspaces too. And I think maybe we'll kind of start to flow into like some workspace setup in just a moment here after I show you guys some of the stuff inside of this Monitor app. So this is kind of just a defaulted one that opened up with those top indices that I was showing. On this one, I don't have the data applied for like the Dow and the S&P 500, but I can still see all the index constituents inside of here. I just click that drop down arrow. Oops. I don't know that it, and now I can see everything that's inside of that. So tons of securities here. This is just showing the basics, the last, the net, the percent change, etc. Well, you can do so much more in here. Let's say webinar monitor. So I can come in here and add a field, and then if I click inside of this field, you're gonna see there's like hundreds of different things that I can monitor inside of this app. I mean, just in this, there's over 1,000 just inside of this one category right here. And you can put in all sorts of different unique things. So like if I wanted to put in like an indicator value or something, so I can put in like the Bollinger upper band level. And if I want to monitor that, I can add that in here. If I wanted to look at the 52-week high and low range, I can go ahead and add that in here, and it's going to put this little chart in here that makes it really easy to see at a glance where it stands on like the 52-week high and low range. All sorts of really neat stuff that you can put inside of here. Let's see. What's another just fun example to look at? I don't know. You can, the options are endless. Look at this, guys. There's literally thousands of different things that I can put into my monitored app here and monitor. And then you can really customize this page here. So if I wanted to come in here and like insert a header row, and let's say I wanted to call this crypto. And so I put crypto right there. And then right here, I can just type in a security. So let's look at Bitcoin. So this is telling me here, BTC equals is the Bitcoin to US dollar FX spot price. So I'm just going to go ahead and click that. And now it's populated Bitcoin into here. I can also have like Ethereum. If I don't know the security or something, if I just start like typing in the name for it, etc., then it's going to populate it into here. I know this one's just ETH equals. So I'll put it in. And then again, too, yeah, you can put in like an index, and then you just click the drop down arrow, and it's going to show you everything within that index too, or you can close that up. You could also have it. There's different ways to really just customize this, I guess, is what I'm trying to get at. And you can see all the different things that you can go into in here. You can also kind of create some custom templates and things of that nature up here. If you just wanted, you know, another one where maybe let's do another header row, and we call this one auto for automotive, and I had Ford and Tesla and GM here, etc. And I can like close and open these down too. But then I want to show you guys where Zenith starts to get like really cool and how you can kind of start to create your own workstation and be monitoring things. Okay, so this is a list of top indices and a couple of things that I kind of have on my watch list that I want to be working with. Okay, great. Well, so let's go ahead and take this Monitor app, and I'm going to make it a little bit smaller here. And I'm just going to kind of come up here and place it on the top right. You'll see it's actually kind of sticking to those edges there. All right, and now let's also open up the News Monitor app. So here is the News Monitor app, and I guess for a moment I'll just kind of show you guys what's in here. So let's keep an example. We've been using Ford. So it's going to show me all the top things for Ford, but I can come in here and do a lot of customization and changing of things inside of here. So if I wanted to tell it where to be pulling the news from, I can do that. If I wanted to have things from social media, etc., I can do that. If I also wanted other things up here, so more than just Ford, if I also wanted to see things that have to do with like oil and gas, so this is actually Ford and oil and gas. So it's bringing up stories that just have those. I could also come into the settings, and so I can come in here and set it to like highlight headlines and other different things of that nature. Let's see here. So maybe if it also talks about Bitcoin, I want it to come in and highlight it in green. All right, so now everything inside of this news monitor here that has like Bitcoin is being highlighted in green. If you also, you know, and it doesn't have to be a specific indicator too. It can, as you can see here, it can be a topic or a portfolio or a country. So if it's talking about the United States, then I want it to highlight red if it has that inside of it too. So you can kind of put in specific highlights and things of that nature to be popping up on your news monitor, etc., and really just customize this and have it set up so if a really big story that's meeting everything you're trying to monitor comes in, you know, you can easily see it. Well, let's say, you know, yeah, I always like to have kind of this news monitor. I just double clicked it to kind of take it out of full screen. I always want to have this as well. So I'm going to come here and just attach this to here. So now these are actually attached together. So I'm kind of starting to create my own little workspace or station here. Let's say, you know, I also want a financial chart. So let's actually go with Tesla. And then if I put a C after, oh, actually I forgot what is financial chart, CHTF. It would have been faster had I known, had I remembered the full thing. Otherwise, I could have just clicked on it. But let's also pull up a financial chart. And this one's just on Tesla. I'm going to go ahead and click it right here. You know, I think actually I want to have the chart be a little bit bigger. It looks like it's actually pulled down here a little. Let's pull it up. Oops, I clicked behind it. Let's pull this up a little higher. All right, we're starting to put together a little workstation here. You know, another kind of favorite application here of mine is this sidebar application. So I'm gonna put this right here. Oh, that was getting a little shaky. That was interesting. And we'll drag this down and have the sidebar be on, oops, I dragged it onto the other screen. Have my sidebar be right there. Oh. Sorry guys, my other monitor over here is at a much different resolution. It's mixing me up a little bit when I drag it over there. Anyways, okay, it looks like we have space for like one more thing that I might want to add in right here. Actually, we still need this sidebar to be a little bit smaller. I'm trying a different workflow on this, guys. So bear with me here. This wasn't 100% rehearsed because I like to do it a little different each time in the case I have repeat watchers. All right, one more app. I don't really know what other app to stick in there, so I'm actually just going to click in here and let's pull up my apps and let's look at this together. Okay, what might be good to have there? Hey, a quote. That looks great. So I'm going to take this quote. I'm going to make it a little bit smaller so that it fits into this gap I've created here. All right, so now I've created this workspace. Oops, I meant to right click on this, and this is my webinar workspace now. All right, and now I have this saved as a workspace, so this always pulls up. But this gets so much better, guys. Just wait. I was kind of waiting for the grand reveal here to kind of connect this together and make it a little bit nicer and make it so all of these applications are working together. I can come in here and click this chain here, and this is basically linking it to other things. And I'm going to assign this as red, my monitor application here. I'm going to come into my news. I'm going to assign this as red. I'm going to put my sidebar as red. Okay, you'll see the sidebar started to populate here. So you can actually see from this monitored list here, I have 11 gainers, 8 decliners, 5 are unchanged off of what's showing here. So this is starting to do some things for me. If I come down to my chart, I'm going to make this red. My quote, let's make this red. So they're all red now, right? Okay, now let's come down here and click on Bitcoin. So I click that inside of my monitor, and now all my applications that I have linked to this are changing. So remember, I highlighted Bitcoin as green, so that's why this is also green. Maybe that's not the best color for readability, but also I can see the sidebar app is populating some news in here for me, letting me know our currency performance against Bitcoin. My chart here updated to be just Bitcoin, and my quote app are updated to Bitcoin. And you can do this with all the different apps in here, and there are tons of different applications for you to come in here and play with, and it really makes it so you can have this cool, unique workstation. And you can have multiple workspaces too. So I'm going to show you guys just a couple more examples. If I come here, I can go to open workspaces and open some of my others. Let's just look at like a test template, because you can also take a template to kind of help you get started and then adjust the template to what you might like. So let's open up a chart workspace. So this is just showing multiple different charting applications here. All right, so I have a real-time chart. And again, I can come in here and I can apply. I could look at news at certain dates. I can put in earnings on my chart here. I can apply basic indicators and things of that nature. But this is just showing kind of another workstation that's saved. I can come in here and look at technical analysis chart, etc. This is another workspace. And I can link these in different ways too. You can see this chart here is linked to this quote center over here. So if I clicked something in here, like Apple, these are going to update to Apple because these are linked together. But now if I wanted to go back into my other workspace, it's like clicking another tab in your web browser. So I just click this one and it opens up here. So really cool. There's some really cool workspaces in here. Let's look at, oh, I did see more. Let's open up another just kind of test template to get an idea of what it looks like. Let's look at some of the most popular apps. All right, and see, you can have multiple tabs here. You can have this set up in different ways. So if you wanted to have a home page here and then multiple tabs within this window here, I can have that. So you'll notice that a lot on many of them. I have like the world clock here. So just really cool stuff here, guys. And you can really kind of customize this to show what you want and see what you want. I'm seeing if any questions are coming in. Got to scroll down over here. Oh, is that one? Nope. Okay. Yeah. So there's so many different things you can do in here. I know this is kind of just information overload, but I hope you guys can see kind of the power that's in here. They literally put over $1 billion into the creation of this platform. And, you know, initially it was only offered to like professionals and institutions, and they can be charged anywhere from like $350 to like $3,500 a month for very similar access to this. However, because we have such a good partnership with, you know, Reuters, Refinitiv, LSEG, you know, we're able to offer a retail version of this at a fraction of the price. You can get access to everything you've seen me do today for as little as $110 a month on our FX package. If you also wanted to get like live instant data instead of a 10 to 15 minute delay on like your stocks or futures, we have regional plans that are just $165 a month plus the exchange fees, which range from just like a couple of dollars on a lot of like the stocks. But if you're like trying to get live futures, the exchange fees for that can be a bit higher. Yeah, so a fraction of the price of what a lot of those professionals are paying, and you still get all of this like live data and access inside of here. I'm going to go ahead and look on my other tab here where I have some notes to see if I missed any of the big things I wanted to show you guys. And again, I've hardly scratched the surface. I know there's a lot of data on the screen and a lot of things going on, but really we haven't dived deep into any of these things, not like thoroughly. I'm just trying to give an overview of things I think you guys might find useful. And you can have multiple monitors too. So different lists, like I like to keep one with my active trades. So I always have my active trades in a list and I can see, values on them. I can set up alerts in here on news, on price changes, things of that nature. The news features in here are also amazing too. I mean, there's so many different things you can do. You can also sign up for newsletters. This is one of my favorite things here. Oops, I think that needs an S there. So if I come into here, I could subscribe to different newsletters here if I wanted to get those. One that I really like to look at is the day ahead for North America. Because again, you get so much news inside of this platform and we weren't really diving too deep into any of that. This is a newsletter that's put out each day at kind of the end of the day to let you know the day ahead. So I'm going to click into here and open this up and you can just see it's going to give me a quick market recap of what happened throughout the day. Again, this was from yesterday, so this is the day ahead for Friday or today. What's coming up, things to keep an eye on, key economic events that'll be happening, some of the big changes that happen throughout the day on stocks, commodities, things of that nature. I can just read this quick story here. It's just a few pages generally and get a lot of great information on the upcoming day ahead. And there's all sorts of different newsletters that you can subscribe to. If I come in here and go back into the newsletter app, you can see a bunch of different things in there to sign up for. So that is one thing I wanted to show to you guys because I really like looking at that. And let's see here. Oh, Greg thinks I'm doing great. My notifications, I paused them for an hour. So that means I've just hit my hour here. Those are going to start popping up. That means I should get back into my slide. Let me come over here and get that pulled up. I'm going to actually put myself back on Do Not Disturb. So nothing else shows up. Okay. Well, hopefully if I clear these. There we go. Let's jump back into the slide here. All right, so just we're going to recap over some things here. So, I mean, you have access to all different markets inside of here. So you get agriculture, commodities, emerging markets, equities, FX, metals, energy, all of it, guys. And there's so many different ways to analyze the data too, and so many different things that you can do with it. I know there was a lot on those screens. As you can see, there's a lot going on here, but you can click into all of that stuff and then just continue to learn more about the markets and, follow along with, major news stories and things like that. And it's gonna really help educate you on the markets and help give you so much more information. I have buddies that'll call me sometimes. They're like, hey, I was thinking about taking a trade on this based off some indicators. I know you're always looking at that Zenith. Can you tell me some of the information out of there when they're on the go or something if they're, but yeah, anyways, to keep going, I know I'm at my time here. I wanted to show you guys some of the templates in Excel. So you do get the Reuters for icon here. I think I actually have some of them open. I'm just gonna pull this over really quick. So the Refinitiv icon here, I can come in like this is an analyst details. I can get information on that. Stuff on here can update. You can just come in here and open up the templates and go into this template library here. And then there's tons of different templates for things that you can open up inside of Excel. And then you can do different analysis inside of Excel with it. So I really like that feature as well. We kind of touched on this. I mean, there's so much data in here, you guys, over 40 million items for you to different kind of info items for you to access and go through. It's very intuitive. That search bar is going to help you find anything that you need inside of there. And the pricing, I mean, you absolutely cannot beat this. So, I mean, Zenith is basically, I would say, we're like one of the biggest competitors to the Bloomberg terminal, but again, at a fraction of the price here, guys. You can get the FX for just $110 a month, which will still give you all the news and global delay data on other stocks, or $165 if you want like the stocks or the futures packages and you want to make those live. You can add exchange fees to get that stuff live. So it's really great there. If you guys were interested in learning more about this, if you have specific questions on some of the indicators or items inside there, you want to know how it works, hey, we have guys available right now to continue to answer your questions and to help get you set up on a trial. You can go to our chat room, metastock.com/sales chat, or to sign up to get 3 months for the price of one, just go to metastock.com/EK341, and that's going to allow you to sign up for a 3-month trial. And it looks like I'm already past my time. So with all of that, thank you guys so much. Had a great time demonstrating for you today, and I hope you're able to learn something. And Jeff, passing it over to you.
All right. Thanks, Bobby. That was good. Great job.
Yeah, my pleasure.
Also, we think Greg and I think you should leave your alerts on all the time because we had quite a bit of fun spamming you. Wow. While they were on.
Fantastic. Thanks,
Cool.
Jeff.
Thanks a lot, Bobby.
Yep.
Okay, I'm going to do this. It's going to take charge again real quick. And it's such a great platform. You know, it is, we see reviews. It's like getting Bloomberg for $110 per month. So much stuff in there. So if you have any questions, it is included with the extended trial offer that we have too. I should have had that slide next. But if you do get the extended trial of Metastock real time, where you buy a month and get 2 months free, you're going to get Metastock plus everything he just showed you. And it's a huge platform. The one thing that I really like, though, is a lot of what they spent time and money on was kind of engineering how to get the information that was important to you. And so they spent a lot of time on what they called search and nav at the time. So if you want to get that extended trial with Metastock, go to metastock.com/conf promo. Give us a call, 800-882-3040 if you have any questions about stuff that's available and want to confirm, or metastock.com/sales chat. So that's definitely something that's available. I do want to say thank you right now to TechnoTrader. We've talked about all of our great sponsors so much over the weekend, but I really do. Oops, that's right. Okay, I thought I grabbed the wrong link there. I really do appreciate Martha supporting the events and helping us put them together. If you want to get some free courses, go to that little URL right here at the bottom here. I typed it in and put it in the chat. Greg is going to put it in the YouTube chat. Click on it. There's some free courses that you can go through. Martha's great. She's a CMT. She's done such a great job. So we also, in the interest of kind of keeping things moving today, already did a prize winner. So I had Greg actually pull another number for me during the section. It was 1626. The prize winner that we have for it, 1626, is John P. in the USA with a Gmail account. John, if you're listening, you won a Macmillan Analysis newsletter package. So on Monday, we had Larry McMillan come in. Back when I could talk on Monday, we had Larry McMillan come in. Great technician, great options analyst. He does newsletters. You're going to get a subscription to all three of them. It's a value of $728. You're going to get the option strategist, the daily strategist, and the daily volume alerts. So what'll happen is early next week you'll get reached out to by somebody over the Macmillan Corporate. Answer that email. That's not spam. Macmillan, by someone over at the Macmillan Corporation. So the link again for the extended trial, if you want to get it for Metastock, metastock.com/conf promo, metastock.com/sales chat. Any questions for us at all, 800-882-3040. Our next guest is Zaheer Anwari. Let me go ahead and make him a presenter right now. We've had Zaheer in here for a number of times now. I actually lost count. He might remember though, but Zaheer always does such a great job. We love having him on here. I really kind of I like his style, to just kind of put it out that way. So Zaheer, I can see your screen. Let me unmute you so we can hear you. Oh, I'm going to send you an unmute request. Looks like we still need to unmute your audio.
Hey, Jeff.
All right, I can hear you. Cool. All right, I can hear you. I can see you. Are you planning on sharing your webcam?
Not today, if that's okay.
No, totally optional. I just wanted to make sure I could help you if you wanted to. So with that being said, I can hear you, I can see you, and it's your turn. Go.
Fantastic. Right. Hi, guys. Yeah, that was a brilliant little presentation Bobby did previously. I also learnt that he's got his notifications on. So if he doesn't get back to me on an email, I've learnt something today. So thanks for that, Jeff. Right, guys, I hope you're all well. I hope you've had a great week of webinars, because Metastock puts excellent events together, and I've had the pleasure of doing these events for the Metastock team for over a year now. I think my first event or my first webinar was at the end of 2022. So it's been a really nice journey with Metastock, and it has now resulted in what we have called the Market Advantage Toolkit, which I am going to be demonstrating to you guys today. So let's dive straight in. The title of today's webinar is Discovering Overlooked Stocks, Create Wealth Beyond the Media Hype. Now, something that I struggled with when I started my personal journey in the early 2000s was knowing what stocks to invest in. And that really is the foundation of a portfolio. Where is the money? What I found myself doing was going online and doing my research, usually based around the hype that I was finding online, and then buying into stocks that everyone seemed to be talking about. And that sort of process never really gained me any momentum, and I started getting frustrated with that. So that took me on a journey to actually creating a system where I could find the right stocks and then translate those stocks ultimately into profits, because that's what counts. Is one thing finding the stocks, the second step then is understanding how to translate that into profit. A book I highly recommend, a book that was instrumental in my personal journey, was Way of the Turtle by Curtis Faith. Way of the Turtle by Curtis Faith. That's when I discovered trend following and understanding what it meant to find trending assets and having them in the portfolio, and then rebalancing the portfolio as time went on. And if you can get that process, then you've got a system that you can use consistently year in, year out. And then ultimately all the hype and whatever's going on out there in terms of on social media and the real world, it just becomes disconnected to the way you manage your portfolio. So let's dive in. What I'm going to talk about today is first and foremost the S&P 500. We're going to have a look at that and how I use the S&P 500 to really establish market conditions, because if you can start with the S&P 500, then everything else falls into place. The S&P 500 is a great proxy, a great indicator of the overall market conditions. So we can focus on the S&P, let that dictate our decisions, and then we dive into the real sort of intricacies of what the Market Advantage Toolkit can do to find stocks and then invest in those stocks. And we'll end with a Q&A as well at the end, guys. Okay, so let's dive straight into the Market Advantage Toolkit. So, Bobby, can you just give me the green light that you can see my screen here? I'll just be sort of bouncing between Metastock and my slides. So I just want to make sure that you can see that. Jeffrey, sorry. Yeah, thank you. Okay, so I am going to first start with the S&P 500. Don't worry too much about what's going on at the moment. I'll come back to how we sort of get into the, as I said, the intricacies of what Metastock is doing. By the way, I just want to say congratulations to the Metastock team. They've done a wonderful job with this, the new look platform. It looks fantastic. It looks slick, and you know, it's just a real joy to work with now. There's so many nice little features that weren't previously available that Metastock have now added, and I'm sure the platform will just get better and better over time. So well done, guys. It's looking fantastic. So we're going to start with the S&P 500. As I said, the S&P 500 is an indicator of market conditions. So if the S&P 500 is bullish, we can then start buying into the stock market. If it's bearish, then you can either look to sell your stocks and then potentially even reverse your stance and start shorting the market, which you would have done, let's say, in 2000 when the tech bubble burst, again in 2008 when we had the financial meltdown. You know, those were really two key bear markets in our history. Since 2009, we haven't really had a bear market. We've just been in this massive bull run. So I've been long since 2009. And I'm going to show you how I have established these sort of conditions. So this is a typical setup of mine. What you can see here is how I do my analysis. In the top left, I've got the monthly time frame. In the top right, I've got the weekly time frame, and then across the bottom, I've got two daily charts, bottom left and bottom right. So we're going to ignore the daily in the bottom right for now. We'll just park that for a second. We're really going to focus on the monthly, the weekly, and then the daily in the bottom left corner. When I'm doing my analysis, what I'm looking for is multi-time frame analysis. Multi-time frame analysis. What I want is the time frames I'm looking at to be all moving in the same direction. Now, as I said at the very beginning, I'm a trend follower. So what I'm looking for are the large market moves. Now, of course, people will sometimes turn around and say, well, there's trends on all time frames. I don't agree with that. If we look at the definition of a trend is something that stays in play for a long period of time. A perfect example of that is fashion. Fashion trends stay in play for months to years, good trends. Trends that don't last are called fads, and they're quickly forgotten about. So that's really how you want to differentiate between long-term trends and short-term trends. The profit is made on long-term trends. Short-term trends tend to be a little bit more difficult to make consistent returns on. So because I'm looking at for the bigger moves, those big trends in the market, I'm looking at the monthly, the weekly, and the daily time frame. And what I want is all three moving in the same direction. So let's start with the monthly time frame. Let's do a good analysis of what is happening on the S&P 500. So if I just compress the chart, and I'm just going to go back in time and highlight those real bear markets that I mentioned. Here's 2000 to 2002. That's the bear market when the tech bubble burst. Then we had the recovery, came back to what was then the previous all-time high. And then from 2007 to 2009, we had that financial meltdown. That was the second bear market. Since that low of 2009, the S&P 500 has been in this massive bull run. Now, of course, we had this correction in 2022, but that correction, I'm going to look at it in the weekly time frame in a second. That correction didn't turn into a bear market. It was just a very healthy correction that was needed. The S&P 500 found support in October of 2022, and since then, we've been in this next leg up. And where is the S&P 500 likely to move towards? Well, based on its behavior and based on the psychology of where pricing likes to move towards, it's going to move towards the next round number. So the 6,000 level is that likely level that the S&P 500 is going to move towards. Now, one of the key factors that I look for is, if I just go back to this here, what you can see is that there's a solid green line and a solid red line. This green line is the highest point of last year. If you look at the S&P 500, since January, it's been printing new all-time highs. So when an asset, particularly the indices, when they are printing new all-time highs, we are very much in a bull market. There's no disputing that. Now, if you go online, if you go onto LinkedIn, for example, you constantly hear people trying to call market tops. The market can't go any higher. I recently heard that on NVIDIA. of all stocks, someone talking about Nvidia, someone who has a very significant following on LinkedIn saying that Nvidia couldn't go any higher. We, in fact, we had Kathy Wood come out publicly at the start of last year saying that she sold her Nvidia shares because Nvidia won't go any higher. I mean, if you look at what Nvidia has done since last year, it has skyrocketed. It's gone through $1,000 based on the earnings yesterday. The gap up of 7%. And not only that, they have now announced a 10-to-1 stock split, which is going to take place next month. So that really shows the confidence in the investors of how high they can expect Nvidia to keep on going. One of the first rules of investing is to ignore opinions, including your own, and really just focus on what the market is telling you. That's the source of truth. So the S&P has been on a very good recovery since October 2022. It's been rising. It recovered from the decline of 2022, since the low of 2022 through 2023, recovered very, very nicely. And then at the start of this year, the S&P 500 has been printing new all-time highs. If we go to the weekly time frame, now here's what you need to know about the S&P 500 on the weekly time frame. On the weekly time frame, I have two main indicators that you need to be aware of. It's a little bit scrunched up because there are some pivot levels, but what you'll notice is there's the black line, which is the 200 simple moving average, and this sort of red maroon line, which is the 50 simple moving average. If you look at October 2022, the S&P 500 came to the 200 simple moving average, bounced off it, and has been recovering. Now, if we cast our minds back to the start of 2022, the end of 2022, start of 2023, all we heard about on our media channels was the talk of failing banks. You remember that, guys? That's all we heard about for weeks on end. And of course, that would instill a lot of fear in the general public. But if you compare it to what's actually happened, the S&P 500 recovered, started recovering, started moving to the upside. So when our media channels were telling us about failing banks, the S&P 500 was actually recovering. And I mentioned this on my LinkedIn profile. I said that it's now at the 200 simple moving average on the weekly, we're likely to see a recovery. And the reason for that is because going back to what I was saying about the bear market, 2007, 2008, 2009, that financial meltdown, that was the last time the S&P 500 broke through the 200 simple moving average. It then recovered, moved above the 200 simple moving average in 2010. And since 2010, it's been using the 200 simple moving average as a trampoline. It did it in 2011, went through a big run, came back and retested it in 2016, went through a big run, came back and retested it in 2018. We then had this nice recovery, and the S&P and the stock market in general was in a bull market. But then, of course, we had that little talked about events that just seems to have disappeared altogether. We know it as the pandemic or COVID-19. There was that correction where the S&P fell at 35% in a couple of months. And then, of course, we all went into lockdown. Everyone was online, and all the massive tech stocks all then started really rallying. And it wasn't just the tech stocks. This is something that I'm going to cover as we go through today's training. It wasn't just tech stocks. There's 11 major sectors in the US stock market. And a couple of other stocks that did very, very well were stocks like the industrial stocks, because, of course, companies like ODFL, freight lines, companies that were transporting goods around the country, they were still in progress. They were still working. So those stocks went on to do very, very well. So it wasn't just tech stocks, but for the everyday individual, all they would really focus on is tech stocks. And that tends to be the norm as well. You go online and all we ever hear about is FANG stocks, but there's thousands of stocks that are for 31 years straight, because no other platform can do what Metastock does with such speed and with such clinicalness. It's a fantastic scanner. It just cannot be beaten. So going back to the bounce of the S&P 500 in 2022, I mentioned that we could see a recovery, and that was simply because that is what the S&P 500 has been doing. since 2011. It's been using the 200 SMA as a trampoline. Now we're very much in a bull market, and that is the direction you want to be going in. And then if we come down to the daily time frame just confirms what the weekly time frame is doing. So the way to look at it is that the weekly is big sister, the daily is little sister. If the weekly is trending and above all the moving averages, which it is, we want the daily to be doing that as well. And you can see that from the low of October of last year, the S&P has recovered significantly and is now printing new all-time highs. So with the S&P, with the S&P doing just that, with the S&P 500 doing just that, which is printing new all-time highs, we want to be bullish. That is the direction that we want to be going in. And so once the S&P has dictated a market direction, which is bullish, I then start going into what the market advantage toolkit can do. So first and foremost, the magic happens when you click on the P in the top left corner, which is called the Power Console. The Power Console will open up this wonderful little bit of kit. And you'll notice there's a number of functions on the left-hand side. One of the first functions that I go to is Explore, and that is your scanners. All of these scanners here that you can see with MAT, these are scanners that we have developed to do very particular, to scan the market in very particular ways. We've got a set of scanners you can see here that says UK, and you've got a set of scanners that say US. So here, as I'm based in the UK, the main markets that I focus on are the US stock market, the UK stock market, commodities, and currencies. Metastock will scan all of those based on the criteria that I'm looking for. So I use the UK scanners to scan the UK market, but they can also be used for other low to mid cap markets. So for example, we have a growing community in India, and of course, Metastock can be used to scan the stocks in the National Stock Exchange of India, which I'm going to show you as well in a second. So we can use those UK scanners. The US scanners are there for the main US markets. And of course, they can be used for other large cap markets as well. Now, if I just focus on some of the individual stocks, you can see that we've got scanners for breakouts and we've got scanners for pullbacks. That's for UK and US as well. If you go further down into US, we've got scanners for breakouts, we've got scanners for pullbacks, we've got scanners that do literally everything. Now, all of these scanners are explained in detail in a manual that comes with the Market Advantage Toolkit, a very thoroughly detailed manual that was put together by William, who's part of the Metastock team. It is a wonderful manual that will explain all of the scanners in detail. Now, the reason why you want breakout scanners and you want pullback scanners is because of the seasonal movement to the stock market. There's certain times of the year where the stock market is moving very quickly, and so you want to look for breakout opportunities. And then there's certain times of the year where the stock market is correcting. So for example, in April, the stock market went through a correction, 5%. The S&P 500 went through, I can't remember off the top of my head, somewhere like a 5%, 6-7% correction through April. That would have been an ideal time to turn to the pullback scanners and to scan the market for pullback opportunities. So most of the year, I'm always focusing on breakouts because that's how the market moves. But there are specific times of the year where pullbacks will come in, and then we want to turn to the pullback markets. Now, one of the new features which I like about Metastock is that you can actually favorite your scanners. You can see that there's a ton of scanners from all other different add-ons on here. So whichever scanners you like, you can then checkbox them and you can mark them in favorite. So you can see that currently the two main scanners that I'm using are UK breakout scanners and US breakout scanners, because the market has been in breakout territory. Last month, a couple of times I scanned for pullback opportunities, but I've been predominantly looking for breakouts since the start of last year when the bull market started coming in. Okay, and then what you do is go back to all explorations. Let's say we choose the US market right there. That's what I want to scan based on my scanners, my favorites. And then we can go down to the lists that are available. And you can see right here that in terms of the equities, North America markets, NASDAQ, New York Stock Exchange, and then New York Stock Exchange Amex. Those are the three main markets. And if you have a look at the number of stocks, guys, you're looking at somewhere between 7,000 to 8,000 stocks that Metastock will scan for you. And I can tell you that if you have a good internet connection and at the click of a button, Metastock will scan through all of those stocks and give you a list within about 10 minutes, it's fantastic. You can think of all the time and energy that you're going to save trying to have to manually go through even just a bunch of stocks, 100, 200 stocks. Metastock does all of that for you and gives you an initial list of high probability stocks based on the criteria that we have put into our scanners. All of the criteria that goes into the scanners are all explained in the manual. This isn't a black box system. The Market Advantage Toolkit is there to train people on a system that they can consistently use, not just themselves, but one that they can learn and then pass on to their kids and their loved ones. Because ultimately, guys, if you don't get on top of this, if you don't find a system that works consistently and helps you grow your money over the next 5, 10, 15, 20 years, who's going to teach your kids? Because the schooling system sure as hell isn't going to do it. It's down to you to learn this and then create a system and then pass it on to your kids to carry on your hard work. And, that's a fantastic legacy to leave behind, because a lot of people are behind on their wealth goals. They've got good money coming through in terms of what they're earning through their careers. They've got property. They've got it in certain places that generally are doing well. But when it comes to their own individual stocks portfolios, generally those are underperforming. And so a system like this will really help you get up to speed, particularly when you start compounding winning stocks. And that's really a big part of what the Market Advantage Toolkit helps with, which is compounding winning stocks. Okay, so at the click of a button, Metastock will go through 5, 6, 7,000 stocks, throw in UK stocks, commodities, currencies. You have a much bigger list, and it will then give you an initial list of 100, 200 stocks that you can then go through manually. So once you've gone through that, you can see here, for example, in Quote Center, all right, it looks like I cleaned up my list, but in Quote Center, normally you have a bunch of stocks. So let's say, for example, this one over here, and then you can see all the stocks that Metastocks, the scans will have produced. So on a very busy day, you could maybe have 100, 200, 300 stocks. On a more quiet day, you may have 20, 30, 40 stocks. It really depends on what the market is doing. If it's a very strong bullish day, you'll have a bigger list to go through. If it's not so bullish, you'll have a smaller list to go through. Then what we do is we go to chart, and we can then start manually analyzing some of the stocks that are being picked up. So you can see I've got two lists here. I've got one list which is for today, which is the NSE, that's the National Stock Exchange of India. I'm just going to go through some stocks that the MAT has found, and we're going to first start with the US stocks and some of the stocks that I'm actually in right now. So all of these stocks that I'm in right now, these have all been found using Metastock and the system that we have developed. Nothing goes into my portfolio that I have just gone online and found because everyone's talking about it. That's something that I gave up over a decade ago. What I have is a system that I have used consistently for the last 15 years. And generally, the portfolio performs at somewhere between 30 to 40% a year. Our positions that we've had in place since last year are running at around 60% profit. So you can really see how when you start getting into these winning trends and compounding them, that the return on your investment generally beats any other sort of investment method out there. Okay, so let's start with the first stock. The first stock is Amphenol, ticker symbol APH. Now, pay attention to how many of these stocks you actually know. As I said, guys, I'm in the UK, so a lot of these stocks I'm not familiar with. So when the scanners start picking them up and I start looking at their history, the first thing I think about is, God, that's an amazing stock. What does this company do? So I'll go away and have a quick little research. I don't allow that research to go into my analysis. I just want to know what that stock does. You know, some of these stocks are industrial stocks, they're basic material stocks, they're consumer discretionary stocks. You know, they're from all different sectors that I've never heard of because I'm here in the UK. Maybe some of you US guys will be familiar with them. But here's the beauty. When you have a scanner like Metastock finding going away and finding stocks that meet your criteria, and that criteria is stocks creating new all-time highs, volume, price. When you put the right criteria into the scanner, stocks like Amphenol will start coming up. I mean, look at the history of Amphenol, guys. It's undisputed. You can't dispute how good a stock it is just by looking at the monthly time frame. Its history goes back to the 90s when it was, $1 or $2 a stock. Now it's at 140, almost $140 a stock. It's got a very, very good performance history. And so that's one of the first things that you want to look at whenever these stocks start getting picked up by the MetaStock scanners, is how well has it performed in the past? And if it's a stock that's performed well in the past, then it's very likely to perform well in the future. Now, what I look for is what I call the 4PS method. It's something that I've developed. Over the years, in my early days, I came across things like Elliott waves and Fibonacci and Ichimoku clouds. And what I found was that they were just too subjective, way too subjective. What I wanted was a simpler method that allowed me to identify when to get into a stock. And the best time to get into a stock is right at the start of its trend up. So how do we identify that? Well, there's 4 phases that I look for. First phase is, as I just mentioned, does it have a good performance history? Amphenol does. Very, very good performance history. You can't deny how good of a stock it is. Very clean trends, very good moves to the upside. So that's phase 1. Phase 2, I'm looking for a sideways market or a base of at least 3 to 6 months. Think of it as the roots of a tree. The longer and thicker the roots of the tree, the bigger and taller the tree will grow. You want to apply that same logic to a consolidation period. Now, you've heard the expression, the longer the consolidation, the bigger the breakout. Everyone's heard of these expressions, but how do you execute on them? That's the most important aspect to these. You don't want them to just be theory and fancy words. You want to know how to identify it and execute it. So what I'm looking for, first of all, as I said, phase 1 is good performance history. Phase 2 is a sideways market of at least 3 to 6 months. So you can see that this sideways market started in December 2021, and then we had the breakout in November 2023. So that's almost a 2-year consolidation. That's a 2-year base. And then in October, November, December, that's when we started seeing movements out of this consolidation. So that's your phase 3. Phase 3 is that breakout from consolidation. And then phase 4 is when that momentum follows through and it starts trending. And you can see that the breakout happened around $90 and it's now trended to around $140. So I have been holding Amphenol now for the better part of 4 or 5 months, and it's only just started. Typically, I hold the stock for 12 to 18, maybe up to 24 months, because that's how long a trend can last. And you can see that based on its history. You can see, if you look at these trends, if you look at this trend here, that's October 2012 to March 2015, right? So you can see that these trends last for very, very long periods of time. So if a trend lasts for that long in the past, then it's very likely to repeat that going forward. Of course, it isn't guaranteed. There are no guarantees. We're playing on probabilities. But when you look for stocks that have good performance history, the stocks are in the probabilities, the odds are in your favor. We're continuously stacking the odds one by one by one. And that starts with choosing the right stocks, applying the 4PS method to refine that list, and then entering at the start of phase 4. Phase 4 is the start of the trend that's in play right now. So that's the monthly time frame. On the weekly time frame, what I have is very simple markers. I have a trend filter. You can see the bars are the green, gray, or red. If the bars are green, as they have been, as I said, since November of last year, the trend filter has remained green even through these pullbacks. And above the 50 simple moving average and above the 200 simple moving average and printing new all-time highs, then we have a bull market. Now, here's the beauty of MetaStock, guys. Can you see here it says bullish at the bottom? There's a ribbon. Basically, when the criteria is met, MetaStock will tell you that this stock is bullish. The criteria in the back end has all been met. And all of that is explained as well in the expert commentary. So if you go to view expert commentary, we have explained everything in the expert commentary as well. So all the criteria that goes into making that stock bullish is all explained. And even if the stock isn't bullish, then the criteria will change, and it will tell you, well, this stock isn't a good stock, and here are the reasons why. So all of that comes with the Market Advantage Toolkit pre-programmed. It's almost like your little man on the shoulder telling you, hey, like, this is a good stock. You do really want to consider this. So if you look at the monthly, we have the ribbon telling us that the monthly is bullish. We've got the ribbon telling us that the weekly is bullish. And then we've got the daily telling us that the daily is bullish. At the very beginning, I said what I'm looking for is multi-time frame analysis. Multi-time frame alignment. And so the software, Metastock, the Market Advantage Toolkit has been programmed to tell us very quickly whether there is multi-time frame alignment or not. So Amphenol, you can see it has remained aligned really since the start of the year. Very, very good stock. Now, when the monthly, the weekly, and daily are all aligned, we have those bullish ribbons telling us, yep, these are good stocks. We've looked at the history, we've done our analysis, and we've gone, yeah, this is a good stock. We then want to start considering, where do we enter? Where do we place our stop loss? Where do I want to compound? How am I going to exit this stock if it fails? That's where the daily in the bottom right comes in. So I'm just going to open up the daily in the bottom right. First of all, if I just compress it, all the diamonds, the green diamonds, those are your entry points. So it's the software is marking entry points. Notice that some of them are circles. Where they are circles, what that's telling you is that these are low probability entry points. You can either enter or you want to stand aside. If you enter, reduce your risk. So if your full risk is, say, 2% on a diamond, which is a high probability entry, then the circle is a low probability entry, and you may either choose to stand aside, which is typically what I do, or if you want to enter, you can enter at a reduced risk of, say, 0.5% or 1%, because the chances of returning a profit are reduced. Now, of course, we're looking in hindsight, and in hindsight, we can go, oh, yeah, we should have entered. But in real time, you have to be able to make a better decision. So we've got all of these little markers telling us, including the histogram here at the bottom. The green bars are high probability breakout bars. The red are low probability. The gray are neutral breakout bars. So again, we've got all of these fancy little tools that will consistently help you stack the odds in your favor to make the right decisions. Now, the bars are blue when the time frames align. So when the monthly, the weekly, and the daily, when they are all aligned, the bars on the daily turn blue. So you can see that since, as I mentioned, November, the bars have remained predominantly blue. Now, when the blue bars go, here's another little fancy trick that we have. When the blue bars disappear, what do? Well, remember, this is the breakout page. So what that's telling us is that go look at the pullback page. And on the pullback page, we have a different set of trend filters telling us that actually this is now set up for a pullback opportunity. So you can see how the pullback page and the breakout page work together to identify entry points within trending assets. Now, on top of that, you've got your stop losses, and you'll also notice these red lines across the bottom. This is our trailing stop loss line. Notice how well the trailing stop loss works, guys. If you took that position, as I mentioned, we've been holding Amphenol since around November. You can see that that trailing stop loss has not been hit. And that's because it's been the logic that has gone into the Market Advantage Toolkit we've been using for over a decade, almost 15 years. And the algorithms that have gone into this have been thoroughly not just back tested, but we actually use them to generate real results. As of last year, we had our hedge fund set up in Luxembourg, the Reversy fund. To have a hedge fund set up in Luxembourg, you've got to have a track record that you've got to hand over to auditors, and they've got to be able to verify that this is a legit track record. And we've done that for a number of years. So that system that we're using for our hedge fund is this very system right here. So this is not just a system that's been back tested. This is a system that has been verified and audited on real results. So that's Amphenol, guys. It's giving you the alignment with the blue bars. It's giving you the entry points. The purple marker up here is your compound level. So once you enter, and it moves towards this level, you can then start considering compounding or buying more of a winning asset. And guys, remember, that's really, really important. Winning assets, you want to be compounding. You don't want to just buy it once and hold it. You want to buy it again and again and again, but only do that for winning assets, not for losing assets. Losing assets, you want to cut out for a small loss. Winning assets, you want to keep on buying. Okay, so let's move on. Let's have a quick look at a couple of other stocks, just so that you get a feel for some of the other stocks that the Market Advantage Toolkit and the combination with Metastock has found. So let's start with Brown & Brown. This is another big stock. Look at Brown & Brown's history, guys. Fantastic history that goes way, way, way back, way back. This is a very, very old stock. Typically, I like to look for stocks with at least 5 to 10 years of history. And the reason for that is I can look at those 5 to 10 years and I can see whether it's trended well or not. If it's trended well, then that's a stock that's likely to trend well in the future. But I just need to apply the right entry. And what's that entry? Well, that's the 4 phases. Phase 1, a proven performance history. Phase 2 is this consolidation. Phase 3 was the breakout at the start of this year. And you can see that since the breakout, which was around $76, it's now trading at $89. So it's working its way up. Still a very, very new trend. This could potentially last for another year, another 18 months. But it's a stock that's in our portfolio right now. And it's a stock that's been in our portfolio numerous times over the years. If you look at the weekly, the trend filter is green. It's above the 50 SMA. It's above the 200 SMA. It's printing new all-time highs. You can see that the ribbon across the bottom is bullish. And then if you go to the daily in the bottom right, you can see that that criteria is met again. We have a bullish ribbon. We have a bullish ribbon at the bottom here. So what we have, guys, across all 3 time frames is alignment. The monthly, the weekly, and the daily, they are all aligned, saying that this is a bullish stock. So what we can do then is go into the daily in the bottom right. If I just compress the chart, you can see that the trend filter first started, well, it turned a little bit of blue here towards the end of 2023. But since the start of the year, it's been trending quite nicely. Went through a little bit of a correction in April. It's now moving back to the upside. All the entry points, depending on how you managed it, you may have exited your positions here. The trend may have failed, but it's now starting again. It's the next leg up. So we can start looking to add further positions into Brown & Brown. Okay, let's move on. Another good stock, Fiserv, I think it's pronounced, with Fiserv or Fiserv. I'm not 100% sure, but putting the name aside, look at its history, guys. Look at its performance from 2012 to 2020. Look at that 8-year performance. It went from around $14, $15 to $120 during that period. But more importantly, look how clean the trend is. That's what you want in a good stock, one that trends very, very nicely over weeks and months and years. We don't want it to just be in and out, in and out, in and out, all of that time and effort and energy for ultimately, very little in return. What you want is to buy some very good stocks, hold them for as long as possible, and then just keep on compounding. It then went through this consolidation, and you can see that since, again, the end of last year, start of this year, it's now printing new all-time highs. It's going through a bit of a correction, but that's okay, because there's been 1, 2, 3, 4, 5 green bars. There has to be some sort of correction at some point. It's now at around $150. It'll likely find support around here and then start moving towards $200. Now, if you look at it on the weekly time frame, on the weekly, it's green. And you can see that the ribbon is saying bullish, so the weekly time frame is aligned. The daily time frame was aligned, but you can see it's going through a bit of a correction, but that's okay. That's where a little bit of patience comes in. Again, that's a really, really key skill. Just because that alignment has been lost doesn't mean that the stock has failed or that it's time to sell. All it's doing is creating a little bit of a base. Look at the green trend filter. The trend filter remained green from December through to the high of March. So you're looking at 3 to 4 months. After every move, it consolidates. And it's just creating a really nice base right now. So what we're waiting for is the next breakout. That next breakout will mean another potential 3 to 4 month trend. So we've just got to apply patience right now. And then if we go to the daily in the bottom right, you can see that the bars were blue because they were all aligned, the time frames, and currently it's just going through a bit of a correction, a bit of a base. What we're waiting for now is the next breakout and the next move up. So even if you entered this stock and you held it for 3 months, 4 months, you may have made 1%, 2%, 3% profits on this particular stock. But if you add that to all the other stocks that would be in your portfolio and then keep on compounding those, these little bits of these little small percentages, they all add up, and you're doing it in a very safe and consistent way. Remember, we're not risking more than 1% or 2% per position. So you're not attached to any of these stocks that fail. You buy a bunch of stocks, risk 1%, cut out of the ones that fail, and hold on to the ones that perform well and keep on compounding. Okay, I'm just conscious of time, so I'm just going to move across and do one more stock. Google, guys, Google. Everyone knows Google, but not everyone knows how to actually buy the stock and when to buy the stock. Of course, Google is a giant of a stock. Very good performance history. It then went through this correction. The correction started back in 2021. And as of last month, it broke out. It started printing new all-time highs. So we got phase 1, phase 2, phase 3, and now in phase 4. We actually added our first position of Google into our portfolio this week. So this is a new stock in our portfolio. If you look at it on the weekly, we can see that it's printing new all-time highs. The trend filter is green. The ribbon is saying bullish. The 50 and the 200 simple moving averages are angling up, telling us that we're in the start of a new bull trend. And then we've got that on the daily as well in the bottom left corner. You can see that the ribbon is saying bullish. So all 3 time frames are aligned. We are in a bull market. This is the time to get into Google and start buying. So where do you buy? Well, that's where the daily comes in. You can see that we have the entry points. The entry points have been coming in through last April. We've had a number of entry points. The bars are blue, saying that there is very much a trend in play. There's multi-time frame alignment in play. Now is the time to really start considering buying Google and adding it into your portfolio. All right, and I'm just going to do a similar sort of analysis for the Indian stock market. Now, the Indian stock market has just been phenomenal since last year. I don't know how many people. I know. Metastock has a massive community in India, and it's a growing community. So, if you have been buying the right stocks, then the Indian stock market has been extremely profitable. So I'm just going to do a quick analysis again of the Indian stock market. Generally, what tends to happen is that the US market leads, and then all the other markets in the world follow. Last year, it was actually the Indian stock market that was leading, and all other stock markets were playing catch up. So if we have a look at the monthly time frame, we can see that since this area here, which was June of 2023, the S&P 500 the Nifty 50, which is the Indian S&P 500, broke out, started printing new all-time highs. So you can see that this has been happening since June of last year. The Nifty has been printing new all-time highs. It's just been pushing up and up and up. So we've had multi-time frame alignment on the Nifty since last year. The monthly's been bullish, the weekly's been bullish, the daily has been bullish. We've had alignment across all 3 time frames. If we go to the daily in the bottom left, compress the chart, you can see that going back to June of last year, that's when the bars started turning blue, when we had multi-time frame alignment. Of course, there's been pullbacks along the way, but in general, it's been a very clean trending move to the upside. Now, here's the thing. As I mentioned, what we want are stocks that are performing better than the index. So if you just looked at the US market, we are investing in stocks that are moving up faster and quicker than the index, which means that we can make more profit in the same amount of time. You don't want to limit yourself to just investing in a tracker fund. A tracker fund may get you 8%, 9% a year. And don't forget, you've got to sit through declines and wait for your money to grow if you do have a bear market. Whereas if you invest in individual stocks that are outperforming the index, you make more money. You can push that towards that 30% mark, which over the course of 20 years, the difference is millions in terms of return on investment. But more importantly, you have more control over your portfolio as well. So you can exit stocks that aren't performing. You can change your stance from bullish to bearish and short the market. So there's a lot more flexibility in investing in stocks that are outperforming the market. So let me give you an example of some of the stocks that we've shared with our Indian community. Action Construct. You can see that Action Construct has been trending since the end of 2022. It broke up around 300 rupees and it peaked at 1600 rupees. A massive trend, a massive move to the upside. And applying the same logic across the monthly, the weekly, and the daily, doing that multi-time frame analysis. Rec Limited is another stock that we have shared with our community members. Broke out around 140 rupees. And if you look at where it is now, 554 rupees. A very, very, very good stock. And Siemens, I mean, you just have to look at its performance. Fantastic performance. Really pushing on to new all-time highs. These are what are known as trending stocks. Stocks that are outperforming the market, outperforming the indices. If you get into those stocks early, catch those trends at the start of phase 4, hold them for 12 to 18 months, and then rebalance, go back to the scanners, rebalance. You have a process that is simple to learn and execute and ultimately will deliver consistent returns. And it's often things that people are challenges that people are dealing with. As I said, what stocks to invest in and then how to invest in those stocks. MetaStock and the Market Advantage Toolkit answers all of those questions for you. Yes, there's a learning phase, but all good things require a learning phase. But once you get into it, it's a very straightforward process to execute. Okay, so I am now just going to switch back to my slides just to wrap up. Okay, so ultimately, all good investors must have an edge. If you cannot define your edge, you don't have one. And if you don't have an edge, you will get eaten by someone who does. So if you find yourself struggling and not getting the consistency, ultimately what you're doing is you're giving your money away to someone who has an edge. So you've got to be able to define your edge. And so you can see how the Market Advantage Toolkit will give you that edge. You've got a process from start to finish. So what do you get with that? Well, you get the explorers to scan for the strongest stocks from the most robust sectors. So you get all the scanners. So this is your process. Use the 4-screen setup. So the tools, the expert advisors, the commentary to shortlist the very best stocks. I put them into tier A and tier B. So tier A are the ones in my portfolio. Tier B are watch list stocks, and then stocks move up from A to B. From down from A to B, and up from B to A. Create a risk management framework. Typically, never risk more than 2% per position. And then once you have done your multi-time frame analysis and the monthly, weekly, and daily all align, you then use the daily in the bottom right to place your positions in your broker account. So that's where you'll find your entry points, your stop losses, your compound levels, your trading stop losses. It's all there for you. And then place a set of positions. Focus on 10 good stocks. Out of those 10 stocks, cut out of the losers for a small loss. So let's say 3 of them fail. That's a 3% loss. Let's say 3 of them are break even. So you don't make money, you don't lose any money. So you're still at a 3% loss. But let's say the remaining 4 stocks all return you 10% each over the next 12 months. Minus your losses, that's a 36% return. If you can do that consistently every year, that is how you will grow your portfolio. Cut out losers with a small loss, strategically hold and compound winners only. So with the Market Advantage Toolkit, they're compound levels as well. So you'll know precisely where to start buying more of a winning asset. And then use the trading stop loss, which I showed you in the bottom right, to manage your position. So again, it removes all the guesswork. Where do you exit your positions? You know, there's all of these questions that need to be answered. Getting into the stock is actually quite easy. You just click a button. But all of the build up into before you click that button needs to be thought about. And then once you're in the stock, how are you going to manage it? That needs to be thought about. Generally, these are all sort of afterthoughts. You've got to have a process. You can't leave anything to guesswork. You can't leave anything to chance. Everything must be pre-thought out so you know precisely what you are going to do at any moment in time. Take profit and rebalance every 12 to 18 months and then repeat the process and stay objective. Don't have favorites. Look at all the stocks that I've covered today and then compare them to your portfolio. if you look at your portfolio and if you're buying stocks because you like those stocks or you like the CEO or you like the products, you're buying stocks based on attachments. You're not buying stocks based on a process. If you look at what we've gone through in the last hour, we've gone through a process, and that process determines which stocks make it into your portfolio. Okay, so this is what you get. You get the 16 explorations, you get the 16 expert advisors, you get 11 bespoke indicators, you get 11 templates. As I said, you get a detailed manual explaining everything, and then you get a full support structure from not just myself and my team, but also a wonderful support structure from Metastock, guys. And I can tell you that the support structure at Metastock is second to none. Your emails will be answered timely. There's always someone at the end of a call. The online help and the calls is brilliant. It's a brilliant team and it's a brilliant setup at Metastock. Okay, in terms of subscription, guys, it's $199 a month. This is the full subscription. The Market Advantage Toolkit went live last year. We've had a promotion for all our new subscribers, which is $99 a month. I have spoken to my team, and we will be removing this subscription in the very, very near future, the reduced price. And we are now going to start charging what the Market Advantage Toolkit is actually worth, which is that full price. There is also a one-time offer of $5,000. That's a 50% reduction. The full price is $10,000. One-time offer is now currently going for $5,000. These prices will be available for just a very near future, and then we will be reverting back to the full price of what the Market Advantage Toolkit is actually worth. I am now going to go over to Jeff to see if there are any questions.
Good job, Zaheer. Yeah, we do have one question. Actually, we have two questions. Brad wants to know, do you use ATR stops to manage risk?
Absolutely. That's a great question. And that is exactly what you should be doing. Every stock has its own characteristic. So let's say, for example, Microsoft, that may move, let's say, $7 every week on average. Whereas you compare that to NVIDIA, and NVIDIA may move $30 every 5 days on average. So you want to look at that and then take those values and then use a multiplier. So, you could take ATR 5 times 2 or ATR 5 times 3, whatever your strategy is. So yes, absolutely. ATR is the way to do it.
Peter had a similar question, and I think that just answered it. He wanted to know, when do you decide, when a stock fails, when do you decide to get out? Is there a specific ATR you like to look at?
Yes, of course. I mean, that's all programmed in the Market Advantage Toolkit. Our initial stop loss has a particular setting. Our trailing stop losses are based on a particular setting. And so here's a little tip. More often than not, the reason why people generally struggle with stop losses is that they are too tight. They either don't use them or they're too tight. What you want is to find that sweet spot where you must use a stop loss. Not using a stop loss is just a fatal mistake. You must use a stop loss, but it needs to be wide enough that it allows a trend to develop over time. Remember, when you first get triggered into a position, the market will start moving against you. This is known as tree shaking or stop hunting. So you want to avoid that. How do you avoid that? Well, it's very simple. Have a wide stop loss. And then when the stock starts moving in your favor, then start compounding so that you can start accelerating the profit phase, but still keeping your risk managed. So have those thoughts in place and make sure that your stop losses and your trailing stop losses are always in place, but wide enough for a trend to develop, but also wide enough that if it's been hit, the trend has clearly failed.
Awesome. Thank you. Let me go ahead and kind of show people where to get this. Ellen says a bargain. So I appreciate that. It definitely is a really, really good offer for this. And I would get it while you can get it for $99 per month. So to do that, you can go to metastock.com/SublimeX. You can give us a call at 800-882-3040, or you can go to metastock.com/saleschat. Now, with the subscription products, there's no commitment to keep leasing it every month. Give it a go. If it's something that works for you, you're welcome to keep it. Zaheer, thank you for coming in, spending an hour with us. Appreciate it. You did a great job.
It's always a pleasure, Jeff. So thank you for having me. And, well done for a brilliant week. I was in and out listening to some of the speakers, and it's always a pleasure to be on these webinars with you.
I love them too. Thank you very much, and mostly because I get to learn things. So thank you.
And
Hey,
great
Jeff.
job with the new platform, Jeff. It's a real pleasure to work with. So
Yeah. Oh, yeah. There's been such good feedback on it. Absolutely love it. It looks like absolutely appreciate that. Thanks, Zaheer.
it looks
Jeff.
like it belongs in the 21st century now. So,
Yeah. Oh,
really facelift. It's
not
brilliant.
only that, I like the new layout, kind of the idea that you can kind of have different environments, and that they also. Yeah, I'm going to talk a little bit about all the stuff that was added, but I freaking love it. It's so good. So
Yeah, brilliant.
appreciate that.
Yes.
No, Brad, it's just you just paid $99 per month. It's not there's not an upfront cost. It's just $99 per month. Thank you, Zaheer.
Cheers. Bye.
All right.
Jeffrey Gibby.
All right, let me do this. All
Jeff,
right.
can you hear me?
And oh yeah, I do have the presentation already.
Jeff,
Greg,
can
did
you
you
hear
need
me?
something?
Yeah.
I can hear you.
I stepped away from my desk and somebody made me the presenter, which kind of whacked things out. So you might want to. I'm afraid to click
Oh.
on anything over here. There. Now I think
me
you
do
have
that.
the person trying to. Get
Okay. Hey, Anne-Marie. All right, let me do this real quick. We'll come right to you. I do want to say before we have an awesome guest next, but they've all been awesome. But okay, Alan, the phone number is 800. Thank you for asking. 800-882-3040. And that should go to the whole chat right now. Do want to say thank you to CMT Association for sponsoring today's event, in addition to Stocks and Commodities and TechnoTrader. CMT Association, if you are looking to manage money, or if you want to have more assets under management, or if you want 3 cool letters after your name, CMT is a really good, well-respected, well-reputed organization. CMTassociation.org. Let's get right on to Anne-Marie. Anne, it's great to have you. I'm going to go ahead and turn the presentation over to you. I'm just trying to think of, some of the best things to say about you. There's so many good things to say about you. Anne-Marie and I have been working for a while together. And I love bringing Anne-Marie in because you can see it right here. She loves to look at charts. She loves to give you her opinion on charts. And she is, when it comes to like understanding companies and stuff like that, we'll be in a webinar and somebody will be like, well, what about this stock? And I've never heard of it. She's like, oh yeah, here's who, and she'll just rattle off a whole bunch of information. Her knowledge about the market is deep, and it's always great to have her on here. So I'm going to get out of the way. Go for it. Oh, I can't hear you, though. I still can't hear you. Do you have a microphone? If you can unplug it and plug it back in, that works almost all the time. I know you can hear me because you're acting like you can hear me. Nope.
What about nope?
Yes.
Oh,
Don't touch it again.
yeah. Okay.
Alan says
right,
you work
well,
with
greetings.
Kramer. Is that true? Okay.
What's
all right.
that?
Well, Alan says you work with Kramer a lot.
Jim Kramer?
I guess.
I don't know. I mean,
He's not talking about you.
Seinfeld, maybe. Kramer from Seinfeld.
Okay. Oh, all right. I'm going to get out of the way. We can hear you now. Thank you.
All right, super. Thanks so much, Jeff. Welcome, everybody. Thank you so much for taking time to spend some time with me. I love being around Jeff. I think we've known each other before either of us had wrinkles. And so it's been a hot minute. And I love being in the markets. And what I wanted to share today, yes, I have a magnificent add-on that the geniuses at Metastock have helped build when I talk to them about my mechanical flow. So I give all the cred to them about helping me turn my signals into actionable spaces. But what I really wanted to do today is talk to us a little bit about a macro view and then go directly into stocks that have pressure events that could put them much higher. So a lot of times, particularly right now, we're looking at stocks and we're thinking to ourselves, wow, they feel really high priced, and some of them are, but we're getting into a new space, and that new space is going to require a number of things that might bring leadership into different spots. And so that's where I want to talk to us about. Forgive me, I am in a hotel room. I have been traveling. My daughter-in-law is very ill with the third child they have. And so normally I'm not sitting in a little box that is a hotel room, because that is very claustrophobic for me. So that being said, now you know where I am, Bloomsburg, Pennsylvania, little town in I think it's northeastern Pennsylvania, but let's jump into it. So the big macro things to talk about are, first of all, everybody, including Zaheer, talking about NVIDIA. And we can start by looking at that framework about how AI is going to change the landscape. Some of us are very concerned about it. Some of us are not concerned at all about it. Some of us are embracing it. Some of us are terrified of it. Fact of the matter is, we're here in the markets to learn to make money out of what it is that we're seeing. And we don't necessarily have to jump right in and go, I want to buy $1,000 stock today. Now, the wonderful thing is, in June, they are going to split 10 for 1. And what that's going to do is fuel another set of buying. Now, why? Well, it's because people with small portfolios that are going to advisors that are saying, hey, listen, I want exposure to AI. NVIDIA is the strongest in the bunch. What can I do there? And they, in times past, would say, hey, listen, you can't really buy 0.5% of this or 1% of that, because you don't, it is too big for your portfolio. They are going to drive a whole new set of buying for NVIDIA. So I think NVIDIA has got a lot more room to run. We can look at a lot of stocks that have split 2, 3, and 4 times, and they really have been very, very good. And so I think NVIDIA is going to have some legs in the future. So we are going to look at a couple of those things, but we're also going to look at ancillary things. What is going to fuel the movement of AI? And it's going to be energy and the inputs that make these components. And so on top of that, we're running into a commodity super cycle where you can see all kinds of things breaking out. I think we have silver breaking out of sort of a 10-year base. And, you know, if we've got a 10-year base and we look at a cup and a handle, let me see if okay, so a cup and handle is first the cup and then the little handle. And so we've just done a cup. And so this handle should pull back a little bit and bring us to the upside. But what happens with traders is we get impatient. We say, I don't want to wait for the pullback. What if it doesn't come? What am I going to do? And so on and so forth. And the big thing to say to yourself is, listen, if I'm that kind of a personality type, then I'm going to buy 10 shares and I'm going to wait for the right price. Because what happens to traders, the reason that we underperform in general, the person who buys and holds, the reason that happens is simply because we take our money out of the market too early without letting it run. Zaheer talked about that specifically in the last session. Or we wait until something looks like it's really running and then we jump in. So we really compound by getting out too early and getting in too late and giving ourselves not enough room to grow. So when you buy an add-on from Metastock, what the add-on is telling you to, I hate to sound like a broken record, but Zaheer had so many fantastic points and did so many things really well in his presentation. He says, listen, if you have something and it's going well, dip in the pool on a pullback and buy again. And so you can start with some introductory positions. But today, I'm going to talk about energy and the components that build energy, and then a couple of other things that make you go, all right, well, I am, trying to be well-rounded here. And so this is what I'm going to do. So let's start it off by looking at the new Metastock 19. Boy, do I love this new look. It's absolutely fantastic. Absolutely love it. All right, we're going to start here with Schneider Electric. And so I don't know how many of us actually know Schneider Electric, but it's a very nice, it is a well-run company that has been a little bit out of favor in times past. And so what we are seeing is that it's been sitting in a generally sideways patch for a fair number of years. But on these pullback actions, they have been normally very good choices for upward growth. So, and of course, we're looking at target-rich trades, which I do love. If you just simply have the Metastock platform, listen, you can put yourself up a momentum indicator, put yourself up a trend indicator, and work through the system. My desire is for you to just get into the Metastock environment and learn it, and then realize that the folks like us who have add-ons are going to be bringing more and more support to you, particularly if you purchase this add-on at Target Rich Trades. We are going to put up some Zoom meetings for folks that are with the platform and getting better at the platform, and talk about what the expert commentary is saying, what the charts are looking like. We're just going to be in the fray with you a bit more as we move into the next stage of development in the market and development with each other in the space. So right now, because we're looking at longer term holds, I'm going to look at weekly charts. And the weekly charts have just triggered a little bit of a buy zone. So this buy zone is saying, hey, you want to watch the diamonds here. The green diamonds show frontline support. Red diamonds show frontline resistance. And so this is going to be your support motion, 20, for the trade in the current space, round at about 22. Okay, so that is 10%. So you might want to say, perhaps it'll pull back a little more. But if I want to buy it now, I'm going to put out a position there, and I'm going to say, I'm going to do that. My thought is, I am so cheap. I love to wait for the sale on stocks. I absolutely love waiting for the sale on stocks, and the sale on stocks look like this. One of my favorite people in the whole trading world is Brian Shannon, and he says something super important. He says, buy the strength after the dip. So here we had a first dip, it bounced, but then it gave us a new low. Here, it's much closer. If we look to the left, it's much closer to these levels down here. And that's where the real strength is going to build. So what I would like to see is what we like to call, what is that word that just left my head? Because My brain is fried here on a Friday afternoon. We want to see structure building because the traders are saying, hey, every time it comes back here, I'm going to buy. So set an alert for Schneider Electric somewhere around $21 and then make that support 1% wide instead, 5% wide instead of 10% wide. And you begin an accumulation here when it pops into the take profit zones. You take a little bit off, and when it comes back into the buy zones, you add a little bit more and you just ride it up the rail. This has got 50% and potentially much more. What does Schneider Electric do? Oh, well, now they call Schneider National. They used to be called Schneider Electric. They make components for the parts that chips and switches and that sort of thing sit in. And we are going to have a gigantic boon in our infrastructure because we are going to need an incredible amount of energy to build out data centers and the things that need the power to build these chips. We're going to be in an incredible space of energy moving to the next environment. Now, next one I want to look at is advanced micro devices. Now, here's the thing about micro devices. It has not behaved as well as the others. But what it did do is it came down here into an important 150 mark and buyers began to hold. Now, my suspicion is that we are probably going to be sideways into the latter part of the election cycle. August and September are usually the weakest months of the year for us. And so this is a space where we go, you know what? I'm going to look at that 150 marker and I'm going to say, when it gets there, maybe I choose an option and I say, you know what? I'm going to sell the 120 puts and collect the premium on it. And if it comes into 120, I'm going to accumulate the stock because literally it's got an incredible amount of congestion at that 120 area. If we take a look at it on the weekly, we can see that the price action there at that 120 is just tremendous congestion, and it should hold very, very nicely. That's what I like with AMD. If you're saying to yourself, I am not getting on the NVIDIA wagon, a lot of us have this space where we go, I don't care if everybody else is doing it. I'm not doing it. Nothing wrong with that. Here's an alternative for you that I like. I mean, I like advanced micro devices, though, to be very honest, they have done a lot more poorly than I wanted them to do, but they're holding a space that's got a good setup. So I would say, listen, wait for it to double bottom and then nibble in. And my thought would be nibble in using an option event like a short put spread. You sell the 120, you buy the 110, you collect the profit in between, or you sell the 120 outright and you go, you know what? If it comes in there, I'm going to accumulate the stock because over the next several years, this is going to be a very good choice. Now, let's take a look at alternative energy. I am not a huge fan of alternative energy. I'm just going to be completely frank. Not a fan. However, one of the absolute strongest and top performers has been First Solar. Two things hit me when I take a look at this chart. One, it's been sitting basing literally since 2020. Yeah, the third quarter of 2022. So almost 2 years, right? Almost 2 years sitting sideways. And all of a sudden, boom, right off to the races, explodes to the upside. So explosions to the upside happen for two reasons. One, A lot of people are short and they say, yeah, I hear you, but I'm going to short this thing at the top and that's going to be it. Well, here's the thing. If you sell short and the price starts moving up, it gets very painful. And people have to run for the fire escapes to get out of their short trade. And that means that they're going to buy to get out of the short trade, and it's going to shove the price action extremely high. Now, has First Solar ever had a move like this? No, it hasn't. Now, has it had a big move on very big volume? Well, yes. See this volume, 31 million? The next time, this had 33 million, and it was a tight candle body that moved sideways and then continued to grind to the north. This one is going to have a choice to make. My thought is, due to the current environment, it's very likely to pull back first, either come in and retest 200 or come in just above it where these old sell zones are, and old resistance is going to become new support. For this one, I would say, let's go down to the daily and watch the rotations here to see how it's holding. Frankly, it's doing really well, right? This one has got a ton of action all the way to the upside, right? Here's our buy zone setup, comes in, moves up and up and up, still looks really good. Take a little bit of profit, it says, but the trade is still along. But it's very far from something like, I don't know, a 14 exponential moving average. It's pretty far from it. And so your expectation would be, I need to find a dip to go through. So here's a really great thing that I like to do. Here it is right here. You go to the candlestick that has the most volume and you say the following. All right, as long as it holds over the top of this candlestick, the people who got involved on this candlestick are still making money. They're still doing great. You put another line on the bottom and you go, as long as they come into this line, 213, and they hold it, they're going to be in great shape for more, for more buyers to come in. The big picture here is, can I hold the midline? My apologies, my allergies kill me. That's 231. So now that we have this, the ideal buy is at 231, not at the current line in the sand that is, 275 or whatever that number is right now. Okay, so put an alert. A lot of times we want to go, oh my gosh, I don't want to miss it. Listen, nothing moves straight up without coming back just a little bit for you. If you are saying to yourself, well, I don't want to miss it, consider a short put spread that's bullish and consider it at the 215 to 210 short put spread and get yourself positioned like that and just wait for it. Be patient. It will come back more than likely. Absolutely will come back more than likely. It might take a little bit of time, but you can also say, okay, I'm going to buy it here at 278, but I'm just going to buy a very small position. And that small position, I'm going to say, you know what? My stop is going to be $249, right? That's what it's going to give me, $249, and I'll be in good shape from there. You can do that, right? It could stop you out, or you could say, I'm just buying a couple of shares. And if each share loses, $100 coming back, I'll just be down $200 in my portfolio. And then it'll be at the real add point, and then I can add to the position. Okay, that is my thought with First Solar. All right, here's the next one. also a huge fan. The most energy effective way that we know of creating electricity comes from uranium. Okay? Now, uranium is very choppy chart. Very, very, very choppy. But it is also something that has been rising since January. Now, a lot of people go, yeah, Anne-Marie, but if we're going to buy a nuclear plant, it's going to take 10 years. And here's the thing. The only reason it takes 10 years is because of legislation. And so the second that this gets a footing and legislation comes back a little bit, I mean, that doesn't mean nobody wants to have a uranium plant in their backyard. But what we can do is make it easier for us to build the right kind of equipment in the right kind of way so that we can build energy in functional and adaptive ways. And uranium has almost doubled in price from its lows in July of 2022, May of 2022, right? The low is $18, right? And so, I mean, it's almost at 36. So it's almost 100%. That being said, if you're looking at this and you're saying, all right, maybe I do want to buy uranium. How do I want to buy it? A little bit at a time. A little bit at a time. Let's take a look at a monthly chart. Look at where uranium has been. 2011, right? Fukushima, somewhere around here. Fukushima. Everybody just went bananas over it. And then, you know, X, Y, or Z happened after that. This is a very strong rounding pattern, and it is getting some traction. And so, full disclosure, I own uranium. Henceforth, my chatter about uranium. So this is going to be an absolutely fantastic item to have. And if we look at past price and we get better buy-ins, we're going to be looking at potentially old levels at, you know, $120. And that is pretty good. So that is my thought. Nibble in a little at a time. You don't bet the farm because you're going to have the boom and bust, and it's going to pull back and it's going to move forward. And so the question is, how do I accumulate? A little bit at a time. Right now, it's in the middle of a buy event. And so you could say, hey, I'm going to buy the dips. This looks pretty good. Volume rising, momentum rising, trend rising. I'm going to buy that dip. And so you could say, hey, you know, I'm going to buy it when it gets to 30, or I'm going to buy it. I'm going to buy some more when it gets to 27, and I'm going to buy a little bit more when it gets to 25. Why? Because this is a 10-year hold. This isn't, we're cost averaging into this because it is something that is going to be required for us to have the energy to mine all the Bitcoin and to drive all these chip makers from their data centers, right? We have no way to capture geothermal heat unless, you know, you're living in Finland, and they've already done that, right? So there, we don't have, our drilling is not good enough to do that sort of thing, to capture geothermal heat. And solar heat and wind are both very unreliable. Sorry, I talk with my hands a lot and I'm bumping my mic. Forgive me about that. Next one, silver. Everybody talking about the silver to gold ratio. Look at how long silver has been sitting in a trough. Let's go to the monthlies. Silver's been sitting in a trough, literally, I don't know, what do we got? 2013. Now, why are we looking at silver? Well, one, this is a very ugly cup and handle, but it's a cup and handle nevertheless. A breakout above 30 easily could take us to 50 and higher. Gold is moving very rapidly, pullbacks or buy zones, right, in gold. Silver is also starting to move, but it's moving much more slowly. So when it catches up, it's going to be a big catch up. So what would we like to do? We want to buy it a little bit at a time, accumulate on the pullbacks. Now, that's easy to say, folks, but it's very, very hard to look at someone and say, listen, I understand what you'd like to do with your portfolio, but here's what I'd recommend. See how fast this has moved up? Why don't you wait for it to come back to 22, 23, and then buy yourself some? Or even at 20. What do you know? Well, you know, at 20, everybody hits the bid. What does that mean? Everybody runs out to buy some. It's just something that they want to do. So realize that the value areas, think about how Warren Buffett accumulates, right? He accumulates when things are generally distressed or when they are underpriced relative to performance and net value. We have to learn not to get caught up in the chase as things go higher, because we have a tendency to ignore risk. And as a person who's been trading in the market for 20 years, the only reason I'm here today is because I learned to manage that risk and manage it day to day and not get so caught up like the girl who knows there's a party across the street and wants to go and is staring in the windows and seeing everybody having a good time, but, you know, not heading over there and then finally not being able to take it and just running over, right? Just before the cops come or whatever, right? So here's the thing. We have to get accustomed to the fact that we want to make some choices about building wealth, that those choices have to come with opportunity cost, and that opportunity cost should be at the risk of giving up an event because your patience is in control. And that's really what you want to do. So is silver nice here? Yeah. You know what? I would sell a put spread or two close by. It's going to be, the volatility in silver is not very, very high. So it's just going to give you a few pennies if you sell it in the near term. If you sell it 90 days out, 120 days out, you might get something a little extra for that, but that's going to be it for that sort of thing. And you can make money being involved in silver, and at the same time, as it pulls back, you can go, okay, now it's down about 10% or so. I'm going to get myself some of this, and I'm going to continue to accumulate in the position. All right, next one. Microsoft is one of the, I guess they're one of the old guys on the lot, I would say, but they've got a lot to advance through. They've had a very nice run. They had earnings, sold off, did a wonderful job of recapturing the motion, and now sitting up here at these levels. Now, you'll notice I've got some levels marked here. Why? Because I own Microsoft, and my thought was, hey, we're going to get back to 431, but we might be in a sideways patch for a bit, so let's just pump the brakes on adding new positions at this particular time and say to ourselves, all right, I realize I had a buy zone several days ago. Actually, let's go to a weekly chart. Right? And so here's what we can see. we had selling pressure, and now the buying pressure is all the way up here. But the fact of the matter is, this is also a short setup. So here's what happens with a lot of systems that are triggered by a combination of trend, momentum, and price. A buy setup will begin to occur, but when a buy setup is here and you had a shorting event just nearby, right? Here's the thing. When you see a buy setup and a buy setup, but you can't get higher, and you've been sideways here, look for the last time you stopped out and think about buying there, right? Here was a buy setup. We went long, fantastic. Buy setup, huge. You take some profit, you add back, you move in again. But if you see buy setups here, look to the left for support, because that's going to tell you your risk. And indeed, a fair bit of risk here down at the 390 area and below. Now it's coming up here again. Could it do well? Absolutely. But the goal is look to the left and say, you know what, I really like that, but I'm not going to buy it until it's at 400. That is going to be a very natural thing. If you say, I don't want to do that, what if it goes to 500? It could. I don't think it's going to at this juncture. It could. But here's what you can do. You can say, all right, I'm going to sell the put spread. I'm going to sell a 400, 395 put spread. I'm going to take the profit while the chart comes back. Listen, if the chart doesn't come back, guess what it's going to do? What do all charts do when they're breaking out, right? Here's what they do. They break out and then they pull back to find the floor of support. And then they break out and then they pull back to find a floor of support. So the pullback will be coming your way. You just have to wait for it. But that's another great one. And we're all of these things that we're talking about really are things that we want to hold for years and just trade around them and allow our metastock add-ons to do this for us. Okay, here's a topping formation in gold. It's run a little bit ahead of itself, right? Top, you see this? That red diamond is resistance. Comes back here, same resistance. It tells you if you're long, you better take some profit at these price markers. And indeed, here we go, right? Coming right back into the buy signal. What do we see? Well, it's bullish. We have momentum. This is a 2-day event. And so the pullback action is going to give us some support. It absolutely is. So here's what we know. Although it feels like they're not going to come back, although we can pick a stock, I mean, we're even going to look at NVIDIA in just a minute. But if you look at this and you can go, oh my gosh, it's flying up. Listen, let it pull back, stabilize, build some structure before it moves up. Because here's the thing, this has moved up $40 without building structure. What do I mean by building structure? Sideways patches that hold tight, that tell you buyers are there to defend and sellers are also there to defend. But if we've had low, higher low, and we hold the higher low, the sellers will move out of the way because the buyers will force them in that general direction. My thought is pullback action could be the round 200 number, or it could come all the way back to 190. But gold is on the move. And so if you want to get involved, you start with a couple of shares and you say, all right, here's my thing. I'm buying when it goes on sale. When's it going on sale? When the market pulls back. When everybody gets nervous about, holy cow, what's going on with the market? You pick up 1 or 2 shares, a little bit at a time, and I am going to tell you the compounding event of buying on the cheap is astounding. Now, you might go, well, how do I know I'm buying on the cheap? When it comes into areas that you've seen before. So right now, if you go, well, am I buying on the cheap here? Well, I don't know, because you might be buying on the cheap if you want to get out up at the top of this range. But the last time we had structure where everybody said, no, this is where I buy, it's all the way down here at 190. I'd want to take an alert there and really get involved. But if you want to get involved before and you think it's going to move up, you sell that short put spread. All right, so this is the one lonely REIT that I have in here. It's commercial REIT, and let me talk to you a little bit about commercial credit. If you sit around and you listen to guys on the telly and on YouTube and on wherever, podcast, whatever, they're all talking about the very big, terrible, no good for nothing, fall to the death, going to sit in commercial credit. So here's the flip side. I don't know if you listen to Oak Tree. Oh, shucks. His name just fell right out of my head. Oh my God. Oak Tree Investment. You got to look. He is one of the biggest distressed credit buyers on the planet. Distressed debt is getting so much interest from private equity and people in the distressed debt situation that all of these loans that are upside down in commercial credit are getting bought up on the cheap. And so all the people that are thinking, oh, the sky is going to fall, distressed debt entities are picking them up and financing them across a long stretch and seeing what they can do to make the best of what's going on here. And so my suspicion is that this will bottom and it'll have some upside pressure. So let's go to see where that upside pressure could be and what price action might look like. Okay, so 300 looks like here's the last place they had solid structure on the downside from a monthly formation. Look at that, 2018 actually, 2018. So what do we think? Well, let's say there's something a little bit rough that might be going on there. The numbers I have that I'm looking at are 155 and then 120. Take a look at what's going on here. From a monthly perspective, we just had a sell zone, right? We had a buy zone, but remember, anytime a buy zone comes at the top of a range, right? If you go 1, 2, 3, oh my gosh, that's a new high relative to all of this. Look to the left and let it tell you what that's saying. If you see action here to the left, what it's telling you is, you know what? If you want to buy, you better buy where the support action came. And here it is, right here on this edge. That's where the support action came. So you go all the way over here and you go, okay, that's 155. This area over here told me to buy this zone over here. Now it's got another short setup. And so what is it telling you? It's telling you that people are undecided about what to do. But if you have a short setup here and you look here and you see frontline support, it tells you immediately, you know what? This was a great short in the early part of the day, or excuse me, the early part of the month, but now all the buyers are come back in because it's holding the floor of support. Okay? What does it tell you? You got a sell zone here. You look to the left. It should be up in that 210 zone. 150 is the area that I would look at for American Tower. Here we are looking at NVIDIA. It's gigantic. It's moved massively. We're going to have a 10-for-1 split. How is that going to go? Probably pretty well because so many people want this in their portfolio. But what is it telling us? Buy setup, old resistance. We've got 1 week of upside motion. So the pullback into the 950s will give us the buying formation. Otherwise, we're going to be buying it too early. Now, if you are able to buy one of them, it's going to end up being 10 of them later. But if you say, hey, listen, I'm just going to sell an 800 put spread, that's going to be fantastic because the price action has been nothing short of extraordinary here, and there's a ton of volatility. A lot of ways to make money using that one. Amazon also pulling back just a little bit, a lot of short setups in the 2-day framework. If we look at the weekly formations, we're going to see we're moving sideways. When we move sideways, we have to give the chart time to settle out. If you come into something and you go, oh, it says buy, I better just buy. That's not what it's telling you. A buy setup says look for old support. Look to the left. That's going to be your risk. Go down to the area that has the risk and then take the pressure here and realize that signals are the most unreliable when price action is sideways. Absolutely, when it's sideways. And so if you can think about it from that perspective and say, okay, I realize I'm a little bit sideways. If I go to a monthly, I know where my buy setups are, because this thing has said stay long since 4:30 of 2023. Literally, that's the last buy zone. And then here was an area that said, hey, you can buy again. You can add to your position right here. And these candlesticks that are currently in motion are sitting sideways. So it's telling you two things. One, take a little profit. And two, wait for a pullback to add to the position. Anytime your chart stops making tracks to the north, trim some of the gains. Don't get out of the position altogether, just trim some of those gains. All right, Raytheon, this is one of the war machines. I hate talking about a war machine, but Raytheon is one of the strongest war machines next to Lockheed Martin. Boeing is also a war machine, but as we know, that's a dumpster fire right now. Raytheon is in a buy setup. It says, watch the old resistance, new support, and think about it down here at the 100 level. It's very bullish, but also failing to make new highs. And so we want to buy at the support edge where it's near 100. What's the upside here? You know, I don't know what the all-time high is for this thing. We're probably sitting at all-time highs right now, aren't we? Maybe. So the chart's doing very well, and it could be breaking out. It could absolutely be breaking out. What do we need to do? We need to wait and buy the pullback and not get frantic about having to be involved, right? Look at this. Short, 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 short. Everything telling us to be short here. It just blew out of the top there, but it also had lower lows. So this is very likely to pull back into this 90 to 100 area to allow us to hold the position over the long run. Okay? All right. I think I'm going to stop now to ask. Oh, here's Oxy. We could also look at Oxy. You know, Warren Buffett owns a lot of Oxy. I'm a huge fan. Look at where the buy events were, right? All the way back here at the beginning of the year. Let's go back to the weekly. And you can see that it's really been sitting in a sideways patch. But the great big buy events are going to be on the horizon near the 55-ish to 50-ish level. It's going to be pretty good. I really like it a lot. Okay, let's talk about some questions. What might people want to know about? What might we want to ask just about markets, just about anything in general?
All right. Well, we did have Brad. Brad said that the name you're looking for, he thinks, is Howard Marks.
Yes, thank you so much. It is Howard Marks. Love the guy.
Frenchie said, were you looking at MT or AMT when you're looking at AMT? So I already answered that one.
Thank you.
Let's see. That's all the questions we really do have.
Nice.
So, I just out of curiosity, as you kind of go into this summer, do you have kind of a bias for market bullishness or bearishness as we get kind of into the summer months?
My bias is sideways.
Okay.
So here's my thought. Now, listen, we just had one of the best oscillator guys in technical analysis come out and say, listen, I'm looking for 5,800 to 6,000 in the S&P. So I want to present the detractors that are saying, lady, you're crazy. This is moving. This is going to go faster than you imagine. So that's what he's thinking. My thought is election cycles do a couple of things. They are generally bullish. Why? Because people want to buy the votes, whether it's the incumbent or the challenger, everybody promises to spend money. And I'm going to give you money because XYZ. So that spending creates a little bit of a loft. And so I don't see any major bullish events. What I do see is a few sharp corrections because so much algorithmic trading is going on that those sharp corrections, they come frequently. They'll come more frequently as we move sideways and as we reposition, because if we look at the market, there are a lot of stocks that are just sucking wind and just a few stocks that are doing really, really well. And so my general notion is sideways. I don't believe the Fed is going, my suspicion all year long is that the Fed would hold pat. The IMF just put a note out and said, hey, listen, we really want to urge the central banks across the world to be very careful about lowering their interest rates because things look a little sticky and we just need to wait it out a little bit more. I don't believe the Fed wants to appear partisan. And so I don't believe they are going to lower rates into the election unless we have some sort of seismic shock that comes, and then that'll move the market all the way up. From just, even if they moved it a quarter point, people will be like, whoa. So in general, I think it's sideways. After the election, we'll probably have a little shakeout depending on whatever's going on. And then we should be off to the races again. I believe the commercial credit event is going to be largely squashed by all the private equity in distressed debt environments going out and picking that up on the cheap. And they are picking it up on the cheap. I mean, 25 cents on the dollar cheap. So those people are getting out of their debt, taking their losses, and everything's getting refinanced. So the banks are not going to be at risk like that. And so, that's my hot take for the minute, which could, of course, change the second somebody goes, oh, shots fired. Right?
Yeah.
So, you know what I mean?
Yeah, I know exactly what you mean because it can change like that. You got to stay tuned
Yeah.
into it.
Yeah.
Mark, last question we've got is Mark wants to know if you like Ethereum or Bitcoin or any investments like that.
Okay, so I just heard a remarkable podcast. And of course, Jeff was talking about how I know all these weird esoteric things about the market. And that's
Hey,
because
that
I'm
wasn't my words.
sorry. Sorry. But I'm a voracious eater of interesting pieces of knowledge. And I just listened to a German guy who was talking about, hey, listen, why not have gold and Bitcoin and use the volatility in Bitcoin to build other things? So he was just talking about, derivatives of some kind. But I prefer holding Bitcoin above Ethereum, though there's new Ethereum, a couple of new Ethereum ETFs that are supposed to be on the docket right now. So that might give it a little bit of lift. I believe they're trading vehicles because at the end of the day, government is never going to let us have complete control of our money, or else they're not in control. And so there's just that side loop there, not putting on the tinfoil hat. Well, I actually just did saying that, but you know what I'm saying. So I would say gold and Bitcoin, and I really would stay away from altcoins simply because the volatility is so great that it puts us at a great disadvantage psychologically for holding it. We're sort of like holding it and crossing our fingers rather than acquiring at a key spot and saying, you know what, I think I need to rotate this out, or I need to, hey, listen, Bitcoin came back into the 60,000 area, 62,000, and a lot of people bought it up. And so you go, all right, that looks like a good number. You don't want to really buy it up at 70 because so far everybody is saying, no, not now, maybe later, but not right now. And so that's my thought. Did I lose you?
No, I just like to talk into a muted microphone. That's what it is.
Oh,
As I was saying to myself, thanks again, Anne-Marie. I really appreciate you. And great job.
Thank you. I love being on here, folks. I really, really do. Looking forward to getting engaged with more of the community that latches on to our add-ons and really want to get good at using them. We'll be getting some Zoom events for the buyers of target rich trades and going through that real time. I know you're probably going to tell us a little bit about that, Jeff.
Will do. Yeah. Thanks a lot. Enjoy. Well, good luck. I hope everything works out well with it.
Thank you so much. Thank you so much. Take it easy, everybody. See you.
Thank you. Okay.
Bye-bye.
Okay. I do know there's a few questions that we didn't get to. Anne-Marie does such. Yes, she does, Alan. We love Anne-Marie so much. We love having her on here. Always does a solid job. Do you want to talk a little bit about her add-on? She showed you some screenshots of it. I did a little bit of an exploration for you. And here's what came up. There's about 3 scans that are in this. I'm not going to kind of go into a great amount of detail just because of time, but I did a little bit of a scan. eBay came up. You can see where it has a buy zone or a buy setup right here. I do want to point out that it's pointing out, or it's drawing support and resistance automatically for you and labeling a lot of important things on the chart. The commentary is very, very well defined. It kind of gives you an idea of what's going on. It's a great little add-on, and we've actually kind of went in and tweaked it and kind of modified it just this year. And that was another upgrade. So if you've had this add-on for a while, we would have sent you an email saying, make sure you get the new version. Make sure you do get the new version. It was a free update. You just had to go download it. So if you don't have it yet, it's a one-time cost. It's normally $4.99. Here at the event, it's $3.99. We'll throw in a free trial to Metastock, a white glove installation, a training class, unlimited support, technical support, some Zoom classes that we're going to set up. I need to actually kind of get in touch with Anwari next week to kind of work out exactly what that'll look like. You can give us a call, 800-882-3040. You can chat with us at metastock.com/saleschat, and you can go to metastock.com/AnnMarie A. Not Anne-Maria, Anne-Marie A. So, or here, let me put something in the chat here. You can also order this at metastock.com/conf promo. Like all the products we have, money back guarantee. Try it, see if you like it. If it's helpful, right? Okay. Before we move on, I do want to say thank you to TechnoTrader for sponsoring the events today. There's a link in the chat right here. Actually, I'll just put it in the chat. It's a little bit of a big link, so I'm just going to grab it out of my PowerPoint. Martha has been a great partner of ours over the years. She's given away some free courses. She's sponsoring the event. We appreciate that. If you click on the link in the chat box, over there, it'll allow you to sign up for some free courselets to kind of give it an idea of what she actually teaches and that kind of stuff. We're going to give away a prize, and Greg, I want you to kind of help me with this, but pretty quickly, just so that we can kind of move on. We're going to give away the Trader Insight clock. So, Greg, as soon as you can, give me a number between 1 and 9,309.
42.
42. Was that the random number app, or was that your
That
number?
was you said quickly. By the way, I did read an article that most people who guess a number between 1 or have to pick up a random number between 1 and 10, a vast majority of them say 7. So random numbers from the human mind are difficult. But I feel like 42 is random, even though it was highlighted on Hitchhiker's Guide to the Galaxy.
So, Adrian, when you came in earlier, you talked about the market clock. This is what you won. And the winner is, I don't think I announced it, Bob H. So, Bob, I'm going to send your information over to Adrian. He's going to send it out to you. He'll probably get in touch with you just to confirm that. It's going to happen next week after the Memorial Day weekend. So, big thanks for that. Let's go ahead and move on. Jacqueline Munro is our next guest. She works with John Thomas, a mad hedge fund trader. We had her at our last conference back in February, and she did such a great job that I invited her again. So let me go ahead and let's get her started just as soon as we can. Let me go ahead and make her I've been rushing. I thought we were a little bit more behind than we are. We're really not. But Jacqueline, if you can hear me, let's go ahead and get you started. Going to send an unmute request for you. Make it a little bit easier if you're having a hard time with your mic. Okay. Well, we see some movement. I don't hear you yet, Jackie. Sometimes if you're having a little bit of a hard time with the audio, if you've got a cord you can unplug.
Okay, can you hear me now?
Yeah, we can.
Great, great.
Cool.
It's just all these buttons in front of me. I was looking at which one to press.
Yeah. You got it. And I can see your screen. I can see the go-to webinar launch page.
Mm-hmm.
So
I want to get my slides up. How do I go?
So do you want to change screens? Is that what you're saying?
Yeah, so it's underneath this launch screen.
It's so it's a screen that's underneath it. You need to be on a different screen to be sure.
So it's just underneath here.
Do you see where it says sharing? Oh, can you minimize your screen, Jackie? Is it underneath that launch screen?
Just going to go here.
I don't know how to do that with an Apple.
I got it.
There you go. Okay,
Yeah.
cool.
Yeah. So I'm just going to this and that.
Okay.
And can everyone see that?
We can see you. Yeah, we can see it. Oh,
Okay.
Michael likes my shirt. Thank you, Michael. It says Metastock on it.
So, Jeff, how do I minimize this on the right? Do I just press the red arrow? The
Yeah,
arrow.
that'll get it out of your way. And if we have any questions, I'll send them over to you during
Okay.
Q&A at the end.
Okay, perfect. Perfect.
All right, I'm
Okay.
going to get out of your way. You're going. Go.
Okay. Thanks, Jeff, and the team at Metastock for inviting me to speak today. It's great to be back. And thanks, everyone, for taking the time to listen and join this Metastock wonderful seminar we're having. Okay, so I'll start because I've got quite a lot to get through. So I work for John Thomas, the Mad Hedge Fund Trader, and my product is called Mad Hedge Jackie's Post. So let's keep going. So today I'm going to really focus on the metals and psychology. So let's get right into it. How did I make money in the markets? So what I did was use multiple vehicles. I had a plan. I exercised a lot of patience and resilience. I understood the psychology and how to read the markets. I was consistent. I took advantage of volatility. I determined the best option to use in different types of markets. I didn't overtrade, and I exercised, which I will talk about later. So when I'm talking about multiple vehicles, so let's say the euro, the currency, the euro is in a bull market and it's going up against the USD. I buy a position in the ETF, EURO. I also pyramid into euro positions in the Forex market. So I'm actually accumulating positions at different levels. And I also buy a call option or a spread or leaps, which will expire at different future dates. And then I pyramid out of these positions at different times. So I'm loading up on different instruments and going in at different positions, different times, and then coming out at different times. So that's what I mean about multiple vehicles. In the tech sector as well. So say I wanted to buy Micron Technology. I could buy a small stock, a small parcel in the stock. I could purchase options. I could actually purchase a front month spread, or I could purchase leaps, and I could also purchase ROM, the technology ETF. So you're effectively multiplying your returns in a massive way by incorporating various vehicles. And you're not putting all your eggs into one basket. So you're not just putting all your eggs into an option, for example. So this is the Commonwealth installment receipt. I bought in here, 1996, when CBA, the Commonwealth Bank, floated in Australia, and they were purchased in 2 lots. So in 1996, I paid $4.45. The total price was $6. So I paid $4.45 in 1996 and the rest in 1997. And I bought 300 shares. And then we all remember the 2008 debacle. And then in 2009, a lot of the companies that I was actually in my portfolio sent me share purchase plans to purchase more stock or more shares. So, and there was no brokerage attached to this. So I actually, in 2009, I purchased I sent a check for $25,000, and the stock price of Commonwealth Bank at that stage, at that date, was $26. So I purchased, sent $25,000, and the stock price was $26. So I got a lot more Commonwealth Bank shares. And I also did the same with several other companies and shares that I had, for example, Rio Tinto, National Australia Bank, and BHP. So it was a great time just to buy up companies at really, really cheap prices. So how can you make money in the markets? As I've just showed you, you can use more than one vehicle at a time. You can buy the stock, buy options, use ETFs, buy ETFs. You can trade Forex, or you can trade futures. So one of the best option strategies to use is spreads, and that can involve a bull call debit spread or a bear put debit spread. And I also really like leaps because it gives you that benefit of time. So a bull call debit spread, what does it involve? 2 legs to a bull call debit spread. You buy a call option, you sell a call option at a higher strike. The maximum loss is limited to the initial debit paid, and the maximum profit is the difference between the 2 strike prices less the initial outlay, the debit paid to establish the spread. So this is what it looks like actually, a debit spread. So here's your short call that you sell here at a higher price, and here's your long call, and this is your break even. And then as the stock price goes up, you make a lot of money. Or if the stock price goes down, underneath your strikes here, you lose. So the advantages of debit spreads, there's a lower cost, of course, so you're not buying the whole stock and putting out a lot of money. So it's a lower cost, a higher probability of profit, and limited risk. So you know your risk before you, when you get into that vehicle. So exit strategies in debit spreads, you can set profit targets when you put the trade on. You can set stop loss orders. You can take profits partially. And you can also roll over the option, so into the next month. So basically, you can know when you're getting out before you get in. And that is really good for overcoming emotional trading. You know, it stops you taking the trade off because it's becoming volatile. Oops. So there is no single secret to discover, no single correct way to trade the market. So there's basically no holy grail out there if everyone's looking for that. So those seeking the one true answer to the markets haven't even gotten as far as asking the right question, let alone getting the right answer. So what do I need to know before I enter an options trade? The macro picture. So is the economy surging ahead? Is it growing or is it shrinking? For a growing economy, use bullish strategies, calls, call spreads, or short volatility plays. For a shrinking economy that's not going so well, use bearish strategies, puts, put spreads, and long volatility plays. So what you need to be doing is thinking about where the economy is headed next. Next, you want to be looking at good industry fundamentals. So focus on a handful of industries that are booming. Period, end of story. That's going to be your edge. Skip over most of it. Seize the movers and leaders that have momentum in the new world narrative. Next, get a clear picture on the micro picture. So first of all, you know your economy, you know the industries. Now you need to zero in on individual companies to trade. This is going to be your micro selection. So individual companies return double or triple the returns compared to stock indexes, and the market pays a higher implied volatility for an individual company as opposed to a basket of companies. But of course, the flip side is you are taking on greater risk trading individual companies. If earnings are amiss, the stock can slide down a slippery slope, as we all know. Next, you want to hone in on the technicals. Read the chart, identify patterns in the chart. If you use candlesticks, you can identify the candlestick. Use Elliott wave analysis, Fibonacci retracement analysis, Wyckoff theory. Technical indicators can also tell you a lot. The RSI, the relative strength index, and the MACD. the moving average, convergence, divergence also can tell what's going on in that particular stock. Then you can buy the option or if you just want to buy the share or the stock, scale into the market using small parcels. Also, know your calendar. We've all heard the adage, sell in May and go away. So why is that? So the data in the Stock Traders Almanac shows 10,000 invested at the beginning of May and sold at the end of October. Since 1950 would be showing a loss today. Whereas 10,000 invested on every November 1, sold at the end of April, would today be worth 702,000, giving you a compound annual return of 7.10%. The 74 years under the study, 25 May to October periods showed the market down in only 13 of the November to April periods, and down only 3 times in the past 20 years. So we need to remember that calendar. So a quick recap, know the macro picture, chuck out most and follow the good industry fundamental industries, know the micro picture targeting individual stocks, get clear with technicals and remember your calendar. Okay, but what's all this about LEAPS? Okay, so LEAPS stands for Long-Term Equity Anticipation Security. It's an options contract with expiration dates that are over a year or longer, so a year to 2 years. So why would we pick LEAPS? It allows investors to benefit from potential rises in a specific stock while using less capital than purchasing shares with cash up front. But LEAPS cost more than traditional options because they have more time to expiration. And it's also the fact that you aren't constantly looking at the market wondering if your front month your front month option is going to do well or it's not going to do well. So you're not constantly attached to your screen. Okay, so here was a great entry level for LEAPS. We all remember what happened in March 2020 with COVID-19. The market tanked, and here would be a great entry level for LEAPS. And what happened in February 21? The market went up again to 22,580. And people over that year that took out a 1-year leap or even 2-year leaps made an absolute fortune. So always have some money set aside for these huge down periods, which can happen. We call them black swans. We don't know when they're going to happen, but we can take the opportunity and jump into leaps when these situations occur. So making money in the markets, I mean, who would have thought about, actually, when I go back to there, who would have been thinking about putting leaps on at this position? Were you thinking about leaps when the COVID-19 hit? No, I don't think so. But that's what you do when we're making money in the markets. We got to think about our psychology. So 6 basics of stock trading psychology is about managing your emotions, maintaining discipline, developing a trading plan, cultivating a long-term perspective, overcoming biases, and understanding market behavior. So it's about, psychology is about 80% of trading and investing, and the mechanics are about 20%. So this is why we mess it up. Overconfidence, loss aversion, and confirmation bias. Overconfidence, we take unnecessary risks, making unrealistic assumptions about the markets, which can lead to a lack of discipline and failure to follow a trading plan. So what can you do about it? Be realistic about your abilities, seek advice and guidance from other traders. In other words, don't stray from your trading plan. And if you have a few really good trades that have done really well, don't start getting cocky, thinking you know it all. Loss aversion. This is a bias that causes traders to hold on to losing positions for too long, hoping that the markets will eventually turn in their favor. And I think if we're really honest, we've all done that at some stage. This can lead to significant losses and a lack of discipline in time management. So what to do? Be willing to cut your losses and move on to the next trade. There will always be another trade, and set stop loss orders to limit losses. This takes out the emotion. Confirmation bias. This is a bias that can lead traders to seek out information that supports their existing beliefs and ignores information that contradict those beliefs. So what you need to do is consider all available information and don't be influenced by preconceived notions. Be aware of how you're thinking. So recognizing biases, steps to take: be realistic about your abilities, set realistic goals, be disciplined in risk management, seek advice and guidance from other traders. So your mindset, as I was saying, trading and investing is 80% psychology. So we need resilience for the fact that if you have 1, 2, or even 3 losing trades, are you going to throw the computer out the window or throw everything on the floor and yell and say, well, this doesn't work for me, it doesn't work? Or are you going to have a lot of patience and just keep trying and wait for the market to come to you to place those great trades? And you need focus, and we need exercise, which I will now talk about here. Benefits of exercise for the trader and investor. I mean, hardly anybody ever talks about this, but exercise keeps the mind really sharp. For traders, this is essential. Improved concentration, better mood, stress reduction, releases hormones like dopamine and serotonin, which help improve focus and concentration. It aids impulse control and planning and fear management. So if you're going to trade and invest as a full-time occupation, I would strongly suggest you set up an exercise routine, just something you enjoy. So wait for the market to come to you. And as I read these 3 quotes, you'll see a theme coming through here. Trading is 10% buying, 10% selling, 80% waiting. The stock market is a device for transferring money from the impatient to the patient, says Warren Buffett. And if most traders would learn to sit on their hands 50% of the time, they would make a lot more money. So it's all wrapped up with patience, okay? Waiting for the market to come to you, waiting for those great setups. If you want lots of action, I suggest you go to the casino. Oops. So your responses, whether you win, lose, or draw, your response should be the same. You control your behavior. Make sure the action of trading and investing doesn't control you. The markets really don't care what is happening in your life. So a handwritten record of trades and investments is a great idea. So you can write down the date, the trade, profit or loss, the investment, whether you win, lose, or drawed, and why it worked or didn't work. And why I say to write it down is the benefit is writing compels us to organize our thoughts. Putting pen to paper boosts connectivity between different areas of the brain, so you will retain the information you have learned a lot better. So I always say to people, write down, that was good because. This is a great response to every trade investment, because if you lose, you are learning something from your loss. If you profit, you understand and reinforce what you did well. So it's all good, losing and profiting. Losing is not bad. It's part of doing business in the markets, as long as you don't lose all your trades. It's a lesson, store it. There will be many more lessons, and those lessons will make you a much better trader and investor in the future. So your rules, what kind of trader or investor are you going to be? So are you going to trade every day? What time of day are you going to trade? What strategies are you going to use? What sector are you going to trade? Are you going to trade one sector, or are you going to trade all the market? What stock? Are you going to focus on one particular stock? Some people focus just on the bond market and that's it. Some people just focus on the tech sector. So you have to decide in your plan and your rules all of these things. So in the entry, what time period do you use to enter a trade? Is it the 1 hour? Is it the 5 minute? Is it the 15 minute? How do you exit? Do you take half off and let the other half run to a secondary exit level, or do you take all your profits at once? The size of your trade, do you start small and accumulate over time or average in? I always advise people to pyramid in, just scale in, so small parcels at different days, on different days. So when the market drops some more, buy a bit more. If the market goes up a bit more, buy a bit more. So you're averaging in. So you're going to know your exit level when you place your trade. You can have more than one exit level. You're going to put a stop loss in just above the resistance level or just below the support level. So as I said, be careful not to get too cocky and add too many trades. You must be able to manage all your trades and all your shares if you have a share portfolio. So when not to place trades and why? In earnings, I mean, even though some stocks can have great earnings, sometimes the market will tank the stock and it will go down. So it's not always a great idea. Ex-dividend dates, the stock usually goes down after ex-dividend. Trading around news is not a great idea because the market can be very volatile. Around Fed meetings, the market again could be very volatile, and the same with non-farm payroll periods. Okay, reading the charts. Here you can identify patterns, use moving averages, relative strength index, candlesticks, and or time periods. So you need to trade with the chart, not with your heart. So the best chart patterns to identify are head and shoulders, double top, double bottom, rounding bottom, cup and handle, wedges, pennant or flags, ascending triangle, descending triangle, or symmetrical triangle. So this is a head and shoulders pattern, and this is the neckline. So it'd be great here to put an entry to take the stock down on a potential bear market there. Here's a double top, and once again, here's the neckline, and this is where you would place your entry for the trade. Here's a flag pattern. When the flag pattern breaks out of this pattern here, it just keeps going in the direction here that was set up before the flag pattern commenced. So we're just going to continue upwards in a rally. Cup and handle here, this is how to identify the cup and handle pattern. And once it breaks out of the handle, it rallies, the rally continues. Triple top, 2 points makes a third. Here, draw the line, the neckline, place your entry order here, and you can place take profit order here as well. So the profit gets taken and you don't have to actually even think about it. Candlesticks, for those that like to use candlesticks in the bullish direction, we have an inverse hammer, a hammer or a bullish engulfing candle. I mean, these are just a few of the candlesticks that people use. In the bearish direction, we have a hanging man, a shooting star, or a bearish engulfing candle, or a spinning top. And for continuation pattern candles, we can also have a doji or spinning top. And also dojis can be found at the top of markets or at the base of markets as well. So here we have a candle like a shooting star, and here we have a hanging man. So this is basically like a picture of a hanging man. So this is the head and the body basically. So in the potential future direction, so this is basically an upside down hanging man. Future direction will be bearish, can be bearish in both candlesticks. Here we have a hammer and an inverted hammer. The potential direction can be bullish when you see these candlesticks. So trading is all about patience, emotions, and risk management. Don't expect to be right in every trade. Learn to accept losses too. It's part of doing business. So we're going into the SPY target that I have, and the short-term target here is 5,485. This is the S&P weekly chart. And here we have inverted head and shoulders pattern here. And the target here, got inverse head and shoulders pattern target, set 5,735. So we're just going to keep slowly heading up, maybe after even some consolidation here. Here's the Dow Jones Industrial Average chart. After some consolidation, we're just going to keep rallying, and here are the targets that I'm looking for toward the end of the year. It's the NASDAQ weekly chart. We've had a huge rally up since October last year. We might have some sideways movement and consolidation, especially going into the summer period, but these are the eventual targets going into the end of the year and into probably next year as well. Precious metals. Expectations for rate cuts have sent metals on a very, very bullish move. As we've seen, stocks have bounced as they start to play catch up. There's a shortage in silver developing, and demand is up 16% in 2023. Gold is headed for around 3,000 by 2025, but will show volatility on its way to the target. Collapsing interest rates will be the story for 2024. I'm expecting maybe one rate cut toward the end of the year. This is the interpretation of markets, although it seems to change. The interpretation seems to change every day. Russia and China are stockpiling gold to avoid international sanctions. This is the gold monthly chart around February or March this year. Had a target of around 2,437. This is the gold monthly chart just recently, and we're heading up to this inverse head and shoulders target at 2,530. Okay, so we all know what happened in 2008. Central bankers around the world launched a historic market intervention with QE, which increased the supply of money and lowered interest rates. But with cheap and abundant money, QE certainly worked. Created a bull market in everything, but except for precious metals. So the consequences were stock market, consumer lending, and property values surged. And what has also been a consequence has been debt, lots and lots of debt. So by 2050, at the age of 30, each American will have 226,263 per capita in debt. Every American will have this to owe. And debt is seen as a ticking time bomb. For some people, it's not a problem. For other people, it's starting to be a talking point. So it just depends who you speak to. But by 2050, debt is projected to reach 185% of gross domestic product. The prices of gold and silver do not reflect a world with cheap and easy money, but their time to shine is certainly here. We're certainly in the beginning of a very bullish cycle in metals. So factors influencing a higher silver price in the future: insufficient investment in mining production, mine closures, and increasing operating costs will show themselves in market prices. Major mines are forecasting a reduction in silver supply, and new technologies will equal more demand for silver. Okay, this is a 12-year, very clear breakout line for silver. And we can see in the next chart, how silver has broken that line. And we've got a very big inverted head and shoulders pattern here as well. So the target initially is 34.80, and we're certainly heading up to this target very quickly. So the silver 10-year supply forecast in a commodity bull market, here are the predictions. We're round about here, I would say, just at the beginning of 2024. And some of the predictions here are for $50 in 2023, $70 in 24, $120 in 25, and even in May 2028, 1,350. So it's an exponential growth in silver. And this will probably go for most of the metals. Here are some price predictions. JP Morgan is $30 in 2024. Commerce Bank $30 in 24. Citigroup has a price target of $30 in 2024. Out on their own, Roberts Kiyosaki is predicting $500 by the end of 2024. So with declining silver production, silver will become scarce, and that will increase its price. And so it will become a store of wealth. But that's not all, because silver is also used for industrial uses as well. So we can see here, it's nearly 50% is used in industrial. I mean, silver is used in EVs, it's used for solar, and it's used for all sorts of other demands in batteries and all sorts of things. So only under 20% in jewelry, just nearly 27% for bullion, nearly 5% for silverware, and even in photography, we have some use of silver. So it's mainly used in industrial uses, and that's the demand will just keep increasing, particularly so for renewable energy, where we have solar panels. The demand will just keep increasing here. So applications in tech and batteries will drive demand higher. So ways to invest in silver. You can buy silver coins, silver bars, or you can purchase silver ETFs such as the iShares Silver Trust, SLV, or the SILV, or you can purchase future contracts, or you can purchase the stock, wheat, and precious metals. But what about gold? Central banks have been buying up gold en masse in 2023, and that's continued into 2024. So why are they doing that? We're expecting the US dollar to start falling between now and the end of the year, and that will cause the euro, the pound, the Aussie, and the New Zealand dollar to rise. And they will keep rising from now until into 2025. Also, it's a hedge against high inflation. It also protects against volatility and against economic and geopolitical uncertainty, which there certainly has been recently with all the conflicts in the world. Predicting imminent rate cuts, because we all know gold and the metals rise when we have rate cuts, and it also becomes a store of value and a safe haven asset. So the Fed cutting cycle and falling US real yields will once again become the mono driver behind gold's breakout rally later in 2024, says Gregory Shearer of JP Morgan. This is gold price prediction. We can see even out to 2028, we're heading towards 5,000, even to 2030, 9,000, 2032, over 10,000. So that's the price prediction for gold. So here's the monthly chart of gold going right back to 2004. And you can see here, after the 08 crash that we had, and after 09, this period going from about 09 up to around here, the late teens, 2018, was just a sideways consolidation of this metal. So it was the one thing, the metals didn't break out like everything else with QE. But now is their time to shine. So here's the GLD. Here's the chart for the GLD, and you can see since October last year, it's certainly had a hugely decent rally. So I would suggest to anyone, wait for a nice pullback and scale in to this this stock. Similarly here, gold, the world's largest miner, Barrick Gold, scale in as well. I had my subscribers scaling in around here on big down days here, 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 and here. So they've all averaged in since last year. So they've been enjoying the ride up here. And our target is around $50. So also if we get another big down day, I will also suggest buying 1 year leaps. Here's Wheaton Precious Metals, huge rally here in silver. And as I said, I've been getting my subscribers in, scaling in at different down days here, 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 and here. And if we have another big correction down, absolutely just buy 1 year leaps, but only on very big dips. And also buy the stock on down days. Silver SLV, similar story there. Great stock to own as well. And GDX, the ETF, also a great stock to own. Energy and commodities. After 3 years of volatility, commodity prices are set to broadly stabilize in 2024. Adverse weather conditions, escalating geopolitical tensions, and soaring shipping costs are among the risks to watch. Gasoline prices hit a 20-year low at $1.61 due to warm weather, overproduction, and rail problems impeding exports. And now energy and oil are basically moving as one. We've seen quite a dip in energy prices recently, but I'm expecting that low to as a precursor to a rally in oil and energy stocks. So I would be looking to scale into ExxonMobil, Occidental Petroleum, Caterpillar, and Freeport McMoran, which is a play on the copper price. Here's CCJ, Cameco. It's a long-term play. The government is restarting plutonium production for the first time in 20 years, and it's a major buyer of uranium energy. So on down days, I would suggest to scale into this stock for the long term. Occidental Petroleum, Buffett is a major buyer of this stock. So I would, on this, we've got a lovely down movement here. I would be scaling in down here at these moving average levels. ExxonMobil, I issued a buy recommendation on this stock at $1 and $102.20, which is down around here. I issued 1 year leaps, and I also told my subscribers to buy the stock. So they are now sitting very pretty. This is my stock portfolio I have recommended for my subscribers, and this was for January this year. So these were the stocks I recommended. This was the ticker symbol, this is the price, and this is the price as of yesterday. And of course, the price would have changed today, but you could see they're all in green. This is another still going with my stock portfolio. The only one that was in the red yesterday was Palo Alto, but I think that's gone up about $12 to $15 today, so we would be in the green on that as well. Here we have United, BlackRock, Delta, Netflix, recommended $480. It's now over $635. And Boeing is the only one that's in the red, but I'm still holding. And we recently sold out of United at a profit. And here we have Berkshire. We bought at $362. It's now over $405. We have, and this is the biotechnology sector. which is the most sector of the portfolio, which is in the red. But these were rallying today as I looked earlier in the market. So we really only have a really couple of stocks that are dragging the chain here. And we sold out of Humanisite on the 21st for more than double. We more than doubled in the stock price. So what about me? What's my background? This is me, and this is my son, Alexander. And a little bit about me. I worked in the mental health and drug and alcohol unit for 10 years full-time and 10 years part-time. I studied while working and finished with an MBA degree. I also teach English to foreigners, which I've got a TEFLA qualification. I've done that for 30 years and I still do it part-time now. I've run my own fund. I've worked for the Mad Hedge Fund Trader since 2010. I've also had a stint in the outback of Australia as a Jillaroo, or what you know in the US as a cowgirl. And this is what I've done with the funds I've earned from trading. I sent my son to Ludgrove, which is in the UK, for 5 years to a boarding school. He was 8 when he started boarding, and he absolutely loved it. These were the fees I paid, £9,364.59, and that was per term. And there were 3 terms in the year. That was about it was about 60,000 Australian dollars per year. So we travelled a lot when he was in school, and we were in Lake Tahoe, with still the snow sitting beautifully on the mountains in the background. Beautiful autumn day or fall day. Here I was hiking in Switzerland. In the Solomon Islands, I took my son up to show him our people that not in the Western world live, sitting beside the Thames, having a lunch, checking my trades. And in Mackay, checking out the signage for the beaches. You don't swim in the ocean in Mackay because they have many, many stingers there, and crocodiles and deadly jellyfish. And this is on the Gold Coast where I live. Okay, so can you manage your money on your own, or would you like some direction? Can you identify winners from losers? And over the next 10 years, the investment space is going to look dramatically different. So have you got access to all the latest updates, or would you like some help? And I really like Warren Buffett's investing tips here when he says you buy a stock and plan to hold it forever. And also, most news is noise, so not news. So just turn the TV off or the radio. And the best moves are usually boring. So those are really good investing tips, I think. The naked truth is most traders fail. Only 7% remain after 5 years. 80% quit within the first 2 years. The stock market is a great device for transferring money from the impatient to the patient. The markets are unforgiving, and emotional trading always results in losses. And the market doesn't know you exist. You can do nothing to influence it. You can only control your behavior. It doesn't care what's happening in your life. So this is the stock market returns over the past 90 years, and you can see most of it is positive. An average annualized return of 12%, or an annualized compound return of over 10%. So you can see investing in the market overall is a really, really good idea. And so that's why Warren Buffett says to buy and never sell. So just don't try to time the market. It's the time in the market that counts. So here we have, if we've had 2 secular bull markets since 1929, with both generating returns of 2,300%. So if the current cycle, this was 08, 09. So if the current cycle generates a similar rally of 2,000+%, the S&P could move toward 14,000 by 2034, which is when we expect the current 16-year secular cycle to peak. So this is entirely possible. And what's going to make that entirely doable and possible is technology. Technology will be the supercharger, and it will impact all sectors: health, finance, transport, agriculture, housing, retail, everything. I mean, we'll have DNA computing, flying vehicles, which I just wrote about actually on Wednesday. The first flying vehicles are due to be delivered in 2026. 4D printing, digital twins, nanoscale 3D printing, anti-aging drugs, can't wait for them, miniature AI, zero-proof knowledge, quantum internet, space mining, and the advances in medicine will be incredible. We'll soon be able to have a drug, go down to the drugstore, get a drug so we don't get cancer. So how do you benefit from Jackie's post? You get up-to-date information on the market, the economy, and geopolitical events, 3 newsletters a week. You will learn as you go about all the stock market terminology that you will come across. I mean, I'm not going to give it to you all at once because you won't remember it. John Thomas holds a webinar once a fortnight, and I summarize the main points and send it out in a post. I also issue trade ideas, details of a trade, and the explanation of why the trade is a good idea. So recent trades or spreads I've sent out have been Arista Networks, Advanced Micro Devices, Marathon Oil, and CrowdStrike. And I think actually CrowdStrike, I looked this morning, it was up about $12 or $15. So, or Arista Networks also had great earnings, and it went up about nearly $20 earlier this week or last week. So, and also I need to tell you that I will put these trade ideas in my post, so don't expect a separate alert. So this, what it does is make you read the entire post. That's being a bit cheeky, I know, but that's how it is. And I also hold Zoom monthly meetings, brings subscribers together, connects the community, and they're usually toward the end of the month, so people can ask questions, share ideas with other traders in the community and other investors. I hold social events twice a year where traders and investors can get together and share their experiences. Here's a Melbourne luncheon I held in January 2024. It was great to see everybody there, and lots of questions were answered and lots of ideas were exchanged. It's a testimonial from an accountant in Australia, John Morrison. I've known Jackie Munro for a period of over 7 years, since I first met her at a Sydney luncheon with John Thomas. At the time, she became known as the John Thomas Mad Hedge Fund Trader contact person in Australia. She was very helpful in assisting me access to the various trading platforms that John Thomas uses to trade his text alerts. I joined Jackie's post from day one and attended many of her Zoom conference calls. I have found Jackie to have an excellent knowledge of all financial markets and has a friendly, plain-speaking way of explaining the various market opportunities. She talks from experience and will educate you how to shut out the noise and focus on the opportunity at hand. Jackie has guided me through several successful trades, and I am forever grateful and hope that one day I may well emulate her financial success journey. I can highly recommend her to any investor, whether experienced or just starting out. Thank you, John, for that. So what you receive with Jackie's post is 3 newsletters a week, summary of John's webinar presentation sent out once per fortnight. Trade ideas will be shared when the risk reward is in your favor. Monthly Zooms to educate, share ideas, experiences, and ask questions. Twice yearly social events in different parts of the world. So your price today is $3.97 for 6 months. And you will get a free trade alert if you sign up. So click on the link in the chat box on the right. There are limited places available. So if you sign up today, you will get this trade alert. But can you guess what this company is? And can you guess whether it's a buy or a sell? If you purchase my product, you will receive a trade alert on this stock direct to your inbox. So try and think about this and try and work it out. Is it a buy or is it a sell? And that will, if you purchase my product, will go straight to your inbox. So take a step and change your life. $3.97 for 6 months. Click on the link and change your life. Join our community and learn about the markets, how to make money and boost your income. So if you're thinking about joining and you're still sitting on the fence, you're thinking about the environment, oh, it's not a great time to buy, and you're thinking about your capability, oh, can I do this? You know, am I the right sort of person to do this? Can I see myself doing this? I mean, you just need to take a chance and see what you can do. And I will draw your attention to just these life lessons before I finish. This is a man with just one leg and one arm, and he's learnt to ride a bicycle. So don't tell me you can't do it. Just never complain, just rebuild your life. Also, the next one I'd like to point out is don't give up. Never, ever, ever give up on your goal. You're very much closer than you think. And winning in your mind, it will show up in reality. Your greatest disability is in your mind, not in your body. Be obsessed with freedom, not the money. So your why should be the freedom, not making lots of money from trading. Okay? Don't chase the money or you will be trapped. And your comfort zone is your enemy. Don't burn your opportunities for a temporary comfort. Okay, so I'll go back here. Click on the link in the chat box on the right and join my community. I'm sure you'll learn a lot, have a great time, and make lots of money and gain lots of freedom, which is the end result we all want to end up with. Okay, Jeff, I think my time is up. It's 12:57, so I will hand back over to you for any questions.
Yeah, for sure. Give me just, I'm typing up. Here, let me ask a question real quick.
Mhm.
Alan said, thanks for all the points, especially the gold and silver. Forget the rest, social events will be the best. Ricky said chat is not working, but you did chat into it. So you're in the right spot. Chat doesn't work. You have to use comments. Frenchie wants to know if you have a certain take on drug stocks.
Biotechnology.
I assume Frenchie
Oh,
is.
Eli Lilly, for example.
Yeah, sure.
Yeah, no, they're definitely a buy because
Okay.
all the drug stocks will be a boon in the future because of all the great strides they're making in curing all sorts of diseases.
And then here's a comment. I love to hear stuff like this. This is one of the most useful and information-packed presentations that I have attended.
Oh, wow, that's great. Thank you very much for whoever said that. Great.
What a compliment. Thanks, Ricky. That's it for the questions.
Okay, and also if you buy today, $3.97 for 6 months, it stays at that price. So if you buy it today, that's your price forever and a day.
And we got the links both in the YouTube and in the GoToWebinar. So,
yeah.
As always, fantastic to have you. Appreciate your coming in. Thank you.
Yeah, thanks, Jeff, for having me and the Metastock team. And thank you, everyone, for taking the time to listen. I wish you a great, it's a long weekend, isn't it? Yes?
Yes, it is here in the U.S.
Yes,
Yeah.
long weekend. I really hope you have a great time and be safe and be well.
All right. Thank you very much, Jackie.
Thank you.
All right. Let's do this. Go ahead and kind of just transfer over real quick. Greg, if you're around, I'm going to have you help me out one final time. I do want to say thank you before we kind of move on to our final presentation. Here, let's do this too. Before we move on to the final presentation, I want to say thank you to Stocks and Commodities Magazine. You can find Stocks and Commodities Magazine at www.traders.com. For 13 years, they've supported the Stocks and our conferences. And we really appreciate them. They help us with so much around it. And we, www.traders.com. Obviously you're here, you understand that education is important in the market, and it's really good for me to get just a magazine every month that's just packed full of investment ideas. So if you become a member of traders.com or Stocks and Commodities magazine, you get access to all of their articles, 17,000 of them. It's been publishing since 1982. So we really appreciate the support that they've done over the years. Greg, I can see your mic's on. Let's do the final prize of the conference.
I'm ready when you are.
Ready? Okay. I just need a number from you between 1 and, actually, I don't think that number's accurate because I pulled the list now.
Okay.
Again. Let me look here. We're going to give, do you know what the mega prize is for the conference?
I don't, but did you just say that we've been doing this for 13 years, these conferences?
Not the conferences. Our multi-speakers, yes. We started the summits I think it was the January after I moved back to Utah. So
Really?
We were just barely starting
I
as
would have
our
guessed
own
like
company.
5 years, but I'm old. So.
Yeah, the conference, I'm sure next time I'll say it'll be like 13 years, though. Like,
Yeah.
time flies so fast. All right, so this prize that we're giving away, and I don't know if you want to random numberify it or whatever.
Go ahead, give me the
You
big
need
number, the upper number.
The top number is 9309.
309. Okay, I'm ready to randomize when you are.
Okay, I'm going to tell you what the prize is. We're going to give you away a big, huge Metastock prize. So we're going to give you 3 months of our Metastock 19 product. You've heard it today. A lot of people are really liking the new 19. I love it. You're going to get you'll get the real-time version of that. You'll get the real-time version of Zenith, the new service that Bobby showed a little bit earlier. They spent $1 billion on it. We're going to give you a sit-down with one of our support employees. They're going to do what's called a white glove service, where they kind of show you around the program, talk to you about it, all that kind of good stuff. And that's going to be included as well. They're also going to give you Unleash the Power Metastock. We're going to give you an add-on that's called the RMO ATM. 3 months of all of that, just for free, just to try it out, all that kind of stuff. So, Greg,
Yes.
do you have a number for me?
I do. The number is 3465. 3465. 3,465.
That almost doesn't sound random to me.
I'm just telling you, I put it in the randomizer app. I don't. Full transparency, we're not paid by the randomizer app or have any affiliation with the randomizer app, nor do I guarantee its randomization, but that's what we got.
All right. So this actually, the winner of this prize is in Hong Kong. And so they're probably not watching right now. I think they're probably like well into the AMs right now in Hong Kong. But it's Derek, and he registered with the name of Derek. So if that sounds like you just won that prize. When I reach out to you next week to say you've won a prize, it's not spam. I am not a Nigerian prince. Respond, and we'll go ahead and get you set up.
But you're a prince of men, Jeff.
All right. I appreciate that, I think. All right. Okay. And last and finally, AJ Brown. AJ, I remember having a lot of conversations with him. I'm not sure where you're living today, but he's a great technician. We love having him on. And we had him on a number of times. And so here to take us home, AJ, are you ready?
Oh, I'm ready.
Okay. Yeah. You look different every time I see you, but I have to say I like the beard.
Right? Sometimes I've got short hair. Sometimes I let it grow a little bit longer. Sometimes I have the beard. Sometimes I don't. I just keep people guessing.
Yeah, for sure. You look good to me. Let me see. I think you're also aging in reverse. So let me go ahead and make you the presenter. Yes,
Okay.
Unlike me, I'm just cracking all over the place.
It's funny you say that because this Monday, it was my birthday, but I didn't even know it was my birthday until I looked at the calendar to see what I was doing that day, and I was like, "Oh, it's my birthday."
So on the 20th, it was your birthday.
Yeah.
But that's funny. Yeah. On the 14th, it was my birthday.
Well, there you go. So I turned 51. And
See, I joined the 50s with you then, because I went from 49 to 50.
There we go. I went from 50 to 51, and here I am. But I guess in your 50s, and I hate to break this to you, the rest of the day, all I did was chores. So apparently that's what we do in our 50s on our birthday, is we don't even remember the day. And once you acknowledge it, you just do chores.
I took my wife and we went out and we went to Costco.
There you go. See? That's exactly right.
I got you. I can hear you. I can see you, and I'll get out of the way. We don't need to talk about our errands. It's all you.
All right. Hey, folks. So the last presentation was actually very good. I sat in on the last 15 minutes, and always a good thing. I hope mine lives up to that level. I've got a lot. It's actually going to be more of a teaching webinar. So if you could get out some pieces of paper, pencil, if you're taking electronic notes, get ready. This is my simple option strategy to overcome the trading trap. And this is, hopefully you'll get enough out of it to be able to use it, at least enough to come and research it more, right? So I'm going to be sharing my slides here. I'm also going to be showing you some live trading examples. So buckle up, let's get to it. So here are some facts. Number one, right now there's a lot of uncertainty. I mean, yesterday we had a little bit of a sell-off. Today we brought the market right back before this 3-day trading holiday. And you know, it's right back at that level. The S&P is what I reference the most, because that most represents my watch list, 5,300 roughly, right? So there's a lot of uncertainty with what's happening in the world, especially, but what's happening in the markets, so long as you play it right, it can actually set you up for months, if not years to come. And you have to remember, no matter how much people are jumping up and down on TV and on the radio and on YouTube channels and such, money is not destroyed or doesn't disappear in the markets, right? Money simply changes hands. It transfers hands. That's what the definition of market is. So the key on being successful in the markets is making sure you're on the right side of that equation. So before I get started, I always like to ask this question, right? Put it through your mind here. What would be the most ideal for you, right? Would you be somebody who likes to learn how to invest, you know, get the low risk, get the high returns, and be able to do it all by yourself? In other words, be 100% self-reliant? Or are you somebody who likes to learn how to invest, but be around seasoned investors who will take a look at what you're doing while you're doing it and make sure, you know, they give you either, you know, their blessing or tell you, hey, maybe you should look this over. So I say that learn how to fish, but have expert fishermen there to help. Or there's also folks I've encountered on my path, and I've been teaching trading since 2005. Follow what seasoned investors do in their own portfolio. There's a big group of folks that simply want to come along for the ride, fish alongside expert fishermen and do what they do. Or are you here because of some other reason? So I'd like to have you, in the beginning of my presentation here, be really clear on who you are, not who you ideally are, but really take some inventory on yourself and answer that question. Are you somebody who wants to learn how to fish and be 100% self-reliant, fish but have expert fishermen there to help, or fish alongside expert fishermen and basically do what they do? I call it leveraging with pride. Think about that. Now, humor me. I know that you've seen this hundreds of times, right? But I'd like you to run through the mental framework on this. If I gave you $50,000 today, and I'm going to add some nuances to this, or a penny, what would you do? Which one would you take? Now, realize $50,000, you get it all up front, no strings attached. The penny, if you're going to have a penny that doubles every day for a month, you're going to have to stay consistent and disciplined and doing what it takes to make it double, right? You're not going to it's discipline because you can't get distracted by shiny objects and move that penny around. It's got to stay in the same investment. So which one would you take? Well, let's go the $50,000 straightforward. Let's go over the penny. So if you took that $50,000, the person who took the penny after a week, and let's say there's 4 weeks in a month, that's about a quarter of the way through the month, they'd be really upset that they didn't take the $50,000, especially because you got the $50,000 free and clear, and this person has had to put in some front end work, making sure they do the process every evening to make sure that this penny doubles, and at the end of a week, all they have is 64 cents to their name. But if we keep going, after about a third of the month, well, we'd be at $5.12. And again, the person who didn't take the $50,000, especially because people have been coming in front of them during these 10 days saying, hey, I can help you with that penny, right? And they have to just stay focused, right? And it's taking a lot of energy, especially because it's not tickling that instant gratification component in people's lives, right? At the end of day 10, you only have $5.12. And you're like, man, if I would have taken the 50, that would have been 10,000 times as much as what I've done after putting in 10 days of effort, right? 10 days of discipline. But let's keep going. So at about day 14, 2 weeks in, still $81.92. You're almost at day 15, you're just about halfway through the month, $163.84. All right. So now we're at 3 weeks. Okay. 3 weeks, the month is basically 75%, just under 75% over, and you only have 10,000. The 50,000 was still a better deal, right? And you'd had to do that process. You'd had to stay focused. Can you stay focused? Can you do what it takes? Well, on day 24, the month is almost over. You've got about 6, maybe 7 days left. You finally got more than $50,000. And then this is where it pays off for you to have been disciplined, for you to stick to it for that long. In fact, at the end of the month, you actually walk away with 21 million, almost $21.5 million. The question is can you stay disciplined, especially with all the distractions, and especially since you won't even make back the effort that you put into it till almost the back 9, right? Or even well into the back 9 of this 18-par course. Listen, compound interest is the most powerful force in the universe. That's what we just demonstrated. Not sure if Albert Einstein actually ever said that, but it is attributed to them, and it is kind of a true statement, right? Right. All right. So let me show you this. Along the lines of compound interest, I want to kind of tattoo this diagram into your minds here. You'll notice, let's see, if I pull out this little paintbrush here, you've got like, this would be a 0 line right here. You've got these 2 lines that are not going linearly, they're going parabolically or exponentially as time goes on or as the numbers go on. And you've got one of them on the low side, one of them on the high side, and even the low side goes above 0 about maybe 2/3 of the way between the 1 and the 2, and then they both seem to stay above 0. So I want you to kind of get this graph into your mind. I'm going to come back and fill in the blanks, but I wanted to set the stage, especially since we were talking about compound interest, which is very much an exercise in parabolic growth in your dollars, right? So, okay, good. Let's keep going here. So I'm not going to be talking about doubling your money every day. I mean, every once in a while that happens for a trader. But if you're trading, again, that kind of aggressive stuff, and it means that you're also opening yourself to a lot of risk. So I kind of want to reverse engineer it. And what happens if we double our money instead of every day, every year? What would be kind of our target as a monthly trader on our portfolio? So the target is 6%. If you reverse engineer doubling your money every year, you'd want to have 6%. So you want to put that in your notes. So if you earn 6% on your money every month, then that investment will double every year. right? It'll actually do a little bit better than doubling. So if you had $1,000 and you put it into this investment and it doubled, you'd have about $2,000 in 12 months. You'd have about $4,000 in 2 years. In 5 years, you'd have about $33,000. And in 10 years, well, you'd be a bona fide millionaire. Now, of course, when I was a kid, being a millionaire was like stuff that TV shows was written about, right? Nowadays, a millionaire, that's a drop in the bucket. I mean, gosh, you have to be a millionaire just to live in California, right? The scoop is nowadays, in order to put yourself at the top end, you have to be a 10 millionaire. So maybe your initial investment has to be more than $1,000, or you have to add to that. But you see how it can pick up. And if you are worried about a retirement, well, then start on this consistent plan, and you could be set in as little as 10 years. I know that's what I did starting in my 30s. The other beautiful part about focusing on this is if you can grow your portfolio to $100,000, which could happen in 3 or 4 years, right? 100,000, or if you've got the ability to start with a $100,000 portfolio, even better. $100,000 portfolio, if you focus on that 6% per month, would generate over $100,000 per year. And this is through investing, through doing some trading, right? Letting that money work for you, because the median salaried position here in the United States, and I know that this doesn't align with you guys on either the left or the right coast, but the median income for a salaried position, that means putting in 50 to 60 hours per week, is $87,000 right now in the United States. So you could be earning more than the median income of a salaried position just by learning how to invest your portfolio. So I like that, and that's what I do. I live off of my interest every year. So what are we actually investing in? What we're doing is we're selling theta decay optimized option premium. That was a lot of word salad that just left my mouth. So let's dispel it down into some normal speak here. We're profiting on time passing by. So people are familiar with equity options, but usually in the fact that you can use them as option substitutes, right? But there's another influence on the option price, and it's time passing by, right? Options, they're called wasting assets for a reason. They have an expiration date. And it turns out that if you sell these things and then they expire worthless, you just made money, and you can turn that into an income. So I'm kind of using options a little bit differently than the most usual thought on them. I'm profiting on the fact that they are wasting assets, right? I'm selling theta decay optimized option premium. So before I go any further, I do want to ask you this little quiz just to make sure we've got our comprehension ears on. What minimum returns must we make monthly on our portfolio to more than double our money annually? I got 0.5%, 1.5%, 5%, 6%, and 10%. Which do you think it is? Now, if you rolled out and said 6%, you were paying attention, good. And please know, I'm going to start speeding up on the information I'm giving you. So just hang on. It's going to get even more. So just stick with me here. Now, aren't options risky, right? A lot of folks have been talking about options this week, but some, may make it seem riskier or less risky. Here's the scoop. This is why I have always been attracted to equity options. I've been an equity options trader since 1997. When you trade stocks or commodities or any typical investment vehicle, you can make money by going long. So that means buying low, selling high. So you make money on the appreciation of the underlying symbol. That's one method. If you're really good with the markets, if you have a margin account, you could also short it, sell to open, buy to close. You make money if the symbol goes down. But those are two ways, right? I've always been attracted to options because last time the mathematicians all played around with them, they came up with 27 different ways to profit on all sorts of different patterns in the market. In other words, you could profit on symbols just going sideways, which if you look at them, a lot of symbols spend the majority of their time going in a sideways channel. You could also make money with options on time passing by. In fact, you can also use options to make money on perceived fear increasing in the market, or even perceived confidence increasing in the market. That's how awesome these instruments are. So depending on what pattern you recognize, not even the pattern in just stock or equity price standalone, because these could be ETFs and indexes as well. Not only patterns in prices of underlying symbols, but you could also profit on things like time passing by, which is a very reliable variable. In fact, if time stopped passing by, you and I would be worried about a lot more happening than just what's happening in our investment portfolio. So it's a good thing that every day, you know, there's 60 seconds in a minute, and 60 minutes in an hour, and 24 hours in a day, and 7 days in a week, and 52 weeks in a year. That's been pretty consistent. And as long as that's consistent, you can profit on time passing by. So some of you need a little primer. What's an option, right? It's a financial instrument called a derivative. There's also futures. Those are derivatives as well. They're typically bought and sold to hedge risk. That's hedging risk against stocks, indexes, ETFs. The big fund traders like pension traders, that's what they predominantly use options for. That's not how we use them. We're selling their premium to generate income. That's what we're doing here. Really quick, just in case you don't know me, I'm AJ Brown. I've got a whole bunch of assets out there on the web. I've got a YouTube show every Friday morning. I just got off of it a couple of hours ago. We're on our 2nd year, so if you ever want to go to YouTube and check us out, you can. I'd love for you to give me a subscribe and a like on our YouTube show. It's called the AJ Brown Show. You can't miss it. And we just talk about trading options and the markets in general. We've got podcasts. We've got Facebook. We've got X. It used to be called Twitter. I've written a heck ton of articles that are all featured on our Trading Trainer website. I've written quite a few white papers over the years. In fact, if you want to reach out to me, you can use our contact us form, or you can just call me direct. There's my phone number. And if you are on any of our socials, you know, give me a solid, hit that subscribe, hit that like. That helps those algorithms, you know, direct more people our way. I founded this company called Trading Trainer. Some of my peers called me the world's most disciplined option trader. I actually think behind the scenes, they call me the most laziest options trader. I think of myself as the most efficient option trader because I like to maximize my rewards while minimizing risk. But even more, you guys were on here, I think, when you heard that I turned 51 this week. I have a 2-year-old toddler. And she is the pride of my life. And I like to spend every hour of the day with her. And so I have got it to the point where after she goes to bed, roughly around, she goes to bed a lot earlier. She goes to bed at around 8 p.m. But by 9:30, I'm in front of the computer seeing what happened the previous trading session. I'm on the East Coast. I'm in Washington, D.C. area these days, if I'm not at our beach house down in South Carolina or at our headquarters in Colorado. But right now I'm in Washington, D.C. So, you know, 8 o'clock, she's in bed. 9:30, I'm in front of the computer. By 10:15, I'm done, right? And I've programmed my automatic trade bots for the next trading session, which in this case will be Tuesday. And then I'm done, right? So I've got it down to an efficient, you know, process that I do every evening for about 15 to 45 minutes. And I keep the lights on. I've been keeping the lights on for years. Not only do I keep the lights on, but our portfolio is much bigger than even a lot of celebrities out there, right? I've been doing this since 1997. I've been publishing the Trading Trainer newsletter since 2002. Successful ebook on a lot of people's computers that I wrote in 2005, 7 Strategies of Successful Option Traders. Home study course out in 2008 that you'll see on a lot of people's shelves. And just to let you know, I'm not that special, right? I'm a learner. I love going to school. I got a degree in mechanical engineering and a master's in that as well. I've also got a background degree. I worked at Hewlett Packard till 2005, so I've got a lot of commercial business experience. And I also, since 2005 until now, so for the last 20 years, I've really focused on how to be a good teacher. And I'm one of these people who believes in the accelerated learning method. That means helping folks that are not young and plastic like little kids are, that can just sop up all sorts of information, how to get them to learn as fast as possible. And just know, when I started, I lost really big. I mean, first of all, I spent $27,000 on seminars just in that first year in 1997. Now, that was more than I paid for my undergraduate degree at University of Virginia, right? Not only did I spend that much money, and it's a good thing I was working in Silicon Valley and single and sharing a house with a bunch of guys, because I also tried to do everything that I learned at those seminars and invested $85,000 and promptly lost it all. So yeah, if you've been in that place, that's part of the process, right? And I'm thankful, like I said, that I didn't have a wife and kids then, or a mortgage payment, because I guess I got another college education that way through the hard knocks. And I don't recommend you doing this. I recommend you getting some guided discovery, people who have already made the mistakes. But this was back when before they maybe had the first versions of WebEx, but there was no GoToMeeting, there was no YouTube, there was no you had to go to a hotel, right? On Saturday, you spent half the day at the hotel, and then they made you pay some money, and you came back all day Sunday. And the next thing you know, you're on an airplane and you paid a big chunk of money and you went to a 3-day event somewhere. So that's kind of my history of this. And I found out very quickly who was on the up and up and who wasn't. Here's what I learned in all those years. Write this down. To be a successful investor, number one, stop chasing shiny objects, right? Settle on one type of investing and learn it really well. And when you pick that type of investing, take inventory on not only what you think you'd like, but what would work in your lifestyle, right? I've always had many interests. And so options trading with its flexibility really, sung to me. I did not want to be up in the middle of the night trading foreign exchange currencies, but that may be exactly what you want to do, right? I didn't want to be a day trader. I saw enough day traders burn out at the market after just, 18 months. So I didn't want to be involved in that type of investing. I wanted something that just paid money, grew my portfolio, made it possible for me a few years later to quit my job and never have to have a job again, so I could just full-time manage my portfolio. I wanted that type of investing, and I learned it, and I learned it well, and I didn't get distracted by shiny objects along the way. I stayed focused. I also recommend you hire a mentor, somebody you have proof is currently doing what you want to do and knows how to teach. You don't know how much money I've spent on folks that were definitely successful, but man, they could not take the information that they were using and that was in their heads and convey it to me. They just couldn't. They didn't know how to teach. So if you're going to have a mentor, you need to have a mentor that actually can explain stuff, right? It's called guided discovery in the academic world, and it's way easier to learn by guided discovery and way cheaper, whether it's through trial and error, through actual failure, or whether it's paying. So it's way cheaper than learning by trial and error. Number 3, join an investment group, right? You want to be able to, not only be in this group doing this at the same time, but you want to be able to leverage with pride. We learned, this is something I learned at Hewlett Packard, right? When the engineers would know that a new printer came out from, say, Canon or Epson, we would buy it. And then the engineers would take it apart. And then they would find out one thing that they could improve or a new benefit that they can add. and then we would leverage with pride. Now, when you're a child, they call that cheating. But when you're a grown-up, that's how the world works. That's how we increment in evolution, is we leverage on the previous generation stuff. So don't be, all that thing that we're programmed in as a kid not to cheat. That's how it works. We leverage with pride. And you want to join this investment group so you can look over your shoulder. And if you see that Stephen or Judy is doing an investment that's wow, don't just pat them on the back. Do the investment too, right? Jump on board. That's what being in an investment group is about sharing your best ideas, your best practices. And last but not least, surround yourself with like-minded investors, because there's going to be naysayers out there that are going to always, and usually they don't have a penny to their name, but they're going to tell you that you're crazy for wanting to, turn a portfolio into a profit center for yourself. They're going to say that's not possible. And that little voice, every time you have a losing trade, will become very loud and you might give up. But if you're around other people who say, yeah, that happens, keep going, get back on that horse and keep riding, you'll be in a better place. So those are the 4 things that I actually did, and which made it possible for me very shortly after I started full-time trading to have enough in my portfolio to quit my day job and just do this. And I've been doing it almost 20 years straight now. And I've got, more than any one man should have in the form of happiness and really expensive toys. Last but not least, before we get back to option trading, I did start a foundation, which is actually my pride and joy. I take historically underserved inner city kids. I teach them the same thing I teach everybody else. I teach them how to invest using options and equities. I started this actually in 2003. I started this before we started our trading trainer company. I started with 9 kids. There they are when they were teenagers. Some of them one of them is actually a professor at Denver University. All of them, we were limited. First of all, this was 2003. We were getting DSL, right? You might remember that. And we were in public libraries because these folks, and so we had to use their computers, and they would only let us have those computers for 30 minutes a day. So imagine making it successful for these kids to be able to do what they do in 30 minutes a day. We had to be very focused, and in 6 months, they were off to the races. And like I said, one's a college professor at DU. They've all, made really good. I'm in contact with all of them. They're all in their 30s, if not early 40s by now. The other thing is we've done it every year. We actually moved it from, it was started in Aurora, Colorado. It's now in the south side of Chicago. We actually have a partnership with the Chicago Board of Options Exchange in this charity. So it's kind of a cool thing. And this is why I do this. All right, back to the nuts and bolts. So how do we sell option premium? 4 simple transactions. Covered calls. I'm sure a lot of you have heard of covered calls. There's covered puts, which are completely underused. And so I don't think I'm going to have the time to be able to get to covered puts today, but I want you to make a note that you need to go and learn everything you can about covered puts, especially for what I'm forecasting is going to happen in the next, say, 48 months, right? The next 4 years. You need to have covered puts as a tool in your toolbox. And that's flipping the covered call upside down. Also, we can do a version of bull call diagonal debit spreads. Writing covered calls against leaps is what I call them, or supercharging your covered call writing. And we could also supercharge those covered puts. And that's, if you're an academic out there, you would call that a bear put diagonal debit spread. So we do these 4 transactions. And please put an asterisk by covered calls, the covered calls against the leaps and the covered puts against the leaps. These are all cash trades. And they work really well in IRAs, Roth IRAs, SEP plans. If you've got any sort of investment portfolio, those work really well in those, so you can take advantage of tax benefits. This one guy, the covered put, he actually does require a margin account, so keep that as well. But what's nice is if you don't have a margin account and you do want to get yourself into the same sort of trades as a covered put, these are just about synthetically equivalent. So you can get the same bang for your buck by doing the bear put diagonal debit spread if you're not able to, if you only have a cash account. So we got you covered, in other words. Option premium. So I keep saying this word. So when you look at an option price, you know, and during the day it's going up and down, realize it's composed of two components, an in-the-money component and a premium component. The in-the-money component is what it's worth when it expires, right? It's the actual tangible version or tangible amount of the option. And it's called in-the-money value, or academics call it intrinsic value, because it's only worth anything if the option is in the money. If the option is at the money or out of the money, it's zero. The other value is the premium value. You also hear this called extrinsic value, or this is very cringeworthy. People will call it time value. There's a lot more influencing premium than time. So I kind of get like this when people call it the time value. But it's that other component that it's influenced by a whole bunch of stuff, mainly emotions, right? But what you really have to understand is we're focusing on selling that premium component. And that premium component is what at expiration is always zero. People always say that there's two truths in the world, that it's, you know, that you're going to die, death, and that you're going to pay taxes, right? Death and taxes. Well, there's a third one for us option traders, and that is premium goes to zero at expiration. Always. There's no way to get around that. The premium value always goes to zero. Here's an example. Lyft. Now, I pulled these prices at yesterday's close for this presentation. So yesterday, Lyft closed at $15.43. So if we bought some shares of Lyft and then sold the Lyft June 21 $15.50 call, we would get $1 back. So that $1 back, it acts like kind of like an instant dividend. It's not a dividend per se, but it acts like a dividend. It's a payback. It also goes to lower the break-even price. It lowers our, you know, it's like a coupon, a discount on the underlying symbol. And it is like a coupon because on June 21st, that $1's going to go to zero, right? The premium is going to expire at zero. So it acts like a coupon. Now, I wrote down here instant dividend of $100. That's because options are sold in lots of 100. It's called a contract. So 100 option shares are in a contract and options are sold in contracts. So if we did this, we would have to buy 100 shares of Lyft, and then we would sell one contract and we would get $100 instant dividend. So let's run through the scenarios. If Lyft closes above $15.50 on June 21st, first we would have bought the Lyft, so we would be down $15.43. We would get $15.50 back. That would be 7 cents of profit. But don't forget, we also collected $1 up front. So our total profit is $1.07, which is a 7.4% ROI. That's not bad. But now, what if Lyft just goes flat? So first, we buy the shares of Lyft, we sell the premium, we collect that $1, we keep the $1, and we wind up keeping the shares of Lyft as well. And so we've made 6.9% this month, and then we're going to do it again. We're just going to sell premium next month and in the next month. In fact, this is my preferred case. I prefer to sell premium on the same underlying symbol over and over and over again and create that ongoing income. Finally, what happens if lift drops by June 21? Now, I'm going to show you before this presentation is over how we can actually reduce that risk on reward even further, but built in inherent to this strategy, because we bought lift at 15.43 and then got $1 back by selling the option, we've reduced our break-even price. We can actually have lift drop by a profit buffer of $1 per option sold before it's even in the red. In other words, we've got that space now because we basically moved our profit and loss diagram over. We've made our break-even price a lot less. Does that make sense? So let me show you a real-world example. This is a trade that we're currently in. This is on Ford. And I actually started this trade back in January. I bought 900 shares of Ford, right? I spent about just over $10,000 on this investment. And then about 2 weeks later, a little more than 2 weeks later, I sold those call options. I sold them for 23 cents a share. So over here, you can see how my break-even price dropped. So it dropped from $11.55 to $11.32. And then the third Friday rolled around, March 15th, and it expired worthless. So I got to do it again. This time, I sold them for 80 cents. Expired worthless. Then I sold them for 35 cents. Expired worthless. I'm right now, so I wrote down Ford's current price as of last night. Actually, this is the current price from today, $12.14. But I still have this Ford. I'm looking for the opportunity to sell options that are expiring in June. So I'm just waiting for the right moment to sell my June. So let's see. I do one transaction a month. These days where they expire, you don't do anything. On the third Friday of the month, they just expire. And either you get exercised out, or you keep the money and you leave the stock. Either way, it's a win. In this case, I've just been expiring worthless, and I'm left with the stock to do it again, right? After this many months, if I was to sell the stock right now for what it closed at, I'd walk away with 16.8% ROI for just doing 3 transactions, one a month, basically, right? Awesome. All right, so let's do a review. What does investing by selling premium create? What does it sell? What is it? An instant dividend? A discount on a security? A profit buffer? An expiring coupon? And I actually answer all that apply because there could be more than one answer. Yeah, it's all of them. Okay, now I'm going to ask you, I'm going to start getting harder. How can we lower our investment, increase our returns, and even convert a margin trade into a cash trade? What do you guys think? So now I'm asking you to kind of look into the future. Sell out in time options? Replace the security with options trading at parity? Should we give up and buy mutual funds? Or is what I'm talking about just not possible? What do you think? Now, a lot of people might go, well, sell farther out in time options. That's actually not the right answer. If you sell them farther out, you get very much exponentially diminishing returns. When you sell an option for that amount of time between when you sell it and the expiration date, you're under an obligation. And it's not an obligation we kind of want to be under for that long. You want to get paid for that. And if you go farther out in time, you're extending the obligation and you're not getting paid very much more. So actually what we can do to really boost this is we can replace the security with an option trading at parity. What? It sounds like word salad again. Option trading at parity. So the premium that we've been talking about is the most when an option is at the money. But when we go really deep in the money, the option actually has less premium and more of this in the money value, right? And so we go so deep in the money, we target having less than 5% premium. And so we basically get a one-to-one relationship. In other words, if the stock goes up $1, so does this substitute option, right? If we summarize it down, it means that a deep in the money option behaves exactly like the underlying security, dollar for dollar, only at a cheaper price, right? Now, of course, if you're using a substitute option, they have expiration dates. How far out should you go? Well, we go so far out in time that we would have plenty of times to sell premium. So we picked this number of how long far out we should go based on statistics. We looked at, all the folks that have been taking my course since 2005, and we found out that most of them can sell premium about 5 times, 5 months, right? Now, that's a flat bell curve. We've actually seen people who have gone as much as 6, 7, 8, even many transactions that go 2, 3, 4, right? So you want to make sure. The thing is you don't want this option to expire if you've got your money machine going, if you're collecting those incomes, if that makes sense, right? So the magic number is at least 8 months out. And generally we target leaps, right? Leaps are these options that expire every January. So many optionable stocks have already their 2025 and 2026 options available. So right now, if we're looking for substitutes, we're probably looking at the January 2025 options. Leaps already have a lot of liquidity built in. So let's go back to our example on Lyft, 1543, or if I use this Lyft January 2025 $9 call, that thing's only $6.75. And this thing, if you analyze it of how much of it's in the money value and how much is premium, it's right below that 5% threshold, right? So great. Instead of using Lyft the stock, we're going to use this cheaper call, $6.75. We're still going to get the dollar back when we sell the front month or near term option. We're going to get that instant dividend. It's going to act like a expiring coupon. It's going to give us a discount on that $9 call from January 2025. Let's run through the 3 scenarios. So if Lyft closes above 1550, first of all, we paid $6.75. We get $6.50 back. Now, where did that $6.50 number come from? Because this is called a spread, you take the difference between these 2 strike prices. So the 15.50 and the 9, that's why we got $6.50 back. So, oh gosh, this transaction resulted in a 25-cent loss. But don't forget, we collected $1 up front and we only had to invest $6.75. That resulted in a 75-cent total profit or 13% ROI. Remember, we were targeting 6%, and now we're up to 13%. In fact, most of my traders make double-digit returns, and they're doubling their portfolios not every year, but every 5 months. But we aim for the moon, and if we hit the stars, that's great. We're focusing on 6%. But if we get these trades where we make 13% in a month, A-okay, right? What if it's sideways? Pay $6.75, get the dollar back. The dollar is ours. We still have that back month option. We're going to do it again and again and again. And each month got a little bit more, 17.4% ROI. I really like these diagonal debit spreads or covered calls that are supercharged. Now, of course, built into this strategy, we do have a little bit of a safety factor. We would have to have that back month option go all the way to 575 before we are even in the red. It's called a profit buffer. So remember, 6% was our number, doubles our investment every year. Here's the last piece of the puzzle. How can we drastically reduce our risk on return? Should we sell half as much option premium? Sell farther out in time options? We kind of already talked about that. Should we collar the whole investment by marrying protective options? Is what I'm talking about not even possible? What do you think? Let's collar the investment by marrying a protective option. So I'm going to show this one in an actual trade. This is one of my favorites because remember I said how it's very rare for one of these to do over 8 months. And it is. I think since I've been selling premium, I've only gone over 8 months, enough to count on one hand. But this particular trade that I traded from 2020 until 2022 actually went 14 months. So that's really cool. I started August 26th, but this is a perfect demonstration. So I bought these shares of stock for $34.73, right? And then you can see here a few days later, I sold my premium. So I sold my call option, but then I bought a protective put. I bought a put option down at a lower strike price, in this case, the $34 strike price. So I paid $34.73 to get initially, have my position in place. I collected $1.76 and then I spent $4.75. Time passed by and I did the selling of the premium and the buying of the protection on the same day. That's the key. Time went by, the third Friday of September rolled around, and I got to keep the $1.76. It expired worthless. A few days later, I got my signal and I sold back the protection. You only need the protective option in place when you've got the option sold. Once the option is expired, you can then roll your protective option out to the next one. So I sold back the protective option for more than I spent on it. So that's kind of the key to our process. So not only did I make the $1.76, but check this out. I made $1.15 in addition by rolling out the protective option. So usually when you talk to folks about using protective options, the protective option is actually a cost to the economics of their position. But because we're placing the protective option only when we need it, at the time that we sell the premium, it actually becomes a trade that it provides us the protection. It protected us from September 1st all the way to September 24th. But when we didn't need it anymore, we were able to sell it back at a price higher than what we paid for it. And we did it again, right? The next month, we sold premium on October 1st for $1.47, bought protection for $3 and a penny. The option expired 2 weeks later. I kept the stock and I sold back the protection for $3.62. So I made 61 cents profit. So it's kind of like frosting on the cake. Now I've got 2 sources of income every month, not just one, right? And that's what kind of makes our little trading strategy here a little bit unique, because now we're almost doubling the amount that we make every month by doing this. Here's the other cool thing. Look really closely at this cost basis, and that's another name for break-even price. So remember, we're protecting the strategy with $34 strike prices. Look at how fast the break-even price is below $34. Think about that. What does it mean when you're protecting something for more money than it's worth? What does that mean? Here's that graph. This graph is exactly that trade. So we've got our break-even price, and what I wanted to point out is, first of all, the average time that we hold these positions is 5 months. So at the 5-month mark, if you get exercised out, you walk away with 65% ROI. However, if it works against you, if the underlying, because a lot of people say, well, what if the stock goes against you? Well, remember, our main profit center here is time passing by. So even if the stock goes against me, I still walk away with 50%. So you get to a point where you're like, the stock goes for me, 65%. The stock goes against me, 50%. I don't care which way the stock goes, just so long as time passes by. Which brings up a good point. You can see my little line that I just put in there. That's where no matter what happens, you're walking away with profit. So between the first month and the second month was when it became a risk-free trade, right? So the stock could go against me at any time after that, you know, just holding this for a little under a month, and it's not gonna, it's gonna profit either way. Does that make sense? So what do we have when our cost basis, our break-even price is less than our protective bailout price? I kind of gave it away. We have a risk-free investment. So, you know, you hold these positions and then you get to a certain point and then it's just risk-free. And from there on, it just builds money, and it doesn't matter whether the underlying stock goes for you or against you. It's the time that changes the position. So let's review it, and then I'll let you have the rest of your day, rest of your holiday, that should be. First of all, buy or short an underlying security. You would short it if you were doing that covered put, which we didn't talk about today. Or in both of those cases, you could buy a substitute option. Make sure it's trading at parity. Number two, sell a near-term at-the-money option for its premium value. Oop. Let's make sure I'm still sharing here.
You are. We can see your desktop.
Okay, and is it my computer just kind of gave me a little burp here, looking for my, see if I can find my, sorry guys. Oh, you're looking at my desktop. Let's see if I can fix that.
Yep.
Okay. Show me a screen.
I can show you how if you need me to. You got it. Well, no. Here it comes. Maybe. It takes a second. I can almost see it, maybe.
Sorry about that, Jeff. I was right on a roll here.
No, you're fine. I see a big blank screen. Is that what you're trying to share?
No.
Okay.
Let's see what I can do here. Let's see if my PowerPoint presentation can come back. Okay, I'm starting to see something. And I think my computer got excited that I was getting excited with my heart rate. Let's see here. Okay, are we back up yet? No. Ooh. Here.
Okay.
Just bring it. Yeah, this is, for some reason, it's not wanting, let's say from current slide, resume slideshow. Nah. Okay, I'm just gonna, let's see. Oh gosh. That really is a bummer. Let's see what we can do here.
Do you,
I can finish out. Here we go. I'm gonna close this. Review the 3 steps. Want to keep your etiquette note, discard. There we go. I should have, and then if I move this here, and then I think you're seeing
We're seeing
my
a
spreadsheet. Yeah. And then
we can do it. I feel
we
good.
can do it. I felt good. Okay.
I got the 3 steps.
Yay!
Two of the 3 steps.
Okay, sell near term at the money option for its premium value, right? So first we bought or shorted an underlying security, or we bought that substitute option trading at parity. Step 2, you're going to sell the near term at the money option for its premium value. You're going to create that instant dividend. You're going to get that profit buffer, all of the above. And then the key is we're going to collar with a married option that is 3 to 6 months out in expiration to protect our investment, right? And you saw that in my actual trades, I did what's called legging in, right? So I find these boring stocks. We actually have screeners that our users who are part of our program use, but you look for boring stocks that are basically in a sideways channel that you couldn't profit from any other way. And you look at their bottoms, and you don't have to peg the bottoms perfectly, but when you're at a bottom, that's when you would buy your underlying symbol or your substitute option. You would put a stop loss in place, and then when it tops out, that's when you sell your near-term call option. That's when you buy your protective put option, and then you simply rinse and repeat, right? The near-term option expires on the 3rd Friday of every month, or if you sell the weeklies, you could totally do the weeklies, and then you sell back your protective option. And if you're doing the covered puts, which we really didn't cover much today, it's simply the same thing. You find those sideways choppy stocks. Any stock you could do a covered call on, you could do a covered put on. But in this case, we start at the top rather than at the bottom. And you short a stock or you buy your back month put option. And then at the bottom, that's when you sell your premium, you buy your protection, rinse and repeat, right? You'll find that these stocks, there's a bunch of boring stocks. We were looking at AT&T today on the AJ Brown show. That's a good one for you to go take a look at. It's in that sideways channel, perfect for doing this type of strategy on. Last but not least, and I don't think I actually have time. Do I have a minute here, Jeff, to just do a quick pitch, or should I just bag it? I don't mind.
You do it.
Okay. How would you guys like to never miss a pick? Minimize the amount of time you spend away from your loved ones. Have support whenever you need it. Because that's what it really is all about. It's about saving time, creating clarity. It's about getting results, right? So would it be okay if I just take a couple of moments to tell you a little bit about my materials, my training, and my tools, and see if we might have a match? Okay, thanks. This is for people who don't want to pay for a whole bunch of different data subscriptions. They want everything they need in one place, don't want to miss any of those opportunities, want to spend more time doing other things, don't want to do this alone, want step-by-step instructions. And in summary, it's somebody who wants to get consistent and reliable results, right? So in our what you get when you are part of our program, when you get access to our web portal, you get a whole bunch of very thorough video tutorials on how to do this strategy. And then there's a monthly live class that you get access to, and all their replays going all the way back to 2010. You get screeners. We have 4 different screeners for finding these boring sideways channeling stocks. We have planning tools and indicators, and we're having them. We've been in talks with Jeff. I left Jeff hanging last month because I'm a perfectionist, but I now have the indicators ready. So as soon as this multi-speaker event is over, I'm going to be knocking on his door saying, can we get these put into Metastock? We have a whole bunch of little software tools that make this really easy for you to plan out your trades. We have a weekly live workshop where you come, you bring your symbols, you throw them at us, we evaluate them in front of you and everybody else, and we decide, we give comments as to whether you should pursue it or whether you should put it on hold. And we pick one of those and we actually plan it out so that everybody could then spend the next week trading it. And finally, we offer a trade review. That's where you send us any other trade plans you want to do. We'll look over it and we'll give you our 2 cents on whether it's good to pursue or whether you've missed a detail or whether you should maybe abstain. So what is that all worth to you? All the parts of our program? There's also a double your money back guarantee. So I want you to do this as long as my charity kids do this, right? I want you to do it a full 6 months. And if at the end of that 6 months, you're not pulling in a profit, not only am I going to give you the money back that you paid for this program, you do have to show me that you're not like doing Wild West, doing your own thing. You have to be doing what we taught you. But as long as you can show me that you're not making a profit and you're doing what I taught, I'm not only going to give you your money back, I'm going to give you back twice, double your money back. And last but not least, I am going to give you a strategy session with one of my coaches. The coaches are really good at, if you can tell them where you are today and where you want to be at the end of our program, they will tell you how to navigate it so that you can make sure you meet your goals. And they can even tell you whether or not your goals are either under or over, you know, what's actually feasible. They've been around this for a while. They've been trading with me. Each one of my coaches has been trading with me for more than 10 years. So if you add in those two bonuses, what's it all worth for you? Think about it. Because if you go to my website, it's $600, and that's a flat fee. We're not going to charge you. You're not going on any sort of subscription. It's for 6 months of this program. And most people get this program in 2 to 3 weeks. But I want to be able to give you those trades for 6 months that we do every Thursday. And I also want to do trade review for you because I think that you learn best through guided discovery, not just by book learning, right? So I want you to do it with me for 6 months. I don't think it's going to take 6 months for you to learn it. And since you're part of this Metastock program, and since Jeff's was so awesome with my computer glitch, I'm going to, you know, we're going to cut that price down. I'm going to take $100 off. Here's how you take advantage of this deal. You go to optioninvesting.org/Metastock. And I think I actually even have this up on the screen somewhere because I do want to make sure my programmers, here it is. Let's see if, yep, there it is. Let me put this in the screen. So you go to optioninvesting.org/Metastock. And then down here, here's the key. Under promo code, put 100, capital D, capital I, capital S, capital C. So that's 100 disc. And it does have to be all capitals and it's all one word. And in theory, if you click apply, sure enough, it drops the price by $100. My programmers are awesome. So do that. If you're having any problems, by all means, just call us at 970-266-8146 and we'll process your order over the phone. And that is all I have. Thank you, Jeff, for the extra few minutes.
Do you have a second for a question?
Yeah.
All right, cool. Richard wants to know, for someone new to options, what is the best homework / preschool preparation this should be done before trying this out?
Coming to, you know, my program. No, you can do.
Well, it's a double your money back guarantee, but is it good for brand new investors? I guess is a good way to put that. Like
yeah,
if I don't know what an option is, am I in the right place? I guess is
the other thing I can steer you to is I made a whole bunch of videos on my YouTube channel that anybody has access to that goes through the basics about, like, this is what a call option is and this is what happens when it hits its expiration date. They're like little 3, 4, 5 minute videos. So if you go to YouTube and you simply search on our company name, which is Trading Trainer, TRADING TRAINER, and just look through those videos. There was a whole series I made probably about 2 or 3 years ago, and it was like these little 5 minute videos, and people have told me over and over that they just have like bookmarked those videos, and it's just like the basics, like this is what an expiration date is. This is why these options have these expiration dates and these options have these expiration. This is why these options have weeklies. This is why these options only have quarterlies, right? So there's some basic, and you can also just use the Google machine. There's a lot of free information about the basics of options, but, you know, jump into our course sooner than later, because my whole thing is I get you doing, right? Doing in a safe way, such that you don't get, you know, it's that whole guided discovery thing. and learning by doing versus just learning by reading a book or watching a video or listening to an audio. I'm actually going to make you run through the paces right from the get-go. So when you're ready, I'm ready.
Perfect. One more question. I lied there. I just doubled your workload. Sean wants to know, do you have a lifetime membership?
I absolutely do. That's funny you should ask that. And we didn't know why. Like, people kept signing up for these 6-month programs in succession. And finally, you know, being the good business person I am, not, I asked them, I'm like, why do you keep signing up? They're like, AJ, yes, I could probably do this on my own, but every Thursday you give us a frickin' trade. And every time I want to do my own trade, I can mail it in and you'll keep me from doing something stupid. The trade review is worth it. So we did create a lifetime. You'll see on that shopping cart that there is the ability to upgrade to lifetime, and we would love to have you. It's actually quite popular. I think something like 35 or 40% of the folks that come into our 6-month program love that portion of the program of having the ability to, you know, do it with us and have us, you know, handing them the configuration of how to do these trades every Thursday. And so they always upgrade to lifetime. So yes, it's available.
More questions. Sandra wants to know, I got here late. What kind of options style would you say this is?
This is premium selling. So we're selling the time value or theta decay value of an option. So we're predominantly doing covered calls and covered puts. And a lot of times we go for, instead of using the underlying stock as our covering position, our collateral to be able to sell premium, we'll use substitute options. And that's kind of what we went over today.
All right. That's it. Cool.
Thank you.
Some great questions. Here's an interesting thing. We did a little bit, all of the people that are on YouTube today, 42% of them have been here 5 days in a row.
Wow.
That's great. That's a lot of time. So anyway, thank you very much, AJ.
Thank
Good
you.
to have you. Oh, I also meant to say to Sandra, I know you missed the first part of the presentation, youtube.com/Metastock is there right now. You can watch the whole thing. You have a Memorial Day weekend. You can fit 5 days worth of video into that. All right. Very much thanks, AJ. Appreciate it. Have a good weekend.
You too. Thank you.
All right. Cool. Let me go ahead and do this. Yes. Let me go ahead and do this. Make me the presenter. We'll wrap up. I want to say thank you to a whole bunch of people. Thank you to traders.com. I'm going to put their thing right here. Technical Analysis, Stocks and Commodities Magazine. 17,000 articles been publishing in their archives. If you're a member, you get access to all of them. It's searchable. You can look at them, all that kind of stuff. Publishing since 1982. If you're looking at a place where, regardless of like your skill level, if you're looking at technical analysis, and you want a good way to kind of make sure that you kind of learn something new every month, subscribe. www.traders.com. But my thanks to all of the guys over at Stocks and Commodities Magazine for supporting us all along. They do such a great job and appreciate them. So thank you. Also, thanks to CMT, which is CMT Association. I'm going to learn how to type and talk at the same time. As I can become completely silent and stop talking. CMTassociation.org. If you go up there, if you want to get the CMT designation, if you want to work for a bank, if you want to get more assets under management, they can help. CMTassociation.org. 646-652-3300. Great organization. Thank you for the sponsorship. And last but not least, thank you to TechnoTrader. I'm not typing this one in. It's a little bit long. I'm gonna go ahead and just put it in the comments right there and start again. But I do appreciate Martha, the work that she's done with us over the years and the sponsorship. So technotrader.com/courses. Hey, we just got done. Do you want to go watch some mini courses? Go ahead and click on there. They've got a bunch of free ones and they're really good actually. So as we get out of here, I kind of wanted to just reiterate for a minute or two, just the feedback we've got on 19. Anwari came in and said how much she likes 19. Zaheer, I'll try and go quick. Zaheer, I remember one of the comments we had from a customer as well. Metastock 19, wow, what a game changer for you guys. For me, I just spent the weekend. I went to Pennsylvania and then I went to DC, and I sat down with people and just talked about the stuff that was added to 19. And it's changed the way I use Metastock in terms of the fact that it's completely brand new container. There's the tabbed workflows, the new layouts, the new themes, the new layout workflow. I love the fact that you can kind of set up a monitor here and a monitor here and a monitor here. And you can have maybe your broad markets here and your scan results here and something else here. And you can retain that, and you can just basically, have a brand new workflow around kind of the way that you're working. The new theme support is awesome. It's a modern look and feel. There's new drawing tools in there, like head and shoulders, Elliott waves, I did say that already. New charting styles. They put in, range bars and range candles, and some new trading systems like the Ichimoku Master, which is awesome. Like I could spend a whole hour on that. I'm going to do a little bit of a webinar, not right now, but in a couple of weeks, about just Ichimoku and kind of that methodology. But that's a methodology that's just been incorporated into Metastock that allows you to really understand the Ichimoku and trade with it and scan for signals and scan for setups. And it's absolutely part of that. There's also the ETS. Kelly wrote a gap identification system that's really cool. So a huge upgrade. It took me, when I was in Pennsylvania and DC, it actually took me 2 hours to kind of show everything that I liked in there. And so I'm not even going to go in there just because I know once we got in there, we'd spend a lot of time. And but if you haven't looked at the upgrade, the feedback we've got has been great. And I absolutely, I love the tabbed interface. I love kind of all the stuff that was added. And give it a go. If you've been using Metastock for a while, but you haven't upgraded, this is one to look at. So, and thanks for using Metastock too, by the way. For everything else, it has, even Metastock has been rated number 1 31 years in a row. And the reason we keep winning is because we keep changing and innovating and adding things there. So we've talked a lot about scanning, testing ideas, forecasting probable price movements, and real-time commentary. I really am grateful for all of the customers that we've had for so long, the ones that vote for us in this award every year. Thank you. If you haven't tried out Metastock, I'd encourage you to do it. Pricing starts at $69. And if you do that, you'll get 3 months. And so that's $23 a month, and that'll run it till August. Give it a go. There's a reason so many people have been with us for so many years. And I want you to be one of those customers. So metastock.com/conf promo, metastock.com/sales chat, 800-882-3040. As we close out, I want to say thank you again to all of our sponsors, all of the 40 or so speakers that came in and spoke with us this week, and you for being here and for coming and looking at it. And I hope it was worthwhile. The big goal, even when we started doing the single day events, I thought, I know all these people in the industry. It would be so cool to kind of put together an event where people could learn about, analysis of stocks. And so I hope we're meeting that goal. In any case, thanks for being here. If it was helpful, leave a like, a subscribe, and we'll see you again real soon. The subscription, Sandra, thanks for that question. I'll answer it real quick. $69 per month is our DC version. So that for 3 months for the extended trial would be $23 a month. We also have a DC stands for daily charts. The real-time version is $265. That includes like the really good $1 billion news service and everything else. And that would be $265 for 3 months with our extended trial. Thank you for the question. Richard says there are several products. I'd like to get my mind clear from information. Yeah, we kind of give you a fire hose, don't we, Richard? Thanks for your interest. Thank you for the question. Thank you, everybody. Have a great Memorial Day. Thank you to all of our veterans. And, I don't regret for serving the country, whatever that might be for you. Thanks for coming.
Hi, Kelly Clement here from Metastock. Before you go, I have two quick things for you. One, thanks for joining us today. We love having you here at our webinars and viewing our videos. So what I'd like to invite you to do before you go is like and subscribe. Like the video, subscribe to the channel. It helps us a great deal and it helps us bring you more awesome content like today's video. The second thing is we have a great ebook on trading that you can get for free. If you go to metastock.com/YouTube book, you can get a free copy of The Secrets of Successful Traders. It's a great book with lots of content from traders just like yourself who can teach you some of the secrets that they have learned. Thanks for taking a second with me and learning about those two things. Thanks for joining us and keep on trading.